crazy. I don't know what to do. Man. Some fucking bullshit. Hello, hello, hello. Can you guys hear me? Hello, hello, hello. Jesus fucking Christ. Blackstone said we are one today. Yeah, I guess so, bro. Guys, I entered a SPY fucking put at 9:30 when my fucking PC was fucked up and I literally left right here. But yeah, I'm gonna leave the live stream on. I'm sorry, folks. People said I hear you. Yeah, some sort of weird glitch going on. I have no idea, to be honest. I'm sorry. Is it just me? Or is it everybody? It is just, okay, it is everybody. Okay, folks, that's good. I thought it was just me, but it seems like all around YouTube is having a problem, so it's not just me. Alright, folks, it's the entire platform today. Alright, it is literally YouTube itself. I'm sorry, but everything should be as normal as it could be, except we don't know how many people is on and who the fuck is who on. But I did enter a morning and I left. Alright, I literally left. I thought I was fucking. I thought my computer was fucked up. Like, look, 9:31, 9:35. I thought my computer was fucked up, man. I'm not gonna lie. I was like, dude, like, what the shit? Like, alright. Man, I got really bad news over the weekend, so I was kind of feeling dog shit. I'm not gonna lie. That morning open, but when life gives you lemons, you definitely make lemonades instead of crying with lemon in your eyes. So yeah, trying to take it as slow and emotionally, emotionally I'm fucked right now. So yeah, I ain't gonna lie. Wind direction is south. Bears are here. MACD and volume bearish. Time is 9:40 already. I restarted the live stream at least 3 times because I thought it was me, but it's the entire platform. I thought they were gonna pull down a little bit, is why I did at morning open, and they did. I entered in the first fucking candle, 9:30. I didn't even care if the green candle was green. I was trying to fix my computer. 9:35 here and 9:40 here now. So 1/3, 2/3, 3/3, growing since morning open. Let's see where SPX opened. Man, I'm glad it's not just me. Something was wrong. Tremendously wrong. And that's a beautiful fucking thing if I've ever seen one in my life. Showing morning bearish. I scalped $220 with $1,200, I think. I scalped $300, sorry. Someone said down detector YouTube. Thank you. Time is 9:42. See what happens. 9:40 and 9:40 making a morning algo range and going lower. Fuck. Alright, still quick legal disclaimer. Quick legal disclaimer. Please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor. I do not recommend that you buy or sell any securities or investments. This video is for information and educational purposes only. Time is 9:42 on the board. I'm already happy with this cycle. I already made $306, so I'm already happy as shit with this cycle. If they bounce here at 9:40, that's fine. And see if there's a cycle confirmation bounce or not. Macking volume in bear territory. Very, very oversold. Super went down. Time is 9:45. I want to turn on IWM, but my computer bugging out now too, so this is fucking great. That shit was mad fast. 9:30 into 9:45, 9:40. That shit was so fast. Nine 40 bounce into 9:45. Let's see how the cycle creates. 1/3, 2/3, 3/3. They can go lower. I just don't know if they do go lower, how much they go fucking lower. And MACD is very oversold, but it is looking very fucking violent anyway. They want to go lower right now. Trying. Bears are still in control. I want to fucking goddamn motherfucking chart. God, I want to fucking break something. Why the fuck can't fucking life just fucking hand me something fucking nice for once? Like, always hitting with a fucking brick at all fucking times, but I guess I'm the one that fucking, you know. Yeah. Great. Great, great, great. So much. I'm going in core you. Fuck it. Shit is fucking retarded. 51.75. Great. Fuck you. This shit is super dangerous, but the bears are fucking here right now, big time. This shit is literally fucking last year all over again. Some fucking bullshit. You're really on that bullshit. Going down every fucking goddamn day. This is literally fucking last year all over again. Deja vu. Fucking bullshit. Time is 9:50. 1/3, 2/3, 3/3. It looks to me they want to fucking go lower. I don't know how much lower. They're pummeling this fucking bitch down south right now. 9:50. Again. Like every fucking day. They want to go gap fill probably on SPX. Look how fucking violent that is. Like, this is crazy. Pre-market fucking bounce just fucking immediately rip off down south. 9:50. 1/3, 2/3, 3/3 bears are in control since market open. Still bears are in control. Bears are in control. Fully. Still. I hope they do some stupid ass shit today and go gap fill everything. Fuck everything. LOD 9:50. Extending. 3/3 extending. LOD extending. There's no cycle confirmation to fucking bounce whatsoever, and they're just fucking full on fucking bearish. Market is full on fucking bearish right now. Don't give no fucks. I don't know what the fuck this line is, but yeah, perfect line touch. Time is 9:50. 1/3, 2/3, 3/3. Give a rat's ass, man. They're fucking so goddamn bearish. They're gonna fucking destroy this core you put somewhere. I feel it. I don't know where they're going down right now. Just the question is fucking when. That's the question. Alrighty. Let's see. Nvidia gap filled 167. SPX didn't gap fill. QQQ didn't gap fill. Maybe QQQ did gap fill. Nope. Still bearish. Unless they cycle confirm, try to bounce here, possible, but they haven't yet, so until they do it, I don't see it. $9.50, trying to bounce to $9.55, 5 minutes. Shows my live stream says I have 2 people watching that. That's fun. Or 0. Or 1. Thank you so much for hitting the like button, folks. Alright, actually smack the like. That's the only way we know who's here, how many people are here today. So if you can, do me a favor and hit the like. Hope you all had a beautiful weekend. I did not, but it's fun. No, it's not fun, but yeah. Things happened the way I did not, again, want in life. But I don't know. Really got any time to choose to. Holy crap. Core you still bearish? QQQ still bearish? NVIDIA. Let's see if it tests the LOD. It looks like QQQ is bearish from what SPY here, or SPY is following QQQ. Floor test or not. Let's see. This shit was from last week on Friday.
At one point, BFG Wealth Partners. Let's go back now to the markets, Peter. You got a 10-year at 4.42%. To Guy's point, to Tim's point, we're looking at Japan and their move, because our bond market is not the only one that is moving around the world. I want to highlight that. In fact, in some cases, other bond markets are moving a lot more aggressively. How much is that impacting the trade for stocks
That's what the world's
right now?
doing. I expected a relief
I think it's
rally.
definitely part of the equation. And also you have jumping yields in Europe. You have the UK 10-year gilt yield, which closed above 5%. So it is a developed market global bond sell-off.
QQ going lower, right? SPY going lower, fucking Core U going lower, motherfucking NVIDIA going lower. Like, I don't know what the fuck else is not going lower right now. This shit is in bearish fucking control. Bearish fucking control. 9.55. I am not in SPY right now, but I would have printed 1K off of that fucking 0 DT, probably. I would have printed 1K off that 0 DT at 640 an hour at 635, fucking probably. I was at 640 0 DT, like fuck. Whatever. Bearish control. I'm in Core U right now. Core U going crazy. Core U going crazy for me. Alright, God did morning open. I'm up $675 now. Something small. This is fucking bearish as fuck. Holy shit. I said in the alert room this is still bearish, but like holy shit. I said 945, shit's bad for bulls. Bears in control at 949. I said 948, bears are in control still until they cycle off the floor. At least try a little bit. Shit's bad for bulls. And I said this is last year all over again, 948. They're on the goddamn bullshit and going lower. 947, bears are here. SPY QQQ, very dangerous. And this is when I joined my Core U shit. It's still bearish at 9:48. Still bearish. This is fucking 10 a.m. now. Hello, D10. Let's see if they bounce. 9:57, first minute of 10 a.m. 3/3, bottom of the 3/3 cycle. There is no cycle confirmation bouncing trend yet. As went lower and lower and lower and lower and lower all morning. Time is 9:57, 9:56. Still bearish. Alright, we have 3 people that is trying the alert room for $10 a day. If somebody would like to try the alert room for $10 a day, you could send me a private message and you can join the alert room for $10 a day. The only thing you can't do is you can't join in and out, in and out, in and out every single week. Like every single weekday. Like calculate it. It's like more of a trial, you know, 2 or 3 times, and then every time they do it, like double the time they've done it or whatever, if they want to, when they want to. But yeah, it is more of a trial than just oh, find a way to, you know, get a cheaper than whatever the hell people, because the first 5 or first 6 people are in like in some sort of a discount. So for the first 9 or 6 months they're in the discount. So yeah, no one's getting a lower discount than any of them. That would not be fair. That would literally not be humanly fair. So this is just a trial for people that want to try out, people that had an interest, right? That's it. If nobody has an interest, it doesn't matter. But some people had interest, and they had some sort of a, you know, financial obligatory, whatever, you know, whatever. They were scared, but they wanted to try out. But there you go. There's a way. All right, time is 10. This is the 3/3. I'm not chasing lower. Actually, I am, because I'm in Korea. Holy fuck, I'm leaving Korea. Man, I don't know if I should fucking ride this shit or fucking run. I'm scared as hell now. I'm up $375 in core unit, up $750 for the day almost. And the MACD, it just started curling down. That's crazy. Man, I know they're gonna cycle at some point. I just don't know if that cycle is gonna turn into a massive fucking trap at the market. So logically speaking, right now we're in bear territory underneath the went 3/3 bottom of the cycle, very, very oversold. The market is trying to see if it wants to bounce or not. Honestly, when they do weird ass days, there's like fucking there's literally any visible fucking bounces. So we'll see. Cycle happening off of 10. This is not a cycle confirmation yet. This is 10 bouncing to 10, deciding what 10 wants to do to 10.05. It could do anything. It could spike crazy higher. It could hoggle range here with the spike. It could spike and cycle. It could do whatever it wants. Well, what the fuck? We'll see. This is the 3/3 bear cycle. Could get trapped. How fucking violent. How violent. What the actual shit. $10 a.m. trying to find a footing. 9:58. I wouldn't call this a cycle confirmation bounce yet, but I would just say this is 10 a.m. trying to 10 and 10:05 or something.
And it's not just worries about inflation. Even before this, there were growing concerns about debts and deficits. And what we're seeing now is only going to enhance that, whether it's government spending on consumer subsidies to try to temper the impact of the energy crisis that's going on, whether it's going to be a huge ramp up of defense spending. There's, again, a major rethink, an investor desire to take duration risk. And the ripple effects are wide. We know we have a very over-levered global economy, particularly on the sovereign level, but also
so much for being here,
at that corporate
really
level.
Going
into the war, we were worried about private credit. Well, all these portfolio companies that were hoping for lower interest expense because of the cut in the Fed funds rate, well, that has disappeared. So funding costs going up affects everything.
In the first 5 minutes.
So, Peter, when you look at it, I look at it through a different prism. Extend out for me, and I'm finding that I still keep circling back to lower rates. Now, the bond market's doing what the bond market does around the Fed, so it's not reliant on that. But when you fast forward, I do believe we're going to get back to a rate cutting environment for a couple of reasons.
Hey, folks,
A, if we slip into a recession, they're going to cut rates. B, if Powell moves from that seat, they're going to cut rates. And C, if they try to make the mistake, which I think is a mistake, of raising rates into a supply shock of oil, they're going to wind up pushing us into a recession, and that winds up into a rate-cutting cycle. Just comment on that for me.
Well, a couple of things. The Fed's cut 175 basis points, and the 10-year yield is higher than it was in the summer leading into those initial cuts in September 2024. So even if they cut, doesn't mean that the rest of the curve is going to accommodate that. If the 10-year yield doesn't think that the Fed should be cutting because of inflation and we said debts and deficits, well, the Fed may cut the short-term Fed funds rate to call it 3, but the 10-year yield may go to 5. Are we better off? Well, depending on where in the yield curve you're borrowing, will determine that. So I don't just think that Fed rate cuts are going to solve the whole curve. And one key thing here, if the Fed, the pain point in the economy is inflation. Companies right now are limiting their hiring because they're trying to cut costs. They're trying to preserve profit margins. So if the Fed starts to cut in response to that weakening hiring, are companies all of a sudden going to hire again? No, they're focused on cutting costs right now. So if inflation is the main pain point, which I believe, that I think should be their main priority, even if the economy slows down, because I don't know what rate cuts are going to cure.
Well, also, I will remind our audience, hopefully, I'm sure that, Peter, that the Federal Reserve cut rates by 0.5%, kind of a shock 0.5% cut in September or whatever of 2024, when inflation was pretty much exactly the same as it is now, although we know inflation is going to go up because of the price of oil. I just want to throw that out there. What is the bond market seeing that the Federal Reserve is not communicating? Because the Federal Reserve hasn't said we're going to raise rates, right? There's still talk of potential rate cuts. And the bond market is pulling a honey badger in that it doesn't seem to care.
Because I think the bond market is complicating central bank decision-making, because if I'm right, that debts and deficits do matter, well, then just analyzing the longer end of the yield curve is not just a growth and inflation thing. It is, do we want to lend money to these over-levered governments? Yeah, maybe they'll pay me back because they can print the money, but if they're going to do it in degraded currency, well, then why do I want to own long-term bonds? So I think that is a major thing here, and I say that because we're seeing the same bond market reaction in all the many over-levered countries, like Japan, like the UK, like France, and growingly like Germany, whose debt-to-GDP ratio has quickly jumped from about 60% to 80%.
Bearish from 10 now. This is pivot point trading, LOD testing, no cycle confirmation. There's a lot of things that make this shit dangerous at this point. I'm talking about this small cycle from 10 to 10.05. 10 to 10.05 was nice bullish, but like, I mean, how does anyone know that shit would have bounced without any cycle confirmation unless it was super fucking... They just went off the fact that it was oversold, basically. I mean, and then it bounces for 5 minutes, and then 5 minutes rejecting right now. So, you know, it's testing the pivot point right now. It's testing the floor, and it's testing everything, just like I said in the alert room literally 2 minutes ago. I said it is very critical watch. It's critical to watch what happens in the next 5 to 10 minutes into 10, 10, 10, 15 from 10.05. Right when 10.05 hit.
Lock in growth,
this stupid video. What the fuck they're saying?
That because I would submit that right now, oil and yields have way.
Oh yeah, we're not watching this bullshit. What the fuck? I thought it was from CNBC, but no. Man, look what they're saying.
Since the war started, and it's been pretty darn well.
2 days ago, it was another week when it paid to get out of anything in tech that used to be good. Jim Cramer.
The history of oil shocks is littered with bear markets, 20% drawdowns.
And the realists remember when we were at 7,000. The realists remember what they used to say when we were at fucking 7K.
Dow telling me 790
people. Why? I literally fucking said I will never forget, right? When we were fucking max fucking bullish, right? People that actually watch my live stream remember why I said what I said. This was back in December. This was back in January. This was back in literally coming into February. I said, remember what they're saying. I said, remember what they're saying. It's from the fucking top, from the top to the bottom. I literally said, just remember what they're saying. 7,000. When they were at 7K, they were so goddamn bullish. Right? Remember that was it.
It's a tough, rough road. My trust is the highest cash position I can recall.
So fucking
But you know what?
delayed.
It is never enough when you have horrendous action
the
like
candle
this.
happens,
It's almost impossible to predict what will happen in the war with Iran. We've got to stop trying to do that. Right now, the one thing that's been consistently right is to buy oil stocks. Every time. Every time they're down. Every time they're up. It just doesn't matter because crude is headed higher.
I don't know if this is
that
bullish or bearish. Market is deciding
it's
now.
1 for 1. Please don't overthink it. I say that on letter X all the time. Hey, oil's down, stocks will
Even
be down.
Even if they break higher or lower here,
and
I'm waiting for a bigger
cycle
trap. So
tech that used to
maybe
be
this
good.
is a cycle
The
trap.
Stocks. Companies are still good, but not the stocks.
I kind of doubt it.
They're all bad now, including the once loved now.
Did we
despite
gap fill?
NVIDIA,
No.
Just 1 week after it showed you its
I
best
fucking doubt this bounce for some reason. Once we gap fill, I feel like once we gap fill, there's a possibility of us. Right now, I doubt this.
They don't mind the soda stocks, any pharma stock. And I got to tell you, they like the oil drillers. I mean, that's really it. Tech, nothing. Especially NVIDIA, especially the really despised Microsoft. These are 2 of the greatest performers of all time, and they haven't been able to what we call catch a bid in what feels like ages. Until oil and interest rates, don't forget those, stop going higher, it really doesn't matter what those companies say or do. They are not going to get love from institutions and
someone could argue there's a cycle being created here, but
so is there any hope near term? I mean, maybe there is. What we got to do? We got to go to the game plan.
I don't like it anything other
next
than
week to figure this one out. Now, these days, Mondays revolve entirely around the war and ratcheting up in tension.
If it was 10:05, 10 past 10:15, different story.
Which to me means that oil
MACD
goes higher.
is bullish.
And when oil goes higher, we know
RSI is trying to come back
I
up.
keep repeating that because I want people to be
breaking
really
higher.
understanding of what's driving the market down.
I'm just thinking this shit is fake, but we'll see.
I don't think
All
it
right,
can
bulls
change
are here though.
because the Strait of
On
Hormuz is
candles.
still closed, and Iran's missile and drone infrastructure is
On
intact enough
QQQ
to keep it closed, even as we thought that wouldn't be the case by now. Worse, when the president pushed out his bombing deadline, something that would have at one time moved stocks up, it meant nothing. Why? Because oil still went higher, and nothing is more destructive for equities than higher oil prices, demonstrated again and again in history. Tuesday is a day of challenged companies. First, McCormick reports, and this spice stock has become very tough to own. The flavor company, as they call themselves, is said to be in talks to merge with Unilever's food business, which includes Hellmann's Mayo, Hellmann's Mustard, and North Soups.
Scandal.
If they do the deal, the combined company will own some big chunks of multiple supermarket aisles. But the food stocks have been quite simply awful, including McCormick, with the stock that's down 22% for the year. There's only one way out of this jam, though. They've got to merge and cut costs. I think that we'll like a new McCormick if they do merge, which can slot their brands through its own delivery methods and save fortunes. I love the combo. I hope it works out. I hope they announce it. After the close, we have the most controversial stock of the week, Nike. Now, we own this stock for the charitable trust, and we're nervous. And that's exactly what I said in today's monthly CNBC investing call. There's no line of sight for Nike to return to greatness, at least not yet. China has proven to be intractable. The competition has become fevered, and the inventory from the old regime somehow still seems to be dogging the company. It needs to be gotten rid of. If there's still some left, I will be very disappointed. Meanwhile, we need to see some innovation here, some new products that we're stunned by that we can't live without almost instantly. We need some green shoots of return in the U.S. that are at least strong enough to make us feel like we're dealing with the Nike of old, back when the stock was a winner. Now it's a loser, and it's hurting my charitable trust Enough said.
Don't miss a second of Mad Money. Follow @Jim.
Trash take.
The market. Our next guest says equities remain on downgrade watch for him, and the key will be whether this war heads into April. Joining me now is 314 Research co-founder Warren Pies. Warren, good to see April's coming fast. Obviously, it's next Wednesday, I guess. A week ago, you thought maybe you'd give it a week to see if we get de-escalation, the taco trade. So explain the thinking now.
Yeah, thank you for having me. I think we've, just like everybody, maybe we all learned the wrong lesson from last year, which is to wait and expect a capitulation and look for that off ramp in one of these kind of self-induced market sell-offs. But I think it's been prudent to wait and to let technicals guide you in this. But we are getting to the point where the rubber meets the road. I think I do think there are signs that this sell-off is starting to move into the second phase, which is where investors are seeing that this is not a short-lived conflict. You're seeing the back end of the crude curve start to reflect a longer time elevated crude oil prices, and you're seeing some cross-asset moves. You're seeing gold rally. You're seeing the 2-year yields drop in the face of oil rallying and the stock market falling today. That's the first, I think, warning sign that the market's going to start looking through the inflationary first early impacts of this into the recessionary consequences.
Yeah, that for sure. I saw you highlight that today, which was significant, that there was a bit of a switch from how this thing has traded for the past few weeks. At the same time, you said, let the technicals guide you. I mean, we keep waiting for this kind of, people say whether we need some kind of a real flush, some kind of comprehensive liquidation. You see a lot of stocks trading at their lows. It feels like it sometimes does when you have some of that climactic action, but maybe not everything lined up.
Yeah, I don't think it's there yet, to be honest. I wish I could say that. But what we're knowing the oil market like I do, like we're looking down the barrel at a very, very serious situation. Now, if this lasts, like Rubio's comments to the G7 today was, hey, 2 to 4 more weeks. If this lasts 4 weeks, the S&P 500 is going into a bear market. Oil will be at $150 a barrel. There will be shortages. I'm not trying to be an alarmist, but this is just, you need to be sober-minded about what you're facing down. And I don't see sentiment reflecting that yet. We look at managed money, or we look at inverse ETF volume. It's a lake where you'd expect to be for a run-of-the-mill pullback and things like that. But I don't see the real fear and panic. In the levels that we're talking about, we moved into this consolidation range where we lost momentum back in February. That's when we initially downgraded stocks. And we basically said, okay, we want to see this range resolve. And that range was 65.38 on the downside, 6,900 on the upside. We broke through 65.38. We're waiting to get some good closes, a weekly close below that. So I think you should expect the momentum to accelerate to the downside from here based on technicals and sentiment to me.
Yeah, I mean, you've made the point when it comes to oil.
They're about to go Gadfield down south.
It's sort of a cumulative effect to some degree. We have this daily shortfall. We're kind of burning through reserves and releases, and there's some I guess rationing going on. But how does that snowball if we go 2 to 4 weeks?
Yeah, so to me, and we talked about this a week ago. So every day, I would say, just as a good rough estimate, and this includes the SPR release, this includes the bypass pipeline to the Red Sea from the East-West pipeline. There's still a 10 million barrel a day hole in the market every day, and that's with all the best assumptions I can possibly make. If we roll that forward 1 month, that's 300 million barrels that we lost. We can already see it's gone on the water. The water excess inventories are gone. Now we're cutting into onshore excess inventories. As we roll into April, you're going to draw below what we would consider excess. And then you move into, even if we get a resolution to the war and we open the Strait of Hormuz back up, you still have time to get production and lost refinery capacity back online. This tells me that best case scenario is we're going to lose 600 million barrels of inventory out of global inventories. That's about an 8 billion barrel storage globally. That's a huge number. That's more than we've ever seen in any calendar year on record. So that's in 2 months. We're changing the shape of the oil market in real time in a short 2-month window. Never seen anything like it before.
Taxes was chasing updates.
What a trash cycle. What a shithole cycle. Go gap fill, come on. I know you want to go gap fill. Come on. Just need one fucking candle. I'm in green now. If I tap one green and one red candle, I'm fucking leaving this shit. This is pivot point trading. Pivot point testing. Come on. Be a nice girl. Please. Time is 10:20. It's wild. No movement. I want to leave because this contract went to like fucking cents at the morning. It's at $2 now. It went to 97 cents. And it's at $2.90. It went to $2.91. And $2, and now it's at 2.3. So data gaming like crazy off market open today. Alright, bears are trying. I low-key wanted to shorten the video too, but I have no balls. No balls. Bears are in control. Bearish. Still bearish. Kind of distracted right now. If I could have left in that fucking spike, I'm DMing somebody back. That shit could be a fucking trap right here at 10:20. Candle came in so fast. By the time I'm looking at the WhatsApp group and looking back at the screen, the candle fucking already mega green from bread. The fuck? Hard as shit. Making it look hard as shit. They don't want nobody to fucking target that shit down there, looks like. To me. They don't want nobody to fucking target that shit right now in the video looking bullish. This is almost data burning right now here. 0 DT data burn. If there was another red candle here, I would have taken that shit. I really would have left, but like, when this candle was here, I was DMing somebody back my fucking Cash App and Zelly picture because they were asking for it because he wants to join for 4 weeks. But yeah, it's like in 15 seconds it reverted from being red and then now neutral, and then in 20 seconds it was massive green and then reverted back. It's in the middle. With bulls and bears trapped, bulls in the morning cycle on the way down, bears at the bottom. All these bulls are getting cooked off right now on the way down today. Right, all these bulls, and there's bears that are getting cooked off with this shit too. Bears are getting cooked off with this shit right here. And bulls are getting cooked off all the way from the top today morning. Now they got everybody trapped just like how they wanted almost. I'm in small size, so I don't really care about it. Just like how they want it. I'm trying to get out fast. I want to get out fast.
And getting nowhere.
Your S&P and NASDAQ are now on track for their fifth straight.
So let's stay with the market. Our next guest says equities remain on downgrade watch for him, and the key will be whether this war heads into April. Joining me now is 314 Research co-founder Warren Pies. Warren, good to see you. April's coming fast. Obviously, it's next Wednesday, I guess. A week ago, you thought maybe you'd give it a week to see if we get de-escalation, the taco trade. So explain the thinking now.
Yeah, thank you for having me. I think we've, just like everybody, maybe we all learned the wrong lesson from last year, which is to wait and expect a capitulation and look for that off ramp in one of these kind of self-induced market sell-offs. But I think it's been prudent to wait and to let technicals guide you in this. But we are getting to the point where the rubber meets the road. I think I do think there are signs that this sell-off is starting to move into the second phase, which is where investors are seeing that this is not a short-lived conflict. You're seeing the back end of the crude curve start to reflect a longer time elevated crude oil prices, and you're seeing some cross-asset moves. You're seeing gold rally. You're seeing the 2-year yields drop in the face of oil rallying and the stock market falling today. That's the first, I think, warning sign that the market's going to start looking through the inflationary first early impacts of this into the recessionary consequences.
Yeah, that for sure. I saw you highlight that today, which was significant, that it was a bit of a switch from how this thing has traded for the past few weeks. At the same time, you said, let the technicals guide you. I mean,
10,
we
20,
keep waiting
10,
for
20.
this kind of, people say whether we need
right
some
now.
kind of a real flush,
They're
some kind of comprehensive liquidation.
Right,
you see a lot of stocks trading at their lows. It feels like it sometimes does when you have some of that climactic action, but maybe not everything lined up.
Yeah, I don't think it's there yet, to be honest. I wish I could say that, but what we're knowing the oil market like I do, like we're looking down the barrel at a very, very serious situation. Now, if this lasts, like Rubio's comments to the G7 today was, hey, 2 to 4 more weeks. If this lasts 4 weeks, the S&P 500 is going into a bear market. Oil will be at $150 a barrel. There will be shortages. I'm not trying to be an alarmist, but this is just, you need to be sober-minded about what you're facing down. And I don't see sentiment reflecting that yet. We look at managed money, or we look at inverse ETF volume. It's a lake where you'd expect to be for a run-of-the-mill pullback and things like that. But I don't see the real fear and panic. In the levels that we're talking about, we moved into this consolidation range where we lost momentum back in February. That's when we initially downgraded stocks. And we basically said, okay, we want to see this range resolve. And that range was 65.38 on the downside, 6,900 on the upside. We broke through 65.38. We're waiting to get some good closes, a weekly close below that. So I think you should expect the momentum to accelerate to the downside from here based on technicals and sentiment to me.
Yeah, I mean, you've made the point when it comes to oil, it's sort of a cumulative effect to some degree. We have this daily shortfall. We're kind of burning through reserves and releases, and there's some I guess rationing going on. But how does that snowball if we go 2 to 4 weeks?
Yeah, so to me, and we talked about this a week ago. So every day, I would say, just as a good rough estimate, and this includes the SPR release, this includes the bypass pipeline to the Red Sea from the East-West pipeline. There's still a 10 million barrel a day hole in the market every day, and that's with all the best assumptions I can possibly make. If we roll that forward 1 month, that's 300 million barrels that we lost. We can already see it's gone on the water. The water excess inventories are gone. Now we're cutting into onshore excess inventories. As we roll into April, you're going to draw below what we would consider excess. And then you move into, even if we get a resolution to the war and we open the Strait of Hormuz back up, you still have time to get production and lost refinery capacity back online. This tells me that best case scenario is we're going to lose 600 million barrels of inventory out of global inventories. That's about an 8 billion barrel storage globally. That's a huge number. That's more than we've ever seen in any calendar year on record. So that's in 2 months. We're changing the shape of the oil market in real time in a short 2-month window. Never seen anything like it before.
That's the sound of an American oil company hard at work.
Oh, my mic was muted, sorry. Yeah, what a fucking horrendous cycle. I was talking for 2 minutes, thank you. My mic is still muted. I'm in 636 right now and they're fucking with me. My SPY puts are going down and my core U puts are going up. I'm getting fucked around with. I don't even know what to do here because my positions are fucking going 2 different ways right now. It does look like they're trying to fucking destroy everything here. Bears 636. I am fucking fuck. I joined here and I couldn't fucking leave. Like they had to burn the shit out of this somehow. Man, 0DT's already down 15%, 12%. Like, bro, and my core U's up 3%, so they're kind of negating each other. Like, I don't know what the fuck. SPY is literally down $145 for me, and my core U is literally up $145. Like, what the fuck is this shit? They're neutralized. What the fuck is this shit? Bear trap? Why did QQQ do this? To run this shit deep up? Like, fuck. To grab liquidity to go down? I don't think anybody knows at this point. Like, this shit is crazy. Like, in the video, what the fuck is going on? Man, I wanted to short the video, but what the shit? I'd open I wanted to, I would not be able to catch that. I would be probably down there. I had an idea here, but like, nah, I didn't do it. Fuck, please go down, go down, go down, go down, go down, go down. The video, go down, the video, go down. Come on. All right, Core Line is coming live today at 1 p.m., folks. That's the major news catalyst of the day. 1 p.m. Core Line coming live. The SPY is not really looking the best right now. I don't know. Should I? If I just fucking leave. The moment I leave, I feel like they will go gap fill below. I'm only in for so little right now, so fuck it. I'm gonna ride this shit and see what happens for at least an hour, I guess, for 30 minutes. We're at a very critical point with every fucking thing trapped here, so either this thing loses 25, 30, 50%, or this thing's gonna win 50%. I will just fucking hold it on fucking see it. Man, I don't know. I'm scared. Corey wants to go lower. SPX deciding. Very, very critical. All these bulls fucking trapped. All these bears trapped. Gap below. Very, very critical. I don't want to say that when I don't want to say I think it's gonna bull trap, but like I wanted the bull trap. I don't fucking know. I don't know. Now I'm down 7% on SPY, minus $90. I'm up $175 on core unit, looking good. Uncle said Powell is talking. All right, thanks. We'll see that.
You don't need to spend thousands up front to fix your heating and cooling. Right now, you can get a brand new high.
As editor-in-chief of the Georgetown Law Journal, one of the world's most influential and prestigious legal publications.
Appreciate you, bro.
He then started a career of extraordinary impact and breadth. He distinguished himself first in the private sector, working in investment banking and private equity, notably as a partner at the Carlyle Group, while repeatedly answering the call for public service. He served with distinction as Assistant Secretary and then Undersecretary of the Treasury under President George H.W. Bush. In 2012, he returned to public service as a member of the Federal Reserve Board of Governors. His nomination to serve as chair in 2018 by President Donald Trump, and then his renomination to serve as chair by President Joe Biden in 2021 stand as testaments to his bipartisanship. Chair Powell approaches economic stewardship with a philosophy grounded in empirical evidence, institutional humility, collaboration, and public service.
Oh my God, I'm going up crazy
like
right now.
the greatest
oh my God,
Fed chairs.
Hold up. I'm going up crazy right now on something. Hold up, I'm going crazy right now. All right. I'm up $880 now for the day. I don't know what the fuck just happened. Core you won't go. Core you up $480 for me right now. What the fuck? What the fuck? I'm scared as shit. Yo, what the fuck is this shit on SPY though? The fuck is this shit on SPY? Bruh. Come on. I have no patience for this. Alright, my view is slowly going up. on YouTube. I have no patience for this shit. 10:35. I'm in a cycle here.
Let me start by saying, David, thank you so much for having me, and thank you to all of you for being here today. It's great to be here. I've been looking forward to this. Yeah, so I took macro and micro my freshman year, and it wasn't as interesting to me at that age than some other things, so I wound up majoring in politics, actually specializing in Africa. It's fair to say that my freshman major was acoustic guitar. My parents gave me a Martin D35 for high school graduation. They must have regretted that because that's what I was really working on mostly. But I did finally figure out what I wanted to do. And when I graduated from college, I really had no plan, but I did have one thought, and that is to have a career in the private sector, but also to do public service intermittently. And I was thinking about people like George Shultz, who was famous at many economic jobs, and others who had done those sorts of things. And I grew up in Washington, D.C. My parents were not, my dad had fought in World War II, and he had been a U.S. attorney, but they weren't people who were terribly plugged in politically. I was very interested, though, in those years in public policy and in trying to create a life that was partly private sector and partly public sector, and amazingly enough, that's kind of what happened.
Great. So now, jumping right to the present, we talk about the Fed as a unitary entity, but of course, the Fed is led by the Federal Open Market Committee. There are 12 voting members. You, despite being chair, only have one vote. And in normal times, there's a lot of consensus. Everyone's in agreement. Lately, there's been some disagreement. There's been votes to keep interest rates the same, but some members of the FOMC have decided instead to vote to decrease interest rates. How does the disagreement on the FOMC make your job harder as you describe the path of economic policy going forward?
You know, I don't think of it as making my job harder. I think it's, and I've found throughout my career that when you have a really difficult problem, it helps to hear from all sides. And in a way, for example, when I was a private equity investor and I was looking at supporting a transaction that I wanted to do, I really wanted to hear from the smartest people. Tell me why it's a bad deal. Tell me now before we do it. And I just think you don't really know how much you believe in something until you've had somebody really try to take it apart. So I welcome that at the FOMC and at the Fed generally. And I think it helps us make better decisions. The Fed has had a tradition of governors not dissenting, but that's really not typical of other major central banks where there's more dissenting, or I mean, they're different, depends on the central bank. And to me, what matters is the dissent thoughtful? Is it helpful? Does it help? Does it express a point of view? Can you stand behind it and say, yeah, that's very thoughtful? And that kind of a thing is not bad, and it doesn't hurt with communications. You know, I think a situation like the present situation, where you know there's sort of downside risk to the labor market, which suggests keep rates low, but there's upside risk to inflation, which suggests maybe don't keep rates low. You've got tension between the two objectives, and I think to try to expect unanimity at a time like that, where it's really quite historically challenging, it would almost be misleading to be really confident in which way that should go. In fact, it's been said that confidence is what you feel before you really understand the problem.
That's what I said in the alert room.
Okay. Let's turn to the Fed's balance sheet.
Oink, oink.
In 2008, 2009, that great financial crisis, there was a massive expansion in the Fed's balance sheet. And then again in 2020, under your leadership, there was a second vast expansion in the Fed's balance sheet to address these two
now it's showing 16 people watching now.
The balance sheet has since come down a bit, but it still sits at over $6 trillion. So I'd like to hear your views on how efficacious this vast bond buying program has been, both in the 2008 and then again in the 2020 episode. And also hear your reaction to the critics who say that the Fed has become too big a player in the bond market. The Fed has become too influential. There's been a muddying of, as according to the critics, of monetary policy and fiscal policy.
One more candle, I'm leaving.
Do they have a point, or are they wrong?
One candle, I'm leaving.
So I think the place to start with that is to the problem that people were struggling with from about 2008 to 2022, let's say, in central banking everywhere in the world is once you've cut interest rates to zero, do you have anything else you can do? Let's say you cut interest rates to zero and the economy is still clearly not flourishing and it wants more support. So do you just say, well, we're done, we're out of ideas here? And there were two ideas that were followed in the global financial crisis, one of which.
You didn't start your business to do taxes. Good thing we did. Block Advisors by H&R Block serves over 2 million businesses like yours every year. Find a local tax pro who understands the ins and outs of your industry. File with Block Advisors today.
I'm in core you still.
So we did those two things rather than do nothing.
That shit was scary as fuck, I'm not gonna lie.
Both efforts were successful at restoring market function and at restoring financial stability. At the beginning of the global financial crisis and the pandemic, we had massive problems of market function. They were solved. I think the question, getting to your question,
scary as shit,
of the macroeconomic effects is a much less certain question. I don't think there is an accepted answer, but I would just say there's an oceanic quantity of research on this, and overall it tends to find that
I sent that on the wrong
long-term assets does lower interest rates and does provide some support for economic activity. And I guess I'd be in the camp of thinking that there's something in that, but it's hard to quantify it. And I think, different people have different views on how much those effects could be. The other side of it is, QE is thought by the critics to risk all kinds of other things. So, for example, you could buy too much of the Treasury market and it would stop functioning well. We have not seen that here. At the very beginning, there was the thought that it would be inflationary. We have not seen that, or that it would threaten financial stability or even create inequality. So we haven't really seen the downside risks. At the same time, the last thing I'll say is, I remember before I took over as chair thinking, I'll almost certainly never have to do quantitative easing.
It's so fucking sad.
What's that
Bearish
expression?
Bearish control. They're about to go lower. They're about to go gap fill.
God laughs.
I'm so
something like that.
Man,
so
I'm such a pussy.
It's just, the
why did I wait through that fucking cycle?
We needed to do
for
a
literally,
lot of asset purchases in a big hurry,
why did I wait through this fucking
So
cycle?
far,
just for that.
No Treasury Department has ever said, stop doing that, you're supporting the economy too much. Maybe that'll happen someday, but it hasn't happened yet.
So let's talk about the dynamics of inflation since the spike in 2022. Inflation has been coming down since then, but it still hasn't reached its 2% target.
Oh my God.
Some have argued that that last mile is extremely difficult, and to obtain that, we will need a recession. Others have argued that you've gotten us very close and you'll get us the rest of the way. Are you concerned about the time duration of the path from the high inflation of 2022 back to target? It's taken time. We're not there yet. Is that a destination we'll reach, or are you concerned that the last mile will prove very difficult?
So we will reach, the FOMC is and will continue to be committed to getting inflation back to 2% on a sustained basis. That's the place to start.
Bearish control.
So I feel like we had pretty much gotten there
at
the end of 2024 against the predictions of almost the entire economics profession when we raised rates a lot and very quickly in 2022. 100% essentially of economists were forecasting a recession. We didn't have one. Actually, we had 23 and 24 were both very strong years as the supply side healed and as our higher rates had some effect on inflation.
There's LOD divergence too.
By 2024, you had the economy growing at 2.5%. You had inflation in the 2 plus a few tenths on a 12-month basis by the end of the year. And
now I'm happy.
The employment
I
market,
left somewhere
still
here.
had the labor market at essentially full employment. So I would call that a soft landing.
LOD
we
tested.
had it there. Then since then, we've had to face a much smaller source of inflation, which is the tariff inflation is visible, and we think it's really just a one-time price increase. That's been our thinking since the beginning. Right now, we think it's adding somewhere between a half and a full percentage point to inflation. But that's a much smaller thing than we saw during the pandemic inflation. And and of course now we're facing events in the Middle East which will certainly affect gas prices, and we feel like our policy is in a good place for us to wait and see how that turns out.
Let me turn to the current crisis in the Middle East and the effect on energy prices. Indeed, this classroom is familiar with that question from the last problem set, where we asked, how would you advise the Fed to respond to the rising price of oil? And we teach that when there's a demand shock, it's a pretty natural set of recommendations that emerge for the Fed. But when there's a supply shock, like this energy price shock, there's trade-offs that the Fed has to juggle. How do you make those trade-offs in general, and how do you make those trade-offs in this particular instance? And can you help everyone with their piece of it?
Well, maybe they should tell me. Sure. So you start with what you said. Our tools work on demand. Higher rates will tend to moderate demand. Lower rates will tend to stimulate demand. And when you have a supply shock, our tool doesn't have meaningful shorter-term effects on supply. So when you have a supply shock, the first question is, do you respond to it? And the classic question has been around energy.
What the fuck is going on right now?
Not really speaking about the current situation, although I'll get to that, I guess. But energy shocks have tended to come and go pretty quickly.
What are these candles?
Monetary policy works with long and variable lags, famously.
Coming in guts.
And so by the time the effects of a tightening in monetary policy
the only
take
time
effect,
I seen this shit was literally last year.
The oil price shock is probably long gone, and you're weighing
at some
on
point,
the economy.
there's like 5 or 10 minutes to the point where there's like fucking crazy volatility, crazy volume
any kind
out
of a
of nowhere.
supply shock. But a critical, essential aspect of that is
Look
you
at they're burning everyone that's holding on the gap right now, even though they went
you can have a series of these supply shocks, and that can lead the public generally, businesses, price setters, households, lead them to start expecting higher inflation over time. Why wouldn't they? At the end of a certain number of years, the inflation is now just higher, and that can happen. So you monitor that very, very carefully. Also, in the current situation, you have to be mindful of the whole broader context.
David said Elon rockets.
We're still, we've been
Elon rocket up or Elon rocket down? Like which way?
We've never actually, gotten right and stayed at 2%. So it's been a while, and we're very mindful of that fact. Inflation expectations do appear to be well anchored beyond the short term, but nonetheless, it's something as we will eventually maybe face the question of what to do here. We're not really facing it yet because we don't know what the economic effects will be, but we'll certainly be mindful of that broader context when we make that decision.
Great. So you've been a powerful and vigorous defender of the independence of the Fed with respect to monetary policy. You've also been collaborative with administrations with respect to financial regulation. So under President Biden,
David said, what goes up must come down eventually. Yeah, but easily you could argue what goes down must come up too, right? But
to reduce regulation. So on the one hand, we've got an independent Fed with respect to monetary policy, and on the other hand, we have a collaborative Fed with respect to financial regulation.
But yeah,
I don't think there's a tension there, but can you explain to us those two different approaches and how you understand them?
Yes, so start with
damn, are you right?
Policy. I think there's pretty broad consensus in both political parties on both sides of Capitol Hill, and our oversight, by the way, is Congress, not the administration. But pretty broad agreement that on monetary policy, the Fed needs to be fully politically independent, not reactive to political things at all. We just need to do our job and stick to our knitting. Regulation is a little bit different, especially since Dodd-Frank, where the Dodd-Frank Act created something called the Vice Chair for Supervision, who has a specific statutory assignment, which is to oversee all of supervision and also set the agenda for regulation. So the Vice Chair for Supervision, if she wants
this
to
is still, all right,
propose
technically
a change
speaking,
in,
right, I might sound
the
biased right now
Basel III
saying this
Accords as
shit,
implemented in the United
technically
States,
speaking,
she has to bring that to the Board
bearish
of Governors,
momentum.
which is the 7 governors,
like,
and
the bulls
vote
can't
for it.
get
But she has
momentum
full control over,
right now.
over supervision. So as chair,
even though we're chopping at the floor,
the whole idea,
even though we haven't broken the floor
is to
on
be
SPY,
non-political and never working for or against any political party or individual, or never even considering things like that. So I think the way the law works is the chair
you broke the floor literally 5 minutes ago. You know what I mean?
Allow the vice chair for supervision to carry out the role that Congress has assigned to that person by statute. And that's what that is. So you'll see, and the two parties really have a big difference on regulation now. So I like to think that the chair should always be someone who is working without regard to political and should be therefore a person who can be reappointed by either side.
That doesn't mean it's going to reject right now. Clearly, it's been burning the shit out of zero DT. Like, I literally left that fucking break even.
And I think it's a good test of the Fed's nonpartisanship that your appeal is really bipartisan. I think that's a critical thing. So if I were to try to impose my personal views on regulation, that really wouldn't work. So I think there's I don't want to say deference, but any chair needs to let the vice chair for supervision take the lead on those issues.
Clearer
I'm
picture
another voter.
At the same time. The bigger picture says that we've been going down since morning.
Dodd-Frank and the reforms to the financial system.
There has not been a bounce anywhere. There has not been a recovery anywhere. The only thing we did was pop to the VWAP, literally.
Afterwards to tighten the bolts and create a safer financial system, less prone to these kinds of cataclysmic events.
This shit is just bull
But today we look out of the world and we see lots of threats, both inside the formal banking system that you regulate and in the non-bank financial system,
like, what the fuck is this?
Lightly or not at all
What
regulated.
Is this? Rocket and rocket drop down?
I wanted to have your thoughts on whether we're in a position of relative safety after all the Dodd-Frank and other reforms following the 2008 financial crisis, or whether the new threats actually have brought us to another period of concern. And just to illustrate with a couple examples, inside the banking system, there's commercial real estate that has fallen in value. That affects both the banking system and non-financial non-banking financial
at some point here too.
We have the private credit market and a very active debate about its health. We have concerns about cybersecurity in the age of AI. Do you worry that another financial crisis looms out there?
Of course,
there's always a possibility.
That's why I drew the UFO.
Is it something that's a issue of high alert, or do you feel that we're putting all the pieces in the right places?
After the global financial crisis,
that's why I drew the UFO.
We actually started a new division called the Division of Financial Stability.
I'm not drawing the rocket because I'm thinking this shit's going to run up. Like, I'm thinking it's going to make a fucking
the watchers of all financial stability issues all the time. So we're not, the old system was a crisis arrives, we get the team together and we battle the crisis. This is much more of an ongoing monitoring thing with a framework that can be checked. So I would say after the global financial crisis, which happened when you all were extremely young, between Dodd-Frank and the Basel agreements, we pretty dramatically raised the amount of capital and liquidity that the largest firms and other banks have. And I think that's been a good thing. I think they're also much sort of more transparent and more aware of their risks and that kind of thing. So I think we've significantly hardened the system against the kinds of things that happened in the global financial crisis, where you had a lot of credit losses really around mortgages. And so that kind of a situation, we've got well-capitalized large banks. But that's just one part of the financial system. The capital markets, the U.S. has by far the largest capital markets sector relative to the banking sector. The other countries still have a much bigger banking sector relative to their capital markets. And that's going to be less well regulated, and that's a good thing. You want it to be the place where where biotech companies can do IPOs, and they may or may not succeed, but they can get capital out of that market. And you're taking a lot of risk, but great things happen because people put money into biotech.
I haven't filled my fucking core use shit, so I guess this
hardening of that, but we shouldn't be trying to regulate risk out of existence. So I think, and we did fix some of the things that broke in the global financial crisis and the pandemic. We did address. The real thing, though, is the economy. The financial sector is just always evolving rapidly, and I think the vigilance is what you need. You just need to always know that there's another thing coming, and I think in particular we've had all kinds of financial crises, but we've never really had a successful cyber attack on a large financial utility, let's say, or financial institution. And that would be quite a different thing. You know, if people are going to lose money in a certain part of the economy, we have a hugely resilient financial system now. It's more, let me say this, it's more about resilience than it is about avoiding crises. One of our former people used to say that we're in the levee building business, not the hurricane prevention business, right? So there are going to be hurricanes, and they're going to come, and you just have to assume you won't know what direction or what the nature of it will be. So you want highly resilient financial system, and we do have that, but again, nobody who's in that business will ever give you a green light. They'll always say, "Here, these are the risks, and we got to monitor." You mentioned private credit. Private credit is something as you guys are probably following.
But I guess
it's a relatively small part of a very large asset pool. We're watching it super carefully, as everyone is. We're talking to the people in the industry and investors and everything. I think we understand.
That's why I want my WhatsApp group, and I don't care that my
looking for
WhatsApp group
things that might lead to greater contagion or greater losses or connections to the banking
I only
system.
want people that are fucking
And you know, we're going to do that. You're not going to hear people say, "Oh, there's no problem here," because that's a jinx.
People do not understand.
But nonetheless, it's something that we're following very
sacrifice that it actually takes in life to
What
actually
is
try
one of your
and get
biggest
and
regrets
determine
in your
what it is
time
that
as
people,
Fed chair?
you know,
and on the other
think
hand,
that they deserve in life.
what is something
want
that you're
in
very
life.
proud of?
It actually fucking.
You know, on regrets, I don't allow myself the luxury of that. I think it's really important that in my job, I'm focused on the windshield and not the rear view mirror. And so I don't. I'm tempted to say regrets. I've had a few. But then again, not so many, or whatever the line is from that Frank Sinatra song. So I just think I'll have plenty of time for that after I'm out of this role. But
that's crazy.
Honestly, you just have to keep looking at the next
Literally
thing.
the craziest of all craziest
berating yourself for the mistakes that you've made. You're going to make mistakes, and you're going to learn from them. Take it from an expert. I've made plenty. But I don't focus on regrets and things like that. You know, overall, in terms of what I'm proud of, I'm more than happy to talk about that.
Let's go for it.
Yeah, let's go deep there. Basically, I'll just say it's an incredible honor to do public service, as many of you will find out at some point in your life. I always wanted to do some of it. I saw these people around Washington who were well-known public servants like George Schultz.
Someone said, "Yup, we going to 650."
It's different, you know.
Really,
in the private
that
sector,
easy?
I love my private sector, my years in the private sector.
Bro.
But there really is a feeling of what you're doing is ideally helping all Americans.
Just like that.
It's a great honor to serve the public, and particularly in a job like this. So that is the main thing I'm proud of.
That's a crazy
10-minute
push, though. Holy crap!
And 8.5 of them as chair. I'll always be proud of that.
And I'm very grateful to you for your service to our country.
Thank you.
That's a crazy push.
So if you were willing to share publicly some
Jerome
advice that you would give to the next Fed chair, we'd love to hear it.
So one thing you will learn when your children are grown up and they have their own children is never volunteer advice. Only give advice when asked. So, and I would only give advice if asked, and I would do it privately. But I'll just say in general a couple things about the Fed. It is very, very important to stick to your knitting and to stick to the things that were actually assigned. And there's always a temptation to want to move into other areas. And I think we have very powerful tools.
This volume actually come from?
Kayak told me hotel prices just dropped.
10.55.
Now we can finally stop scrolling for travel hacks.
When an administration looks and says it would be good to use that tool for something else. What if we were just to call that like that's part of the mandate? Happens all the time, and we just have to be in a situation where we're not trying to work against any politician or any administration, but we have to be careful to stick to what we're doing.
Wow.
The other thing is, I'll just note that the Fed's not a perfect institution. Don't look for perfection. What we do is very challenging and highly uncertain. But it's a great American institution, and I'm very proud to work with the people I work with. They're extraordinary right across the board, an incredible group of people. And I'll just close by saying
Elon came.
It's very hard to build great democratic institutions and much easier to bring them down.
Oh, fuck
So,
it, he's on that
though
UFO
you were
shit, bro.
uncomfortable giving unsolicited advice to your successor, I know that the students in this room would love to hear your advice. They've asked me for my advice and asked me what you would advise them. So they're entering into an uncertain time, an economy where new job formation is lower for many reasons.
Shit is crazy.
In particular, jobs
Mike, where are you
that
going
were
up?
plentiful a couple of years ago for students
all my
coming out of
profits.
college are no longer so.
Reverting as well.
And AI sits as this remarkable technological transformation that is both promising and existentially threatening. So if you're advising
how the fuck does NVIDIA
the 600 students that sit here today, what would you suggest they think about as they embark on both academic and then ultimately professional careers?
Let me start by saying that I'm well aware, and my colleagues too are well aware of the current situation for students coming out. It's a time of very low job creation. And also you have AI going on. You've got the effects on job creation of significant changes in immigration policy, which have brought down both demand and supply of workers. The unemployment rate is really low, but that doesn't help you if you're coming into that kind of market. So it's a time when the business, I mean, there's a business cycle, right? And you're coming out in the business cycle at a time when getting hired is a little bit challenging. There's also probably something more longer term, more secular that's happening and around technology and AI. So yes, it is a challenging time, but I'll say a couple things. One just is that the US economy compared to other major open economies and big market-based economies around the world is just incredibly dynamic and productive. Since
Jerome!
US,
Jerome me!
Compared to other, again, large, mature economies, our productivity has grown at like twice the speed, for example, in Europe, and higher productivity is the way, compensation and earnings can grow over time. So it's an incredibly flexible and dynamic economy. It reinvents itself. Technology, it always comes from the United States. So just be optimistic about the medium and longer term. I'm very optimistic about the medium and longer term. The other thing is, my observation is that these large language models make people much more productive. I feel like it's making me more productive because I can learn things really quickly. And I talk to my son and others who are out there in the world, and I think if you use it well, it's making you more productive. So I think you're in a situation where you need to invest the time to really master the use of these new technologies, and that should stand you in good stead. But there's no denying it's a challenging time to enter the labor market, but it may take some patience and all that. But in the longer term, this economy is going to give you great opportunities, and just be a little optimistic about that.
So when you talk about the longer term, are you talking about 10 years, 20 years, 40 years? Are you worried that they'll be wind at our back as we use these tools over the next decade, but at some horizon, let's say 40 years, there'll be substitution rather than complementarity?
It's so hard to say.
Oh shit, getting recycled like crazy.
I mean, a lot of people, you talk to business people, are talking about the sort of the next few years being big years for AI to come in, but they're mostly talking about existing, middle market, middle management, back office jobs, and things like that.
Down there, and now
I don't think it shouldn't have those kinds of effects.
I'm not doing shit on SPY
people who can use AI well.
I'm in core
I don't know, but so certainly the next few years look like whatever the effects are.
Oh my God,
that's crazy. Because major U.S. companies, and we talk to a lot of those people who run those companies, and they're all looking at what they can do, and the truth is they can take out a lot of jobs that can be automated by a very smart large language model. They just can, and they will, because their competitors are doing it, and they can't afford to have higher costs than their competitors. What's that going to mean for you?
It's crazy.
It may not mean that much. It depends on what you're going to wind up doing. You may stay in school a little bit, and you may do something that is
too much.
It's going to create new jobs too over time. And again, it makes people more productive. I did talk to a CEO in tech world who said the marginal benefit of a new employee in this world is actually very high.
That fucking recycle
that's not what you hear all the time. So
Recycle everything.
I don't know.
Here.
I mean,
everything go up. Everything down here
if you
go
look
up.
back
Like,
through history, to generalize,
God cycles.
This has been going on for a couple hundred years. This, since the loom was invented, right, and to put all the people who were doing weaving
of course they reject them, right?
out of business. But so.
Of course,
in all cases, it has wound up raising productivity and raising living standards as long as the society keeps producing people
bullish or
who can
bearish.
have the skills and aptitudes to benefit from that technology.
SPY, this is mega cycle
that will be the case here.
Somehow with the yellow,
but you're right. There can be a period during which it's challenging, and this may be one of those. But nonetheless, I would just say it's out there, and it's out there to be done. And I would be medium and longer term very optimistic about this economy compared to any other economy.
Terrific. Thank you so much. We're now going to open it up to your questions. So I think I've got Jason and David in the well, and I've got
literally the same shit on
microphones
literally.
in the balcony.
So,
why don't we start
I guess I
with
shit somehow.
Jason? Do you have a question?
I think I have a question.
Or you? Fantastic. We're going to let Jason ask the first question.
So, Chair Powell, when you're making decisions at the Fed, I'm curious, how much are you relying on very specific economic models? The Fed has its own big fancy model, FERBIS. How much are you relying on information you get from talking to people out in the real world, to businesses, your own intuition and experience? What do you bring together as a way of thinking about these decisions with a role of economics, but everything else that feeds into it?
So it's really all of the above. We have to start with the perimeter. The reserve banks are in touch. They're in all 50 states, right? 12 reserve banks. And they bring summaries of these extensive conversations they have with the public sector, the private sector, universities, healthcare, everything in their district. And we see all of that in the beige book and in the meetings. We get all of that. We also look at several models. It's never just the FERBIS model. It's many, many different models, and we look at different alternative simulations. We look at all of that, and then we look at where our policy
the volume's
stance
all
is,
the way up
we
there.
look out the window and we say,
literally at the halfway
does it look
point.
like our policy stance is affecting the economy in a way that moves us closer to our goal variables, or keeps us at our goal variables? You do all of that. We also talk to each other. I talk to the other 18 participants on the FOMC a couple of times each cycle. And people have different thoughts and ways of thinking about things. Talk to the senior staff, they've been doing this longer than any of us. So all of those things go into it. I wouldn't say...
I think they're going to bust the floor at some point today into tomorrow, 4 p.m. I think they're going to bust the floor.
When I was in the private equity business,
I don't know
really
when.
good models
I clearly
of
don't know. I think they're going to bust the floor.
My big boss said, we want to have the best model in the industry. But if you think that model is going to make the decision for you,
there could be a cycle that happens very volatile.
So the models are just illustrative. We cannot model the U.S. economy with the kind of precision that we'll never be able to. It's like modeling the weather. You can't predict it 2 months away.
This mega cycle is just sus as shit. I don't even want to fucking say this is bullshit bearish with that mega cycle.
So, David, why don't you pick the first hand, and then Jason, you'll get the second hand.
This is crazy. New money
bulls are
somehow doing great, but someone else. That shit getting trapped out.
My name is Fabio. I'm a first year studying economics and government. I'm really interested in kind of the decision making in the Fed. How do you work with situations where the decision might be very tight and sometimes there's expectations of the interest rates increasing, or it might be very tight in those very tight decisions. How do you end up making the decision?
So remember, I'm one of 12 voters. So an FOMC cycle is about 7 weeks between meetings. We have 8 of them a year. So, and I would say sort of 3 weeks before the meeting, by then, I have to have a pretty good sense of what I think we need to do. And staff will already have been working on, if we're doing anything in particular, we always have a special topic. So a lot of work is going on. So I almost need to make a decision about the probable thing we're going to do. And then I have to talk to everybody a couple of times because I got to get people to vote for this. And a lot of it is finding out where the sentiment of the committee is. I've been working with these people for many years, so most of the time I kind of know how they'll approach a problem. And that's how it works. So it's a lot of talking and listening and
alrighty, folks. Make sure we hit the like button. 2 hours. We have 4-line live stream coming. We have 84
listening
people
to people.
here today. The
Listening is,
thing
you know,
coming
if
back
you
alive.
listen to people and you hear them and you can make their argument, and they understand that you're actually listening to them and not just communicating at them. For most of the people, most of the time, that's going to be enough. And by the way, that's true on Capitol Hill.
Time is 11.
That's true. It was true when I was a governor. If I felt, I always felt like Ben Bernanke or Janet were listening to me, and if they could engage with the points I was making, then I felt like I could support what they wanted me to support. So it's a lot of that, though. I mean, it's a lot of committee management. That's the big part of it is to have active dialogues going with all of the FOMC participants, and by the way, also with all the senior staff who've been doing this a very long time, and they bring. In many cases, they bring history going back many years. For example, in the public communications that we make, somebody who's been doing that for 30 years will tell you don't use that word, even though that word might make sense in another context.
Okay. Over here.
Good morning, Mr. Powell. I wanted to ask you a bit more about private credit markets and particularly rising defaults among non-bank lenders like Blue Owl Capital. So I wanted to ask, to what extent could stress in these private credit markets spill over into the traditional banking system?
So that's the question we ask ourselves quite a bit. And as I mentioned, we're watching very carefully. Of course, what you can read in public, we're also getting the backstory from the people who run these organizations and from all the banks. The supervisors are well aware of what the bank's exposure is and what is not. And I'm reluctant to say anything that suggests that we're dismissive of the risk, but we're looking for connections to the banking system and things that might, result in contagion. We don't see those right now. What we see is, a correction going on, and certainly there'll be people losing money and things like that, but it doesn't seem to have the makings of a broader systemic event. But again, we never give a clean bill of health. We just keep watching for that. We don't see those characteristics though right now.
Let's go to the balcony, and remember to share your name when you begin your question. Great.
Hi, my name is Cody. Thank you so much for being here, Mr. Powell. My question is about whether international relations has impact on your decision making. I know you mentioned that the Fed's job is to do exactly what's best objectively for the American economy, but I'm wondering, if you're competing with, let's say China or other powerful countries, whether or not you would kind of cut interest rates or do something like that to stimulate the economy to kind of get ahead of other countries.
But I did not do it.
No, it doesn't.
I mean,
we're
fucking big on
always
for
asking
you.
the
It's
question, as
basically
you
the same
suggest,
fucking shit.
What we serve the American public always in all of our decisions, and what is best for them. How do we achieve maximum employment and price stability on a sustainable basis? That's what we're always asking. We do, meet with, in Basel, the central banks all meet without the finance ministries. And we can talk privately about what's going on in global financial markets. It is a global economy. We all know each other, and frankly, many of us have regular communications going on just privately,
the actual rocket.
Or, by telephone, by email, and text, and things like that. But we're never looking to get on the turf of the national security people or the the State Department or things like that. We're not looking at things that way. We're looking at our goals. That would be, I think, a classic case of mission creep if we were to say, hey, let's deviate from just chasing these two goals and let's do something for a third purpose. That would almost by definition make us less effective at the things we're supposed to be doing, so we try to stick to that.
Okay, great. David, you're next.
Good morning. My name is Jenny, and thank you so much for coming. We're all very honored that you took the time to come.
Wild. I don't know what's going on right now. My shit's going wild.
About soft landings and about how it's definitely much more ideal than hard landings, but in the U.S. history, we've had far more hard landings than soft landings. And we were just talking about how it's really important that you are monitoring expected inflation. And I think a lot of that just comes down to the trust between the public and the central bank. And the central bank is known to be much more technocratic, but I think especially with like the rise of populism and previous events, there seems to be a lot of impact of like political tensions between, or cooperation between the Fed chair position and the administration. And I wanted to ask you, how do you still keep the public's trust this way?
Oh my God. Bears are in control. Bears are in control. Bears are in control.
Well, ultimately, if we deliver,
Bears are in control. They want to go gap fill.
Maximum employment and price stability, or at least are seen to be doing everything we possibly can. They're gonna go gap fill on this shit.
Look at QQQ right now. They're gonna go gap fill on this shit. I can fucking feel it.
The public keeps its faith in us, and if you look, we look at things like longer-term inflation expectations, and you'll see that they've remained pretty well anchored right through all of this. So if you really think inflation is going to be higher, you can make some money betting against that. But people don't do that.
Shit is
the people who are putting their money to work in the financial markets. Not to give too much credit to that, but that's it. If we stick to our knitting and we do our jobs, we stay out of politics, stay out of the hot political issues of the day, and just do your job and keep your head down. I think I see this through my dealings with elected people. If they get the sense that you're not there to deliver talking points, you're there to listen to them, and you're really somebody who's committed to doing your job and sticking just to that job, and that's all you want, and you're not going to get into politics, that's what we need to do. And I think generally, I think we are accepted in that spirit in Washington, and I think generally around the country as well.
Jason. Remember to tell us your name.
Thank you, Chair Powell, for being here. My name is Jake. As you know, your term ends in May, and a potential successor, Kevin Warsh, has indicated the desire to cut rates if he fills the role of chair. What is your take on the effect that a cut would have on the flexibility of the Fed to remain well positioned to maintain both sides of its dual mandate, particularly given the fact that inflation has remained elevated above the Fed's 2% target for several years now, and progress is further halted by the oil shock and tariffs especially?
Jake, that's...
Hand off your taxes to an expert in your neighborhood. Now, your TurboTax expert can file for you, so you don't have to miss a moment. You've got better things to do than taxes. Have a local TurboTax expert.
I hate Streamlabs sometimes. I gotta adjust this fucking Windows chart.
Hi, my name is Eamon Candido. So earlier you said that you don't know how much you believe in something until someone tries to take it apart. So my question was, what's the thing you currently believe about the economy that you're least confident in?
Interesting question.
Oh, God. Oh, God. Why do you laugh like a gremlin?
I'm not going to give you a particular individual thing at the moment, but I will say that I would say this, and of course this is self-serving to an extent, but having worked in the private economy for most of my career, I don't have any predisposition to believe that models can really capture it, because so much of it is animal spirits, as Keynes called it, and also again, I go back to the weather. Will we ever be able to predict the weather with any precision 3 months ahead, other than the seasons? So the economy, no one has been able to really successfully predict the economy. So I think the temptation is always to place too much sort of stock in in models or in one particular outlook. The other thing is, which is a big takeaway, is about fat tails, right? So famously there's a normal distribution and the tails are what they are. It's not a normal distribution. The tails are fat, and however fat you think they are, they're fatter than that. The possibility for the economy at any given time is so much broader. For example, the pandemic inflation. We'd spent 15 years with the inflation below target.
That shit.
And that was at a time of QE and lots of fiscal stimulus and that kind of thing.
Talking about the fucking economy right now.
And people, pretty much the profession had, the big problem the whole profession was trying to solve was, how do we get inflation up to 2%? That was really the problem. And then along comes the pandemic inflation, and bang, suddenly you have a 40-year high inflation. So it's hard to keep your mind open to just how broad the possibilities are.
Yeah, just when I thought, you know, reaching the finish line in life.
Hi, my name is Robert. Thank you so much for being here.
Right
I'm a
back to
first-year
fucking-
studying econ, math, and philosophy.
Nope.
So many economists that I've listened to, at least retroactively, say that what we really needed during the COVID pandemic was around $3 trillion, and the government
I guess I haven't
printed
gotten like a
something
heart, I
along
haven't
$6
gotten
trillion
like
more
heart
than that.
heart drop news,
And
like
so
a
inflation
crazy life-changing
rose,
news in a long time.
but that money is still out there. So if
been a
rates
while.
come down, you know, obviously you took initiative and you raised them very significantly. If rates get lowered again to, let's say, 2% or so, do you think that the price spikes have already played out, or do you think that all that extra money being out there will, you know, on top of instability geopolitically, do you think that's going to push us back into an inflationary spiral?
Welcome to
and then
the
also I was
community,
wondering, for your next press conference, are you going to start it with good afternoon?
Now we have 10 people
or
in
hello,
the alert
everyone?
room. Welcome to the community.
Let's talk about that later. Sorry, the first question was
the expansion of the money supply.
Yeah, no, so I think monetary quantities are a very challenging way to try to think about inflation and the economy. There was a time when the profession thought that, you know, monetary quantities and inflation were tightly linked, and of course, in an abstract way or in a simple model, it makes sense. If you don't increase the amount of goods and you double the amount of money, then the price has to go up. But there has been relatively little correlation. And you know, my story of the pandemic inflation would not be about monetary quantities mainly. I'm not saying it might not have played a role. It was more, you did have a lot of stimulus, particularly in the United States. At the same time, we were looking at the possibility of another Great Depression. We didn't know whether there would ever be a vaccine. We didn't know what this was going to be. How many millions of people was the disease going to kill? So literally, for the first time probably ever, we're looking at little alternative simulations that are a Great Depression lasting many years. So we did a lot of stimulus.
I have lawnmowers
and
going
then
off like
when the
fucking
global
crazy
economy
next to me.
reopened after shutting down, you had this burst of demand, red hot demand, and constrained supply still. So automobiles is a great example.
This is not bearish
Everybody
or
wanted a
bullish.
car
This is
because they
everything
didn't want to
fucking
take
trapped.
public transportation, and they'd all
Low
moved
key
to
until I have
suburbs
no
and out of the
idea
city.
when.
So
Caroline,
I
maybe?
need a car, and yet you couldn't make cars because you couldn't get the semiconductors. So you're looking at a vertical supply curve. So a little bit of demand drove prices up a lot. Then, of course, we took the view, my colleagues and I did, that a vertical supply curve works both ways. If a little bit of demand could bring that price right down, and also it won't be vertical forever. It'll start. You'll get supply side healing. You got those two things. It was always both supply and demand for me, and you got inflation coming down very sharply in 23 and 24. We got close to the end of your question. We got pretty close to 2% by the end of 24. Now we were just dealing with the effect of tariffs, which have largely fallen here in the U.S. and not abroad. They've been less than expected because the other side, others didn't retaliate, and also because what was implemented was less than what had been announced. Nonetheless, that was the piece. We were at about 3% inflation, and somewhere between 0.5 and 0.8 of that is from tariffs. So we've been pretty close to 2% all this time. Now we have another supply shock coming. You know, it's one of those times where you get a series of supply shocks. First the pandemic, then the much smaller one from tariffs, and then we're getting now an energy shock. No one knows how big it will be. It's way too early to know. As I mentioned, we do think our policy's in a good place for us to wait and see.
Okay. So one last question.
Hi, Mr. Powell. I'm Lola, and I was wondering at what point does the size of the US's debt break the point of natural systems repayment, and if that's something you're worried about now, or something you think our generation should look out for?
I don't think we know what that number is, sort of ratio of debt to GDP, where it would be a problem. There are, of course, Japan being a great example, there are countries that have much higher levels of sovereign debt to their GDP than we do. What's clear is that our debt is growing much faster. The federal government debt is growing substantially faster than our economy, and that ratio is going up. And in the long run, that's kind of the definition of unsustainable. The level of the debt is
very
not unsustainable.
non-directional.
The path is not sustainable.
I've seen this before. When Caroline comes on, 25, 30 minutes before Caroline, maybe a little bit of movement here and there coming too.
Primary balance and begin to have the economy actually growing more quickly than the economy. It will not end well if we don't do something fairly soon. This is not the Fed's job, of course, and I pretty much limit myself to those high-level
The LOD divergence clear is trapping
which
like
essentially
crazy
everyone
today too.
ignores.
Every single down is literally every single down is a LOD hope trap.
We're going to thank Chair Powell, but let me just describe the sequence of events that now
as
follows.
well as trapping the fuck
first
out of
we'll
bears.
thank
It's
Chair
trapping
Powell.
everything.
Then
it's literally
anyone
trapping
who
everything.
wants to is welcome to join us on the stage, and we'll
sometimes
take
here
a
and there,
group photo
scalpers paradise. But look
with
at
Chair
my
Powell.
fucking portfolio. Look at how it's going up and down, up and down, up and down
Because
today.
of a tight
Like,
schedule,
this shit is crazy.
there can't be any selfies,
look at this.
because if there's one
How
selfie,
is
there's
this
600
normal?
selfies. Right. So you'll need to make do with one photograph of the entire class with our esteemed guest. But before we do that, please join me in warmly thanking Chair Powell.
What's normal is Caroline. Caroline needs to come on at 1, around 12:30, 12. Are we clapping? I don't know how we're clapping. We're clapping.
Okay. Now, come up on stage.
I guess he was at Harvard. Harvard. They went straight to core line. They literally went straight to core line, so you already know that one's coming soon. They gave us a sneak peek. It's range bound possibly here, but yeah, no direction bullshit, so maybe they are gonna reject here and then chop here and then waste time somehow for 20 minutes. That's what I'm thinking, honestly. I don't think it's going to go run up. I don't think it's going to reject that big. I just think it's somewhere around here, wherever we are. I'll go ranges.
Kevin Green, who joins me now, just to get across a lot of these headlines we've been tracking. KG, very good morning to you. Hope you had a great weekend. Obviously, I mentioned the Houthis now getting involved. A lot of attention on Bab el-Mandeb Strait. I don't know how much of that you can sort of highlight as far as what this is going to mean for oil flows. Obviously, with respect to prices, I know that we've seen those elevated coming into this fresh week. Even though stocks are high, it looks like some dip buyers potentially stepping in here. But then you've also had Trump's comments this morning as well. What should we be paying attention to today, KG?
Well, obviously, the Middle East is still going to be the big story for today and probably for the week. Now, you're talking about the Bab el-Mandeb. That is a risk that's starting to creep back into the market because the Houthis are now, once again, kind of going back and trying to attack Israel. And if they do try to escalate that, the Bab el-Mandeb controls around 10 to 12% of total global supply of energy products. So that could also then create maybe some upward pressure when it comes to prices for energy, especially if you look at oil as well as the byproducts here. So oil still staying a little bit more elevated. Obviously, a lot of the rhetoric coming from President Trump and from both sides for that matter. I think the market right now wants to really see action. We are starting to see a couple of bulk carriers or tankers, if you will, going through the strait. That is something that's somewhat of a positive sign. I believe we actually had 6 of them go through the strait over the last 24 hours or so. So that I think is also kind of giving us maybe a little bit of a boost here to the upside for some of the parts of the equity market. Now, we are still kind of pulling back here overall. I think the big thing that we need to focus on this week outside of the oil market, Sam, is going to be semiconductors. And if they're able to hold themselves up, we do have NVIDIA below that 170 level. That's going to be critical. And I see the stocks is off around 2% today as well. That's the next leg to move to the downside here, really drag the S&P 500 down as well as the NASDAQ 100. That's the one I'm keeping my eye out on for this week.
Yeah, obviously we've seen some damage in the Mag 7. We've been talking about Meta this morning. It actually was at its second most oversold level since it IPO'd. A nice little bounce today, but as you say, with the chip space, I mean, the technicals don't look great when you look at NVIDIA, as you say, falling through 170. You just wonder what the big next critical support level is there. And then as you look across all those chip names today, I mean, across memory, you've got Broadcom low. AMD is the only little bright spot here, but for the most part, yeah, as you say, SMH and SOX down in the vicinity of over 1.5% or so. Let's just switch gears to some of the headlines we've been tracking out over the weekend. It now looks like a big focus is aluminum. I'm seeing stocks in that space rallying today. Alcoa, Centric, Asia, Rio Tinto off the back of some damage to facilities. Just walk us through what you know there.
Yeah, so we are seeing two major Gulf producers or smelting smelting.
I'm in core you heavy because I think they're going to break the LOD
being hit over the weekend, and so there is a concern that we will see a little bit more of an issue when it comes to supply chain, especially when you're looking at aluminum. Now, the Middle East, or if you're looking at the Gulf region itself, they're not a major producer of aluminum, but the Strait itself, if you're looking at the Strait of Hormuz, obviously creates a lot of traffic or allows a lot of traffic for some of these metals to go through here. So you're looking at around a 10% disruption, which is why you're seeing Alcoa move to the upside today. You can also call out some of those other names here. And also, if you're kind of looking at the LME 3-month aluminum contract, that moved up about 5% or so overnight. So it's the highest level that we've seen that contract trading since COVID-19, if you will. So the supply shocks continue to move throughout not only the materials and also the fertilizing space, but now you're looking at some of the industrial metals. And it's just going to cause
I just don't want to be biased right now in
effect,
this fucking critical time. Like I know for a fact,
when it comes to prices,
the only way I can make it out of this shit alive
projects that are being built out
if I
for
don't be
artificial
biased in
intelligence.
any
So
fucking way.
keep your eye out on this space. If you're kind of looking at Alcoa, it was actually flagging in more of a bearish formation, but this news is really kind of keeping it within this range that we've seen over the last couple of weeks, where $50, $54 or so has been the support, and into the upside around $67 has been the resistance. So we're still in this kind of megaphone pattern. Maybe it's going to consolidate and break higher here, but it seems like day by day a new commodity is starting to gain a little bit more spotlight here because of this conflict.
Yeah, you took the words out of my mouth. It just feels like every day we see an expansion of, obviously the commodities that are being impacted here, and then the subsequent reaction. Shortened trading week, KG, obviously a different dynamic playing out with stocks higher, oil's higher, but we've got a VIX above 30 right now. A bit of data to get through this week as well. Obviously, we're going to be hearing from Powell.
What a joke. Like, what is this shit? Look at this knife.
We've got ISM manufacturing too. I'm going to be keeping an eye on the input prices paid very closely, I think, with the wider market. Just walk us through some of your expectations as far as volatility is concerned.
So usually on a shortened week, we actually do see heightened volatility, and we have very low liquidity levels within the market, which is also keeping volatility elevated. One thing to just note, the put side skew is starting to get maybe a little bit stretched. I think that we probably technically still have a little bit more room to the downside for the S&P 500, maybe another 200 points or so until it gets really interesting, and maybe some buyers really try to step in here. But I go back and look at, if you're looking at the sectors of the industry, I think semiconductors, if it's going to break, then the market's going to break.
How the fuck
lower,
is the VIX at 30? Like, this shit literally feels like the VIX is taking a fucking walk.
And then on Friday, we will have some jobs data as well. We won't be trading, but futures will be open, and I think that probably will be a major mover for the Sunday night open, as well as the Monday
Techno said, how can anyone be bullish with high VIX?
The jobs report, I think, is the biggest risk that we have as far as the data point this week.
Okay, good to watch. And obviously, we'll be getting, as you say, that on a holiday day here in the US. Appreciate it, KG.
People get bearish.
Thanks so much for getting us across on the price action today.
People get bullish because if it's oversold, and it's gonna get way more oversold. Based on candles and MACD. Hell nah.
Kevin Hanks is back. Woo! All right, a little cheer, some confetti. Kevin Hanks live at the CBOE for our pre-bell playbook. We're glad you're back. You may not be glad. I'm sure you're very glad you're back. Welcome back, Kevin Hanks. Good to see you.
We have went down for like 20 days.
Good morning, Nicole.
Only the time we did this in history was
coming back
last
to
year.
markets that have frankly sold off the entire month of March is tricky. Now,
market has sold off the entire month of March. You just heard him. You just fucking heard him. Just been selling the entire fucking month of March. Still the month of March.
Kevin Hanks is back. Woo! All right, a little cheer, some confetti. Kevin Hanks live at the CBOE for our pre-bell playbook. We're glad you're back. You may not be glad. I'm sure you're very glad you're back. Welcome back, Kevin Hanks. Good to see you.
Good morning, Nicole. You know, coming back to markets that have frankly sold off the entire month of March is tricky. Now, they're all higher this morning. Why? Well, I think it's two things. Number one, you're right. President Trump made some comments over the weekend that things are going well in terms of negotiations, and there were no real escalations over the weekend. I think Friday was risky. Remember, President Trump had a deadline for Friday. He extended that to April 6th. So we'll watch how that plays out over the next week or so. But I think the trigger for the market is going to be the uncertainty around crude oil. Remember, the world, by supply a definition, is flush with crude oil, but there's massive amounts of uncertainty, and that makes commodities trade and go higher. So I think crude oil is really putting some uncertainty. It puts uncertainty into the overall market, anything that moves something from point A to point B, but it also hurts possible inflation discussions going forward. Energy is such a big part of headline CPI. So I think there's still a lot of uncertainty. Uncertainty starting to dissipate a little bit this morning, and that's good for markets, even though, Nicole, crude is still higher today. Only by 1%, not as much as before. Some of the volatility coming out, but we still have a big week, not of earnings, but geopolitics and a lot of economic data, Nicole.
Yeah, and look, Brent crude, $115. It's been quite a time, Kevin. You took some time off. And welcome back to sort of what has been. And what's interesting is we are, you know, is the market oversold? And that's what people want to know. There are concerns still about the AI bubble and things like that. But for the most part, people are having, they have year-end targets that are 7,600, 7,700. I mean, we saw that from, you know, Barclays and other of the big banks with these year-end targets that are higher than where we are now. I mean, as far as the Iran war goes, anything else you'd like to add last minute?
I just think that the U.S. economy is actually still doing quite well, despite there's still questions about software, right? You've got names like Microsoft and others still hard down off their highs, but the rest of the market seems to be doing quite well. Remember, Jerome Powell is going to speak today. Couple other things going out there. John Williams is going to speak in the afternoon. Jerome Powell speaking at Harvard economics class. So there is some headlines, but I still think, until further notice, geopolitics, escalating or de-escalating, is going to drive the markets as we move, as we end the first quarter. Tomorrow's the last trading day of the quarter, so that'll move. That takes us into the second quarter, and then, of course, we come earnings. So I'm watching this, just getting back into it a little bit, but geopolitics right now dominating the markets, Nicole.
Yeah, and look, I think there's a lot of talk about what's been going on with jobs. We have our jobs report on Friday. I know the market is closed on Friday, but we will be getting that print. This says bond yields have been at 8-month highs. We saw it above 4.4, right? We were getting closer to 4.5. And also the other thing is that now there are bets that the Fed may, in fact, hike rates by the end of the year. What happened to 2-3 job cuts? Remember, we were talking about 6-7 rate cuts. And so now there's talk, even if inflation really gets hot and heavy, does the Fed actually raise rates by the end of the year? And the jobs report will be key this Friday.
Well, you know, someone once told me that the markets always get it right. You know, they always have all the information. And my counterpoint to that is the markets are always wrong, almost always adjusting and figuring out. I think, just my personal opinion, Nicole, there is zero chance that the Fed's going to raise rates. Zero. But the markets trade like, and they add risk to the overall market because of the fear of inflation, because of crude oil. But if you think that Kevin Warsh, that's talking about significantly lower interest rates, is going to raise interest rates in this environment. I saw the same article and the same headline you did. That is absurd, Nicole.
Yeah, and Kevin Warsh moving forward, right? I mean, he's supposed to take over on May 15th. Think that actually happens?
Oh, I don't see any reason why it would be disrupted. He needs to be confirmed, and there's still questions out there about whether Jerome Powell leaves or stays on at the Fed. We need some resolution in terms of his problems with the Justice Department. So yeah, there's a couple of questions out there, but I believe that Kevin Warsh will be put in office come mid-May.
Look, I mean, also, I mean, just the final, Scott Bessent also saying, when I said the U.S. will take oil from Iran, also U.S. Treasury Secretary Scott Bessent has said on oil in Iran, the U.S. will control and take control of the Strait over time. Interesting.
Right.
Okay. Thank you, Kevin Hicks. Yeah.
The Strait of Hormuz that's causing all these disruptions. Something long term has to be done there.
Let's do our first poll of the day, folks. All right. The first poll of the day goes. Time is 11:42. Coraline is coming live in 40 minutes. All right. Based on what has happened so far, based on the candles and the cycles, the market is bullish or bearish from here into Coraline.
Back on Morning Trade Live, let's focus on CrowdStrike. Wolf Research upgrading shares today to outperform. More on that in a second with Marley. But this stock has not been immune to the larger software struggles over the last few months. It's down nearly 20% so far in 2026, down more than 30%.
This is the biggest physical disruption I've seen. So, no, the market, I think, again, if we talk about Brent, the market is not pricing in the amount of the disruption. There is a real physical disruption. Look, Hormuz, if the closure of Hormuz, if you add it all together, it's 20 million barrels a day of oil and products together. All the other strategic petroleum reserves, Russian barrels unsanctioned, all
we have a lot of people
Saudi
on YouTube
pipelines, if you add it all up,
1, 2,
you maybe
3,
get to 10,
4,
11
5,
if you're positive.
6.
So you're 9
7,
to 10 million barrels short.
7, 2,
that's
1,
that's unprecedented.
2, 7,
and when we look at gas markets, you've said they're more vulnerable than oil, of course. So why is it structurally more vulnerable to this crisis? And do you think Europe could face a gas shock to what we saw back in 2022? Or is this fundamentally a different type of crisis?
3, 4, 5,
I don't think it will be 2022.
7
because that's the difference between 22 and now is that in 22 we kind of assumed that losing the Russian molecules was a permanent thing, so they're not coming back. With Qatar, the number is very big, but we all assume it's coming back at some point. So given that, the lack of permanence, you would assume that it's less high. But yeah, gas is more vulnerable. Because in oil markets, we can at least talk about a few offsets. In gas, there is no offset of any size. So you lose Qatar full for as long as Hormuz is closed, and you can't really find significant other volumes to compensate for it.
So you've called this an Asian energy crisis, as opposed to the epicenter being Europe this time. Talk to us more about that.
Yeah, so that's for me the big, really one of the other large differences between 22 and now. In 22, it was a European crisis. Europe was short oil, short gas, and it reverberated around the world. This because Asian, both oil and gas actually, because the Middle East supplies so much of the Asian demand. More than 70% of the flows out of Middle East go to Asia. The first shortages will be in Asia. So you kind of invert it, and you see it, because I think in Asian markets you start seeing demand destruction, demand reductions. This crisis will also come into Europe. It's going to take a little bit longer because the heart of the shortages, they will start in Asia because they're more dependent on the Middle Eastern barrels than Europe are.
So you're already seeing demand destruction,
the fuck is April
reduced
17th?
flights,
3 weeks? 1, 2, 3.
as a result of this conflict. I mean, how much further does that demand need to fall in order to stabilize the market somewhat?
A lot. So we basically need to lose the... if nothing changes, that's of course the assumption in this question. If nothing changes, you need to take out probably 10 million barrels a day. Something like that. Maybe 9, maybe 11. I mean, that's unheard of. I mean, COVID was 20, just to give you a number. That's when we got
11
that's a different story.
to 7.
Yeah, look, and what is interesting in this market is that we focus a lot on Brent prices, which is fair enough.
The bulls feel backstabbed by me right now.
Because the users
I
of
was
the
gonna
products
vote this
are the
shit
ones
anyway.
shut in demand. So if you
I
look
got
at jet
11K
prices,
motherfucking
they're
core
super
you.
high,
Why
so
the
people stop flying.
fuck would I want the market to go up
gasoline
right
or
now?
prices are really high, so it becomes harder to truck and to do manufacturing. So these prices are already at levels where you start to see demand destruction, but we need significantly more. So that's also why most forecasts would say, if we stay out for months, we have to price even higher.
I'm about to
than
hold this shit overnight. Like,
this
sounds so.
So two quick questions then before we go. Where do you see if this continues? Where do you price it? What's the highest you think it could go?
I'm about to hold this shit overnight.
And also, do you think
so dumb
that we're looking at some kind of a temporary spike here if that drags on, or is this going to have permanent damage, permanent changes now to the market? Things that don't just go back to normal. How do you see that?
Tomorrow.
Yeah, so let me do the last one first. So that's the more longer term view. Look, when this crisis has resolved, and let's assume we've got the oil flows back, I think there's a few permanent changes.
And
one is
motherfucking March
we will have
tomorrow.
Probably a pretty long period of expensive prices, of high prices. That means people dependent on both oil and gas, or LNG and oil, they'll find alternatives. So I think demand destruction, part of it comes back, part of it will be structural. So your demand forecast is probably a bit less optimistic than it was before. On oil and probably on gas as well, if you're an importer, the one way I think you protect yourself against the next crisis, wherever it's going to come from, is by building higher stocks. So I think countries are going to try to stock up to a higher extent. In gas, it's not happening at all.
20 minutes,
but
we need
building
more
higher strategic stocks, which is again demand for the product you want to stock. So that's bullish. So I think that's two longer-term bullish things. Where we can go. Look,
bullish.
So if it stays, we can easily go there. I've seen 200. We could go to these levels. I need it out for quite a while longer. We could go there. That should probably be enough if you kind of look at how much demand you would.
I'm in 1637.0 DT for $139.
Aldo Espana, the head of energy strategy at BNP.
I want to have something in SPY now, so. Bullish, bearish.
We saw Brent surging.
Bullish.
Up at around 116 US dollars a barrel now, and actually up more than 50% since the war began. But what's also interesting, and I know you've been following this as well, this is an oil market that is also in deep backwardation. So what do you think that reflects, and who is actually getting this right? Is it the spot market or the futures curve?
Well, look, I mean, at the moment, I don't think anyone is getting it absolutely right because of the level of uncertainty. But I would like to look at the current situation and the conflict slightly from a different perspective from what we are hearing every day. Because I don't want to be another doomer, like analyzing the market. On the contrary, yes, I know we have the largest disruption in history in terms of volumes, but it's still you're talking about a much bigger market than what we had a few years ago. So therefore, in terms of percentage, the disruption is not the biggest in the history of oil markets. And at the same time, when I look at the volumes lost and the fact that it's not affecting one single country, but you have a group of major oil exporters in the world being affected, being faced by this disruption. And at the same time, I see prices at the levels where they are today. I see it's not really a very bad situation. We don't have a collapse in oil markets. We do have a big risk premium in the prices. And the reason why I say that is because I see how prices are moving almost in real time with political statements. That is not just fundamentals. That's definitely a risk perception that is factoring in. And that gives me some hope. If a deal is reached, I know some disruptions might continue temporarily, but it's not going to be a permanent shift in prices. So likely would go back to normal quite quickly because it's more logistical than fundamentals changing significantly.
40 minutes still. That's a lot
yeah,
of time.
And that's a good point as well. The other thing I'll add to that as well is there's obviously a risk around production moving forward as well. We've seen production shut-ins taking place across the Gulf. LNG is something we haven't discussed, but is perhaps even harder hit here as a result of what's happening in Qatar, the South Pass facility, and of course, Qatar being forced to declare force majeure. How do you think Asian buyers are going to navigate these complexities moving forward as well? And is there a supply crisis building in the oil price headline that we're not actually seeing reflected in the markets right now, given what is happening with the production side, the physical production of some of these assets being shut down? It's going to take some time before we see oil.
Why do I feel like this should have came last Friday? Like what
before the war started?
Definitely, if there is a deal today or tomorrow, it's not that oil fees are going to resume, so that we're shut down or whether we had force majeure declared, that production is going to be reinstated immediately. But the good news is that we don't have structural damages to many of those fields. And that means that, yes, we may have some delays, but production will come back soon and not in a question of years for rehabilitation. So that gives us some hope. In terms of gas, the situation is a bit different because LNG markets, and that's something actually the crisis today made many realize, that we have much higher concentration for LNG supplies than we have with oil supplies. Because you do have, for example, the US, Australia, and Qatar representing more than 60% of global LNG exports. And to have the big producer, that is Qatar, being hit with Rastafan attacks, that increased prices at very high level because of the current fear. That said, the other side of the story is that gas has much easier alternatives than oil. So yes, we will have some curtailment for production that may not be replaced immediately, but there are alternatives to gas primarily in Asia, such as going back to coal. That is not good news from carbon dioxide emissions and other greenhouse gas emissions, but it's not the end of the world. That does not mean that Asia is not going to face stronger competition, let's say, with Europe, as we saw in the last few years, and the tankers would end up going to those that pay the higher price. So there is an economic cost, not necessarily supply.
We have people going crazy in chat, bro. Shani saying, buy your shot more touring work.
Consumers in Asia are going to face. And that's why we are seeing across Asia more like some countries, poorer countries, such as the Philippines and Vietnam and other players, introducing new measures to contain demand. Now, whether that will be effective or not is a question of time, but definitely they are more exposed to these higher prices that we are seeing today.
And Carol, moving forward as well, one of the other observations being made is the fact that the Gulf states will no longer allow Iran to have such a stronghold over such a critical waterway in the Strait of Hormuz. And the messaging that we've been hearing from the UAE, for example, is that it would be interested in getting involved in a coalition of sorts to help protect ships and their crews and their cargoes to pass through. It seems as if, given the shifting security dynamics that we see in the Middle East now,
let's see it.
This is enough. Let's see it. Destructo beam. Who do you think is going to ultimately guarantee the Strait of Hormuz moving forward? Because, as I said, these Gulf states are really calling out for change here, and the U.S. is also singing from the same song sheet, suggesting that the situation inside the Strait of Hormuz cannot continue in the way that it has moving forward.
Then my immediate reaction to that is,
Destruct
why did we have
disk.
to wait for so long to think about alternatives to the Strait of Hormuz, and we did not think about a better protection mechanism? Is it, I mean, historically, yes, I mean, we did not see the current situation, but technology has changed. Warfare is not determined anymore by who has the biggest missiles, and we are seeing today how Iran is able to cause so much disruptions using very cheap drones. And my question is, what kind of arrangement we're going to have in place to shield the ships and the tankers that would go through the Strait of Hormuz from those drones attack? I still would like to see better details to understand. But if I may, I want to share with you perhaps something a bit controversial. When I talk to people across the region, friends, relatives, not necessarily oil market analysts, there is a big concern in the region about what happens next. If that war ends today, in a way, right? I mean, it might give the upper hand to Iran to exercise more control over the strait, because they would fear that they were not defeated in this measure, and they see the disruption they can cause in oil markets. So how are we going around that? I don't know, and that's why some people say maybe it's better if the war goes on a bit longer.
Destruct all this.
That we have today among many people in the region, that it's not just about protecting the Strait of Hormuz today. Is what does that mean for the stability of the region going forward if Iran does not commit to long-term stability, or if we don't see significant change in the Iranian position? Because what we saw today is pretty unseen before. I don't want to say because we saw it was the Iran-Iraq war, but that was different.
It's all over, folks.
Steps that they took before.
Just wrap it up.
And that is worrying going forward. Opens all sorts of scenarios, but there's definitely much higher risk perception when it comes to Middle Eastern supplies and trade than just the question of the Strait of Hormuz being resolved in a matter of, in a short period of time.
Everybody knows. Bad guy had his goggles on, and it was like 9,000. He was like, bruh, we're tough. Got us, but what?
Yeah. Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today.
Bring in the president.
All right, KG, it looks like the conflict in the Middle East is escalating right now. Bring us up to speed on the latest.
Hillary. Bring in
Bill
Clinton.
We continue to see an escalation here, especially this morning. President Trump did state that there are serious discussions that are being made right now, and they do. He is a little bit more hopeful that this new regime, that he calls it, maybe they could come up to a deal. But within that post, he also then talks about potentially striking military assets, as well as even potentially civilian assets like desalination plants, as well as their energy infrastructure. So kind of going with a 50-50 tone to start off this morning. Now, what we did see over the weekend was we did not see any boots on the ground. I think that's really what the market was expecting, and that's probably why we get a little bit of a relief rally. But we continue to see strikes back and forth from Israel to Iran, as well as over to some of these other Gulf states here. If you're looking at some of these aluminum processing or processing facilities, those were some of the bigger targets this weekend. Chemical facilities as well. So the volatility is still elevated. We still have a 30 VIX right now, but at the end of the day, once again, we did not see that boots on the ground type of posture, at least for now. And I think that's probably why we are getting a little bit more of a relief bounce today in the equity market. Let's see if this is going to be able to hold. We have not been able to hold a lot of strength when we actually open up green. Usually we then end up in the red. Let's see if that's going to kind of change, at least for today.
All right, let's talk through where oil is sitting now. We're in triple digits, whether we're talking about Brent or West Texas Intermediate. We're sitting at above $100 a barrel right now for
these are
WTI.
some true non-American
Take us through what you're watching here in terms of the levels and this big surge over the past month.
Yeah, this is going to be one of the more bigger historic moves that we've seen in crude oil over the past month. Brent crude is on pace for around a 60% move on a month-to-date basis. So that's really remarkable here. If you're looking to the upside for Brent, you're still looking at around $120 as that major area of resistance, and that could be overcome here if we do see more strikes on energy infrastructure, especially the East-West pipeline within Saudi Arabia. I think that's going to be the key infrastructure that a lot of energy traders are going to be focusing on, because that's transiting around 4.7 and maybe 7 million barrels per day, which 7 million barrels per day is the maximum that pipeline can push through. It has not been targeted yet, but it is something that is going to be on the radar here. And if that is going to be the case, then we have a bigger issue What we also saw over the weekend is the Houthis starting to talk about getting into this conflict, striking or trying to strike Israel. And so you start to put the Bab el-Mandab Strait, or basically the Red Sea, into focus, as well as a potential choke point for the energy markets. But Diane, if you kind of look at where we are at right now, and let's just say that we are seeing the same type of situation as far as the chokehold on the strait, this time a month later, you start to talk about demand destruction. We are seeing a lot of countries in Asia that are pulling back, pretty much utilizing COVID-19 type of restrictions right now in order to reduce consumption levels. So it's not going to be a linear one-for-one. I think at some point in time,
bears are here, bears are here, bears are here, bears are here, bears are here.
There's still probably some near-term risks that we have to be mindful of within the energy patch before we get that reversal. But I think we're probably closer. We're probably 75% of the way to the top, rather than us just getting started.
Yeah, listen, I have seen some commentary overseas in Asia about restrictions on gas and filling up long lines, et cetera. So, you know, a great context there. Let's talk about the moves in crypto. It's interesting to see crypto moving higher, whether we're talking about, you know, the cryptocurrency in the pole position, Bitcoin or Ethereum, especially when you saw, generally speaking, it moving similar to risk off. Is this technical in nature with crypto?
Krillin.
Yeah, I think so. Once again, you are seeing a little bit more of a relief balance because the conflict or the escalation that a lot of individuals are pricing in over the weekend. So you did see an initial flush on Sunday night. You have some buyers stepping in. Bitcoin has been trading in a pretty well-defined range here. You're looking at the lows of around 64,000 if you're looking at the futures contracts. And then the upper end of resistance is sitting at around 77,000. So until it breaks out of that consolidation range, you gotta really kind of trade through that range. Now, I still believe that Bitcoin is a liquidity gauge in the market, and you would like to see it kind of break above that 77,000 level, because that probably would then coincide with liquidity from a broader market standpoint starting to come back into the market, which could be conducive for equities moving higher. You could also make the case that maybe this is kind of a bear flag, which means that that Bitcoin's in a bearish formation, but it's just consolidating before another flush to the downside. And if that's going to be the case, then you're looking at around that 50,000 level, 45,000 to 50,000 level for Bitcoin futures as your next major area of support. I think today, once again, a little bit more of a relief rally. I'm not sure if this is going to be the end all be all when it comes to the market pullback. Still a lot of risk that's in the market right now. But crypto, if you're looking just at Bitcoin, has not really been breaking down like the equity markets. And maybe it was the first one to break down if you're kind of comparing the two over the last year or so.
I'm up 20%
but it hasn't broken down as
maybe.
aggressively over the last 2 weeks or 3 weeks like we have seen the equity markets do.
Okay, and then speaking of that breakdown, I want to kind of zone in on the Mag 7 NVIDIA specifically before we broaden back out to look at equities again. So NVIDIA, it's ticking a little bit higher this morning, not by much. If you think about the downtrend it's been in recently, like so many members of the Mag 7, save the pressure that's been on Meta. But talk us through what you're paying attention to here as it relates to NVIDIA. There's some news around it with regard to Mistral AI. Maybe that adds a little bit of some nibbling, but broadly speaking, the technical levels you're watching.
Destructo
They actually basically raised around $830 million in debt, and a lot of this debt's going to the GPUs from NVIDIA, around 13,800 NVIDIA chips. Now, this is obviously going to be a company that's going to compete with companies like Microsoft, Google, as well as Amazon, but this could be a tailwind for NVIDIA as far as the purchase order goes here. We're looking at it from a technical standpoint. We did break the 170 level to the downside. Usually when we trade at around 170 or lower, the stock does not actually stay at that level for very long. In fact, we've only had one time, it's back in September of last year, where we kind of consolidated around 168 to 170 for about 4 days, 5 days before we pushed higher. I think you probably get some technical buyers to step in here. Unfortunately, we do kind of get the stalling out and we continue to break. You can make the case that NVIDIA could move much lower from here. Down to around that $150 level. The semiconductors are the only other sector or industry right now that's really holding up this market. Everything else is for the most part pulled back. And if that's going to be the next leg to move to the downside here, that could give you maybe a broader sense that the broader equity market itself can continue to pull back. And I think the biggest question mark that no one's really asking right now, but we're going to have to ask ourselves in about a month or 2 months from now, what about sovereign AI? Do we see these sovereign players like the Middle East, right? Saudi Arabia, Kuwait, UAE, are those individuals still wanting to actually build out these data centers within their region, given the fact that we have geopolitical risk and they could be targets, similar to what we saw with AWS. So I think that's going to be a big question mark. Once again, no one's really focusing on that right now, but that could be a headwind for this company if you do see sovereign spending kind of pull back because of this conflict.
Okay, and let's zoom back out to equities broadly speaking. So we've been watching correction territory for NASDAQ, for the Dow, S&P 500 not there yet. What's your take on where things stand broadly speaking, and what you're watching in terms of flows for the S&P 500 today to the upside and downside?
Come on, market.
Yeah, I would say for the price action this week, obviously you have to recover the 200-day moving average. You'd like to recover the 20-day moving average as well. If you're looking at a weekly chart, we've obviously had a little bit more of a pullback to the downside. We're testing the 50-week moving average. You go to past cycles where we continue to see a correction in the market. We could see a relief rally this week and then a further flush to the downside. And that's how I would treat this market. I would still be a little bit more cautious around this, even if we have green on the screen for this week. And it looks like we probably are a little bit more primed for the 200-week moving average for the S&P 500, which brings you to around 6,000 to 5,900 or so. But that's not for today. That's just something a little bit long term. If you're looking at the flows to the upside, 6,500 is where the call flows are going this morning. To the downside at 6,300. We have a 30 VIX. We're implying about a 1.9% move to the upside or downside. So Diane, this is really a premium seller's market. Now, if you're a call seller, if you were selling call spreads all last couple of weeks, that's been a very profitable trade at this point in time. But this elevated volatility here should not last for too much longer. It doesn't mean that the equity markets have to rally back, but we are a little bit overextended when it comes to the hedging or the positioning to the downside if you're looking at the put skew.
Where?
All right, thank you, KG. That is Kevin Green, our senior markets correspondent, with
what
should be on your radar today.
There's a 1 minute gap fill. Fuck! All right, there's a 1 minute gap fill up top. It looks like that's what they're hoping on. The goddamn 1 minute gap fill.
You're joining me right now here.
NIWM. Core line. We need you, core line. Is that the same spot trade? Because it probably is then. You are right. Yes, there is. Core over a line. Core over a line. Oh my god, I'm up $950. Core over a line. Coraline, 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 Coraline. I know you love me. I know you care. Oh, Coraline. It's not even letting me send the fucking WhatsApp picture anymore. What the fuck? I might core you up though. Let me see if I can send it in a private. Guys, I can't send no WhatsApp messages no mo. Yeah, what the fuck? Wait, why can't I send this picture? Stupid as fuck.
Ready?
Oh my god, I'm up crazy. I'm up like crazy.
He's like, I came home and there were skinheads in my yard.
Holy shit, look at this shit. Holy fuck.
Oh, Lord.
Holy fuck.
This one's not.
Holy fuck. I don't even know what's going on anymore. Corey, you're going crazy right now. Holy fuck.
What kind of place is this? I can't work in these conditions. It's ridiculous.
5350. Alright, I'm filled on Coryu. $5,350 one contract. I still have another contract. I'm up for $998 today. The other contract's worth $6,300. I got in for $5,900. Profit's $430 right now. Wow. Yo, holy fuck. Core you got it. I love Core you. Literally same as last fucking week. Holy fuck.
Hey Jay, want to help me carry? Somebody help me carry?
We're traveling. They don't want us to. They don't ever want to travel. We'll look out for that.
No, I mean it's like.
I love America, man. This shit is crazy. I love America. I love America, man. Oh my god, I love America. America, what the fuck is this? It's great. I'm up 7% on my core you put. God. Unbelievable.
Yeah, that's all I got. I'm from Florida. Where's Miami? No, my mom was okay. I was in Miami for spring break a month ago. Oh yeah. Yeah, 3 weeks ago. Nice. So do you go around to like Florida? Yeah. So now that I can see I didn't notice he was going through.
Yeah, literally, like that's where I grew up. Oh wow, so you go to, so your dad is
That's crazy. That's crazy. What the fuck? Straight up today. Oh my. Oh my. Look at the shit show I was in. Up, down, added here. Up, down, up. What the fuck is this? Nah, what is this? This, the cycle? Oh, I don't even know what cycle this is. Before you went lower than it.
Good afternoon, Tiffany. This is Dan from the Whitehouse. I wonder if you can see me and hear me on Whitehouse Transmit. See me. Same shoes. Hear me. Feel me. Love me. Yeah, yeah. See my hand? Okay, okay. 1,300 hours. Thank you, young lady. Appreciate it. Bye-bye.
That's crazy. That motherfucking Krillin shit. Destructo disc. Destructo disc. Say no more.
I parked my car right I don't want to give it to me. It's like, oh, there's 4 of them. Yes. Well, yeah, a big dividing line would say, do not cross.
Just tell me something. What you got? He goes, you see these special players. And he said, we had a 3 pop up. I think we did like 3. We did something at 1 and 3 came over.
What a madness cycle this is, though. Like, bull trap, bear trap, bull trap, bear trap, bull trap. They literally trapped everything technically. Every single cycle was insanely crazy. Every single cycle was insanely crazy. I can't believe it. That's wild. Really, March coming in dirty nasty. Maybe, hopefully April can do something nice because yeah. Look at SPX on Robinhood. Like, it just comes in so damn poppy and drops. Like, in a bearish environment, like, the thing actually has no fucking steam. Like, nobody wants to fucking get rammed over or run over by the entire world. And it's like a hot potato, actually. Jesus. Hidden Angel said, I'm up 7K today. I need more. You, ma'am, are a greedy pig. What the f? I thought I was a greedy pig trying to get 1K. 1K again, 8 days in a row. What? 7K, crazy. What? I'd be done for the week if I was me. You know, okay. I'd get greedy as shit too. I'm not gonna lie. I've been up crazy and I've been trying to go up every fucking day, like a little bit. But I honestly could have went so much more last fucking week. On Thursday and Friday, I did nothing on SPY downside, like barely no fucking shorting, and everything just went lower. SPY just kept going lower. That's actually the saddest shit ever if I really look back in time. Like, I was being so fucking safe last week, but like I actually missed out on so much money. So much money. And now I'm on today fucking stressing about bullshit little fucking 1K today, but honestly, last fucking week. Oh my god. Trade said I need Goku today. David said that LMFAO, some greedy gremlins in here. If we may get a low into today. Like, the thing is, last week, if you think about it, right? Thursday and Friday, every single into close, it just keeps going lower and lower and lower and lower. What if they do that bullshit into the end of March? End of March is today. I'm not saying it's going to happen tomorrow, but I'm just saying right now, what's going on right now is the setup is there for them to go lower and lower and lower and lower into the day because of the VIX is at 30. People are fucking fearful right now. There's a LOD divergence. There's a lot of things. That could be hope too, but I'm just saying, like, if the MACD and volume continuously stacks like this and shit continuously goes, and they really are, there's like a, you know what I mean? There's like a monthly, that people could be like, oh, March was so damn bloody that every single March close intraday is pushing lower. Like, if you think about it, that's what could be going on into tomorrow. Tomorrow comes and people are looking at today and they're like, oh, what the fuck? Monday was so bloody, blah, 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 but it was supposed to be a new week. And it's just like, it's bloody as shit. How did this rocket not recover any? First of all, I think this shit, I thought it was going to stay up here. When it rejected, I thought it was going to reject. The way it rejected, the way it went up on purpose, that's crazy. Number one. That's like the least expected shit around the world. Everyone in the world thinking this shit's gonna go higher. Everyone in the world thinking this shit's gonna go lower. Everyone in the world thinking this is gonna pop up a little bit and chop a little bit or hover here at the minimum. Not fucking reject, pop, reject. Like, absolutely with the entire day's range. So, except people that are looking at the VIX, except people that are just perma fucking bearish because of the March environment. So, yeah, it's crazy. Oh, word? Alrighty. Let's get core line on. Let me remove this. Core line will give us a lot of direction, but this is like right now time is 12:20, right? Right now it's about 20-30 minutes before she comes on, and the market clearly did something from 12, right? 11:55, 11:50, 11:55 into 12:20, 12:40ish, which is right about 20 minutes before she comes on. So this is what I mean by, you know, sometimes it's uncertain when it's inside shit. Sure, that could have, you know, I don't really know if I could have said that. I don't think I said this shit is bullish because I don't fucking know. Like, what the fuck is this? I can't say this shit is bearish here too until it fucking actually breaks down. So yeah, I literally kept saying destructo disc. I remember that. Yeah, who remembers me saying fucking destructo disc, destructo disc, destructo disc? The realest watchers of my live stream remember. Since about 11:55 when my shit was reverted down south, I was saying destructo disc, destructo disc, fucking destructo disc.
There are no other sizes, but I know.
Let's get her on. Man, the way my portfolio went up and down today though has been more volatile than last week. Like, it's kind of fucking scary to say that because it went up and down 1, 2, 3, 4, 5, 6, 7 times. 7 times is crazy. 7 times is fucking crazy. Come on now, 7 times is absolutely fucking crazy. I think I did it maybe 4 times last week, not 7 times in one single day, off of one fucking contract. Still bearish. They want to run it. Man, 3/3 growing like crazy. $11.20. Time is 12:25. Core, you're coming in nasty with it today. NVIDIA. You know, I wanted to short NVIDIA, I think, on this third pop at some point here, but I don't think I would have made a lot of money. I just stayed out. MACD sign, bear territory. Look at where the pole is, like 11:45. Like, that is crazy. Look at where the fucking pole is. Oh my god, that's crazy. There was like 55% bullish and like 45% bearish or something. It was like 55% bullish and 45% bearish, right? Because all the people on YouTube were saying bullish, and it was like the vote was like 10-9 or some shit. It was like, I don't remember. That's crazy though. That's crazy though. Oh my. There's so much fucking risk, but they could go gap fill, which is kind of cool, I guess. So much risk. They built so much though, but I mean, they really did go up and down so easily today. That's, I don't even know how, but yeah, it's wild as fuck. This shit is wild as fuck too. Core U wild as fuck. SPX, QQQ. How's IWM doing? IWM looking bearish, Chris? Wow. I hope to God Core U gives me a good feel here. I will fucking leave. I'm not holding this shit until tomorrow. I have never played Core U overnight, and I don't think I want to. Things so expensive. LOD testing on SPY. Time is 12:25. Bears are in control. 3/3. Holy shit. There they go. 12:25. Testing 10 a.m. low. LOD divergence 10:45. They want to go break the LOD. Bears are in control. 3/3. I feel FOMO on SPY. I'm running up. Oh, I'm up $1,200 now for the day. I'm up crazy now. I'm up crazy now on Core U. Thank God God did. I'm up crazy now on Core U. I'm up $1,200 for the day. Oh my God. Yes. This is good. Yes. 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 Oh my fuck. God did. God did. God did. God did. Run that fucking shit deep. God did. 65.5. Fucking film me right now. I don't give a fuck. Please. Please film me right now. 65.5, please. 64.15. Fucking 64.5. Film me right now. Please film me right now, man. Right now. Fuck. 64.15. Don't do this right now. Come on. $64.25. 64.8. Give me fucking money, please. Yes, 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 yes. Oh my God, yes. I just need one nice fucking red candle on Core U. I get filled. Come on, please. $63.65. 64.15. I'm filled. I'm out. Done for the day. $1,250. I'm out. I'm done. I'm done. Oh, I'm fucking hungry. $6,410. $6,436. Nice. On one contract. I had two contracts. I sold one on the fucking way up. Nice. It's actually bearish control. Yeah, actually bearish control. Fuck. I could have printed so heavy doing SPY though, I'm not gonna lie, but yeah, it's FOMO, it's whatever. Looking back, I'm happy with it. Like, my week is actually looking fucking fire. My 1 week looks so fire. Hell yeah. Let's see what my fucking monthly profit's at. I think at 21K. Let's see. $20,980, not $20,894. So almost 21K. That's fucking wild. Hell yeah. Let's see that LOD divergence clear. Let's see it. Get core line on. Man, it's such a crazy feeling to go up actually every day. Like, I'm not gonna lie. It actually feels fucking great. Like, it's no longer scary. It was scary for the first week, the second week, or second week and a half, it was terrifying. Third week, it felt like heaven. Third week and a half, it felt like something different. Fourth fucking week, fifth week now, like, it actually feels magical. It feels magical. I honestly feel like I can't do bad every fucking day because of how crazy I'm up. Like, I genuinely feel so much confident because I'm up so fucking crazy. And I genuinely feel that I do so much better because I'm so much up. Like it's a fucking domino thing. Like, once life is fucking green and great, it's like I'm not talking about because I'm fucking candles. I'm genuinely talking about because of a systematic fucking, actual dedication, actual fucking, sacrificing literally fucking everything. I literally said I sacrificed everything yesterday. It wasn't a lie. I was down 40K 2 years ago. Made it all back last year, and now I'm literally up like fucking 40 something. I'm up like 50K, some bullshit. I'm not even joking, like everything. But to actually be on a run though for like a couple of fucking months, an actual like crazy fucking 1 month streak is it's genuinely life changing. Has to be. Genuinely life changing. It's sad as shit because it's lonely as fuck. And the moment you get fucking successful, and the moment you want to share that fucking success with someone else, like all the lonely shit you've been through and all the fucking alone shit that you have to do alone is like just, yeah. Because basically someone had to go through that to basically get to that point, but it's also like it's so fucking depressing, that alone period. It's a lot of time wasted, and nobody wants to fucking be around, depressing fucking sad people that are trying to work on themselves. People want to be around people that are actually, already done in life. You know what I'm saying? But like life says that, the majority in life honestly has to go through a lot of fucking bullshit to come up. I ain't gonna lie, like they gotta go through a lot of bullshit to come up, to realize who they are truly as a man or a woman. Like, it's actually sick shit, but once, like, when it's like, you know what I mean? Like, the only person that fucking believes, the only person that could really truly believe in yourself through it all, because you're the only one that could see that vision, is you. I say this shit because, dude, there was a time where my mom was like, I don't think trading's for you. You should give up. There was a time where, somewhere here, somewhere there, like, you know what I'm saying? Like, it's my family. Like, I love them. I'm not saying, like, they're not saying this. They're saying this shit for my best. They're saying this shit because they saw what I was going through in my life and how. But like, it's just only fucking way is alone. The only fucking way is fucking sad and lonely as fuck. It's lonely as fuck, and that's why I love my WhatsApp group, and that's why I said for a long time the WhatsApp group to me has been a very, very, very sacred place, because I talk to myself and I send videos that I watch to other people too, but like I genuinely know these people. I genuinely know the people that I'm talking to on the WhatsApp group, and I feel not alone. I feel that I'm not the only fucking hungry motherfucker in this world, no matter what age, no matter if somebody's 20, 30, 40, 50, I genuinely feel that I'm not the only motherfucker out there in the world that's hungry as shit. That's hungry as shit. I genuinely just want hungry motherfuckers around me, man. That's it. Like, I just want real fucking genuine understanding about what fucking life is and what they're actually dealing with in life. type of fucking people. Like, I don't want fucking just, oh, nonchalantly, I've been here for months, but I never typed and blah, blah, blah. Like, what the fuck is the point of that? I don't see any point. I genuinely feel that people that are actually trying their fucking hardest with their lives, and they're putting it all on the fucking line, and they're doing it with everything they got, they're actually typing, they're actually talking because they want to, and they want to fucking, listen, and they want to watch, and they want to fucking say shit, and it's just like, there's a big difference. There's a big difference. Saying and actually fucking doing. Emotionally and mentally too, but I mean, there's the only fucking way. It's lonely as shit, I will not say, but it's lonely as fuck. That's just a reality. But it's not lonely, because I have friends. Got friends. Those that feel you. I genuinely felt that, because I do notice that I'm different. I do notice that I'm changing. I don't know if that's good or bad, and I don't know who I am. I haven't known who I am, but I am figuring out who I am, and maybe that is good. I just wish, there was time so I could talk more about it with you. There's never time in life. It's always this time, bad time, oh, time's not, time. There's so much importance on time when I'm trading, like I said, bad with time. It said I lost 35K over 6 years since 2020 on my Robinhood, because this is like, I guess, yeah. Because I had other accounts too, but on my Robinhood alone I lost 35K since 6 years, and I made it back literally 2023, 24. It takes so much fucking time. It's kind of crazy though. Once that snowball happens though, like it's actually in a heartbeat that it like you're at that doorstep. You know what I mean? You're like 10K, 20K, 30K away, and you're like, what the fuck? Like, what the fuck actually happened for it to be, got close? Nothing. Type shit. Man, I'm deciding whether I want to chill today and keep the profits or do some more trading, but I want to be like smart, be safe. Only thing I have interest in is kind of MU, Nvidia, and Core U, but I don't know. I feel like I'd get greedy trapped if I do Core U. It already went down for crazy. Nvidia. Man, I low-key want to do Core U. I need Core U to bounce into close. I'm going to do one short tomorrow maybe for like 5K. Maybe not. I don't know. Core U is a hot potato though, honestly. A triple leverage fucking bull ETF on Korea, like that thing is at some point bound to fucking flip up 4% overnight. At some point bound to flip up 4% overnight, no control overseas. So I guess I'll watch overnight. Core line comes on. David said, how's that coin going? Yeah, I gave up, bro. I don't even want to talk about that bullshit anymore. I gave up on fucking trying to talk sense into anyone that has nonsense on fucking crypto bullshit. It's impossible.
I'm good. I got my sandwich.
Nice. That's easily doable, Chris. That's basically the amount that I lost. 36 on Robinhood alone, and then maybe 15.5 here on Webull, and then here and there. But yeah, that is actually not far at all. 15K. It's just being in that profit and not using any of your fucking old money is like some video game type shit. But honestly, like, yeah, it feels so good, and it's like it genuinely works more than like my own money. Like, it's so weird. Like, Trade said, look at MU. Oh my god, why? Oh my god. Wow, well, what the fuck? I should have shorted that bitch too. Holy fuck. You know, MU is literally Korea. Like, that's crazy. MU fucking took a shit with Korea. Kospi, SK Hynix, Samsung, MU. Oh, same bullshit. That is so crazy. How it kept just fucking going and going and going. How the fuck? That's actually sick. I remember watching MU as it was going down like 4 days ago. That's actually sick. I think it was somewhere here. Somewhere here. I was like, oh, there's no way Shirley doesn't go that way. I don't know, actually. Maybe I did play. I don't fucking know. I don't remember, actually. I don't want to fucking look at it. Fucking. Fuck MU. Piece of crap. Let's get Coraline on. Coraline on. You online. 95 people here, folks. Make sure you smack the like button. Thank you so much. All right. Korua line is incoming, folks, very soon. Spy said, or Taste said, what indicator are you using on the SPY chart? I use 3 things. MACD, volume, RSI, VWAP. Is that it? That's it. Everything you see on the chart is something that I drew. Alright, you are in high school art class with Jeff. They call me AI Jeff. Artificial Intelligence Tech Bot Deduction Tesla Bot 14 Jeff. You know those algo YouTube channels? I'm 10 times better. They call me the human algo hybrid motherfucking Terminator 14. You feel me? Fuck the algos. I am the algo. Fuck the algos. I am the algo, boy. Alright, that's the energy you gotta have on this market. Fuck the algos. I am the algo. Oh, what's my algo gonna tell me what to do? Oh my god, algo. What's my algo gonna tell me what to do, my? Fuck that. Fuck that. We are the computers, folks. We are the algos inside. Human hybrid algo. That's why I call it hybrid trading. What the fuck is hybrid trading? I didn't even know this shit was a thing. I swear to fucking god I didn't know this was a thing until last year. Hybrid trading combines manual discretionary trading with automated algorithmic or AI-driven tools to optimize decision-making and executions. It blends fundamental analysis, blah blah blah, technical analysis, allows traders to remain in control while using technology for speed. Technically, this is technology, the computer shit we're doing, but technically, like, this is what's going on. Like, they're doing psychoanalysis and they're doing time confirmation and doing setup fucking one minute gap. They're doing LOD divergence. They're doing it so much faster than everybody else in the world. That is the hybrid trading. Fuck the AI. Fuck the computers. I am the computer, bro. Alright? That's what Conor McGregor would say. Fuck the computers. Seriously. How else? Manual, discretionary, blah, blah, blah. How else would they do that? Let's see if it's still bearish. If 12.30 breaks or not. 12.30 or 12.25. It looks like we're stuck in an algo range, or we visited the algo range. So this is the nearest one that I see. That touched 12.40. So I'll draw this right here. I'll draw this right here. That's crazy. MU actually bearish as shit right now. I wonder if NVIDIA bearish as shit right now. It's just bearish. Am I allowed to play songs on YouTube streams, or am I gonna get copyrighted? Like, YouTube on that. Facts. We have 89 people here, folks, and 63 likes. Make sure we smack the like button today, please. Thank you. Make sure you smack the like button if you have not already. This shit is actually fucking annoying. Get Phil. I low-key want to try to fucking grab it. On a 1 DTS. Oh my god, I literally fucking stopped. Crazy expensive. What the how is one SPX put $4,000? Oh my god. Jesus Christ. It says 50% down, like what? Wait, there's overnight trading now? What the fuck is this? Hold up. Wait. Does Robinhood have overnight trading? Oh my god, there's overnight trading on SPX. Holy fuck. Wait, what? Wait, why? Wait, what? Why can't we see the value of the contracts going to shit show overnight? Wait, what is going on? I've never seen this feature before. Oh my god. Charles said, new to the channel. What are you hoping to hear in the conference? I don't hope on shit, bro. So I ain't hoping on shit to hear. I don't give a fuck. I want Coraline to get on and say good morning, good afternoon. I'm gonna say hi, Coraline, and that's it. I'm gonna sit my ass out. dude, like, you could see the SPX contract value overnight. If you go to SPX, click on options, click on March 1st, put or call, and click on add to watch list, and you open it, you could literally see from 12, it went from $62 to 8 a.m. in the morning, $35. So I don't even know how they're doing this shit, but it's showing now. It used to not show. It's showing how they're fucking destroying shit overnight now. It's showing how they're fucking destroying shit overnight now. Oh my god. I hope they don't add overnight trading. That would suck. That would get rid of the whole point of theta and all that. I'd never be able to go to sleep. It would actually be fucking computer algo, all that. Computer derived. Whatever the people say. It looks like they're having a hard time clearing the divergence at the shit. Sucks. What the fuck do you do when life throws a boulder-sized lemon right at your fucking face? Like, what the fuck? Just fucking get my face plunged in? Eat the fucking lemon? It's so fucking crazy. A big fucking lemon. Spicy lemon, I guess. Fucking Mexican hot Cheetos, spicy Fritos, fucking lemon thrown in my face. Gotta love it, because why not? You know, life has been fucking hectic and life has been fucking bullshit anyway, so why not? Why not, God? Thank you. Thank you. And I fucking hate peer pressure. Let me say that, alright? I fucking hate when people are like, I'm friends with you. Yeah. And they give you the worst fucking dog shit advice. Like, shut the fuck up. I'm talking about real life. I'm not talking about fucking. I'm talking about real life shit right now. Like, I'm not talking about to myself either. I'm talking about, like, you know, I hate how people have the influence on other people is what I'm trying to say. Like, I guess, you know, we all have influence on people's lives, and, you know, people have influence on my life too, but I guess, yeah, from my point of view and their point of view, fucking different. Maybe I am the wolf, fucking weird one, you know? Maybe I am the wolf. Goodness. crazy FOMO. I'm like fighting my fucking internal demons right now not to FOMO. This shit is crazy FOMO. Oh my god, this shit is crazy FOMO. Holy fuck. 1 minute gap on SPX. I'm gonna watch this shit. I genuinely am feeling so much FOMO right now. I can't. I literally can't. I literally can't do the 3/3. It would be breaking every fucking one of my rules. FOMO me. They do what they're gonna do. They wanna go fucking break the floor. Time is 1. They wanna go fill the gap below. I wanted to short, but I'm scared, so I refrain. But if I were to, I was gonna do 1 SPX south side and 1 DT, but I'm scared as fuck, so it's okay. You know what? Mama didn't grow no beach. You know what? Fucking crazy. I'm in for $1,674. Mama didn't grow no bitch. Fuck. Fucking hate this market, how it's so damn fucking volatile. Blackstone said, "Are you emotional trading, Jeff?" Fuck you, bro. I've been emotional all day. The fuck is the big difference now? I've been an emotional fucking wreck all day. You just didn't know. Got him. I've been emotional trading all day, boy. Boy. What fucking difference does that make? Same fucking day, same shit. Cycle fucking same shit. Oh, God. Yo, Mark trying to whip my butt. I like it. Yo, fuck this loser market I just doubled. Fuck this loser market. His core line. Where the fuck is core line? Corua line! Corua line! Go, baby! Corua line! Get it done! Corua line, folks! Alright, say her name. Or you, line. Corua line. Oh, shit. Corua line, folks. Say her name proudly. Corua line, say it proudly. I'm up $1,355 now for the day. Up 3% on this bitch. $100 is it. Little. Slow as fuck. God did. I'm up 5%, $174 now. Come on. God did. I'm taking this shit. 7%. Please. LOD break. One candle. $240. One candle. I'm out right here. One fucking candle. All I need right here. God did. I'm filled right now. 4.34. Fill me right now. Please. 8. Fuck. Fill me right now, please. No. Did not fill. No. God damn, it wouldn't let me fucking sell on that. Fuck. I hate them. Come on. I tried market selling, it did not let me fucking fail. Fuck. 105. Damn, I'm getting fucking old with these exits. Fuck. Oh, of course. I'm getting old with these exits. I'm too slow. No. No. That shit is so sad. 105 reverting. That shit is so sad. This shit is so fucking goddamn close systematic. I got so greedy on that candle switch. Fuck. I had 5 seconds where I could fucking fill it for maybe 5 seconds, 5 cents lower, and they literally brought it so fucking up, and then they wouldn't let me fill at the top. Oh my god, let me out, please.
I'm available also.
Come on. Some bullshit. Does this shit go high on Coraline? Or does this shit go low on Coraline? I feel like it's getting ready to go high. Oh my fucking god. Just exit and re-enter later maybe?
I'll
Fuck
make
me.
life easy for everybody.
I don't like this. I don't like this. I'm scared. I'm down $20. What the fuck? I want to be up! I'm down $20 on this shit. Why am I so scared? I'm down $4 on this shit. I'm kidding. What the fuck is wrong with me, actually? Coraline, take it over. I just wish I could have left. That shit was nice. Like, I wish I could have left with that fucking spike down. I just did not. Well, I wasn't able to. No, I'm $4 up. Or not. I don't know. Man. Fuck. Rich said we going down, bro. 631. How do you know? Houdini? How do you know, Rich? Are you from the future, Rich? What's going on, Rich? Huh? How do you know? He's from the future, folks. He's a jumper. Somebody call the police. Jumper police. He's a fucking time bender. Oh my, Rich, you got it like that, bro? You got Coraline on speed dial, bro? You got it like that? Rich? Oh my god, Rich! Oh my god, Rich! Rich! Rich got it like that, boy! Rich got it like that, boy! Yo, Rich got it like that, boy. He said, Coraline, get on the phone now, girl! Oh my... Damn. Coraline about to take me out to a nice dinner, huh? Alright. Hypothetically speaking, the Whitehouse press conference. Speaker. Damn. Alright, Coraline. Alright. I know you were built different. I know you were built like that, Coraline. Coraline thick. You feel me? Oh my, yes. Yes! Yes! Break the floor. $1,400 now. Yes! For the day. For the day. $1,400 for the day. Yes, boo. Yes, boo. I'm leaving on the first red candle I see here. I have my fucking shit ready to fucking market order on one fucking red candle. I don't give a fuck. Just one red candle. I want a couple $100. Oh shit! Yes. Filled. 4.32 filled. I'm out. $234. I'm out. Wow, that's all I wanted. I should have gotten more, I ain't gonna lie. That's all I needed. I'm out. I don't give a fuck. I'm out. They can take that shit wherever they fucking want. I don't give a fuck. I don't give a fuck. I'm out. I'm at 1.4K, 1.5K almost. I'm done for the day, literally. I don't need to do shit anymore. Craziest fucking trades today. I did like maybe 4. I did maybe 4 trades. Craziest trades. There they go. Here they go. I'm out. I don't give a shit. Here they go. Here they go. Man. No more. Nah, no more for me. I can't be greedy here. Nah. 3/3 actually. Nah. Any one of these spike candles could be the 3/3. We are already in the 3/3. Big cycle. Hello, broke on spike. Hello, broke finally. Divergence at the fucking ground cleared into 115. Bears are in control. I literally said, right? At some point up here, I was like, into tomorrow, at some point, 4 p.m., before 4 p.m., I think they're going to break the fucking floor and clear the divergence at the floor, right? In the alert room, I said that. Look at them, right? Oh my fucking god. Oh my fucking god. You're doing the end of the day bullshit. Into the end of the day. Bust down. 115. Wow. 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 I had my chart zoomed out. Fuck, I don't know why I left. LOD broke. I don't know why I left. I just missed out on a couple $100 too. Holy fuck. I just missed out on SPY is red now. Oh my fuck. That's crazy. I ain't gonna lie, that shit got me mad. Alright, hold on. How much did I miss out on? I missed out on $450 right now, so it's fine. It's not even that much money, but that's a lot of money. That's a lot of money. Yo, oh my god. Oh my god. I actually would have been up like 1.7, 1.8k to then 2k almost. $115. Man, I was so scared because I was so up today. I was such a wussy. What is wrong with me? I am a greedy bird. What's wrong with me? I fucking left so early. I was a greedy bird. Oh my. I'm turning the stream off right now. I missed out on like thousands on Core U. I literally missed out on $1,650 today combining Core U and SPY. It's fine. Alright, as long as that didn't go down today, I went up. Man, that is... It's fine. These moves are actually the life wiping. Holy shit, what's wrong? On candles, like that's crazy. My god. Now let's see the biggest fucking trap in human existence. Okay. NVIDIA 166. Lower. Well, today is Monday, folks. Alright, it's the beginning of the week. It's okay. There is 1, 2, 3, 4. There's 3 more days, right? It's a shortened trading week. Friday, we have the market close. Everything will be okay. It is a God-blessed start for me today. A very green Monday. Thank you so much for being here, folks. God bless you all, wherever you are in this country. And like always, thank you so much for tuning into the live stream today. Please make sure you hit the like button before you head out or do anything today. But we are now waiting for Coraline to come on. Time is 1:20. She was supposed to come on at 1 p.m. Thank you so much for being here, folks. And thank you so much for the love and support. But I really do need your support. So if you can do me a favor and hit the like, that would very, very be so helpful and meaningful. So please do that. If you have not already. We are at 70 likes. We have like 34 people that can still hit the like. Hit the like. I mean, in order for them to do this shit, someone getting trapped fucking crazy out there, so I don't know how the fuck they're able to do this shit, but that's why I feel like at some point they're gonna pull back too, because I went up fucking crazy, so I guess someone else, yeah, I don't even know. Well, I do know, but like, this is great. But this is crazy great. Like, this is actually kind of, yeah. It's life-altering, for sure. For the good and the bad. It's really, this, what it is really life-altering. Damn. I left so goddamn early. Yo, Core you too. You know how much fucking FOMO I have in Core you right now? A disgusting amount. I went in today because of the fact that they broke the yellow line, and I was like, oh, they're gonna continue to, but they literally did it into the end of the day. Makes me wanna fucking throw up. Fuck Goryu, I will never look at that shit for the next 2 years. 2 months. That's a lie. I wanna wait until April. That contract ends at April 17th, so I don't wanna fucking play that shit anymore. I want the next month one. Time is 1:22. 1:20. Alright, folks, whatever she says, make sure you say it back. Alright, good afternoon, good evening, whatever it is. Good afternoon, good evening. Go get a steak and salad type of day. I'm getting a steak and salad type of day. Was everyone eating for lunch? Was everyone eating for lunch? Let's see in chat, man. This shit better stop after March. That's what I said in my alert room, man. There's so much debating now. This shit better stop after March. It's getting wild out here. Get fucking Q. God damn. Look at Q. Gosh. Golly. My bulls got cooked. They used it all to go lower again. Oh my god, they cooked it in one fucking day. She can't even bounce one day. That's great. We can't even bounce intraday. Like, what the fuck is this shit? They got cooked. Someone said hard-boiled eggs. protein smoothie, Pizza Hut pizza, garlic, pepper pasta. That sounds good.
Good afternoon, everyone.
Good afternoon, Coraline.
Loud prayer as a team. In this Holy Week, President Trump and the First Lady are joining in prayer with Christians celebrating the resurrection of our Lord and Savior, Jesus Christ. On Wednesday, the president will host an Easter lunch in the East Room with faith leaders across the country to celebrate Holy Week. With respect to the ongoing major combat operations in Iran, Operation Epic Fury is moving ahead successfully and according to plan. With each passing day, the United States military is increasing its advantage over the terrorist Iranian regime. More than 11,000 enemy targets have been struck to date, each strike further crippling the regime's offensive and defensive capabilities and creating more leverage for the United States and our allies. Compared to the start of the operation, Iran's ballistic missile and drone attacks are down by roughly 90%. The United States is also decimating the Iranian regime's navy. We have destroyed more than 150 of their naval vessels so far, including 92% of their largest vessels. The Iranian Navy has no vessels operating in major regional waterways and no ability to project naval power, which is why they've been assessed as combat ineffective. Our military continues to obliterate Iran's defense industrial base, with nearly 70% of their missile, drone, and naval production facilities and shipyards damaged or destroyed thus far, significantly reducing their ability to pose future threats in the region. U.S. and Israeli joint forces control the skies and have asserted air dominance over Iran, completing more than 11,000 successful combat flights thus far. The trend remains clear. The United States is conducting more intense, targeted strikes with devastating combat power with each passing day to destroy the threat posed by the Iranian terrorist regime, as President Trump sought out to do a month ago. It's no surprise that we are seeing the remaining elements of the regime become increasingly eager to end the destruction and come to the negotiating table while they still can. Despite all of the public posturing you hear from the regime and false reporting, talks are continuing and going well. What is said publicly is, of course, much different than what's being communicated to us privately. As a result, President Trump issued a 10-day pause to postpone planned strikes on Iranian power plants and energy infrastructure. This remains a truly once-in-a-generation opportunity for the regime to make a good deal with the United States, permanently abandon their nuclear ambitions, and stop acting as the world's leading state sponsor of terrorism. If the Iranians reject this golden opportunity, the greatest military in the history of the world continues to stand by to provide President Trump with every option available to ensure this regime continues to pay a grave price. One way or another, Iran will no longer have the credible ability to threaten the United States or our allies, which is, of course, the overall objective and mission the president set out when he launched Operation Epic Fury. Unfortunately, even as President Trump is working hard every single day to protect the United States from foreign enemies, Democrats on Capitol Hill have failed to do the same here at home by keeping the Department of Homeland Security unfunded. Over the past 6 weeks, Democrats in Congress have pushed our air travel system to its breaking point and inflicted massive pain on Americans with their reckless political games. 500 TSA officers quit their jobs. Thousands more were calling out sick at record rates due to the lack of pay. This resulted in security wait times exceeding 3 hours at major airports across the country, creating nightmares for millions of Americans. Overall morale among TSA staff plummeted as well, all of this creating an unacceptable heightened security risk. Because of the Democrats' unwillingness to do their basic job of funding DHS, President Trump determined that these circumstances constituted an emergency, compromising American security. That's why last week he accordingly signed a presidential memorandum directing the Secretary of Homeland Security to work with the Director of the Office of Management and Budget here at the White House to use those funds with a reasonable and logical nexus.
This shit is actually melts off right now. Oh my god, deja vu last week. What do we say? We were up here in December. Oh my god! Deja vu.
This bold and necessary action by President Trump will ensure our TSA workers receive their hard-earned paychecks. It should not have come to this point, But President Trump
Yo,
will
Sparrow,
always
you
do
want
what's
to join
right
the alert
by
room,
the
man?
American people, and he found a way
you can
to
join
do
the
that
alert
to
room
get
for
TSA
$10
paid.
a day.
Ensuring that these federal workers who perform critical
Man, if
public
anybody
safety
wants to join the
responsibilities
alert room,
can feed their families, pay
10
their
to
rent,
11
and show
people
up to
now in the
work
alert
is
room.
something the president was honored to do. But this moment should be an eye-opening one for the American people. Let's be clear about what is happening. Democrat members of Congress are more than happy to put your safety at risk because they oppose the president's administration and his administration's efforts to enforce our nation's immigration law. Democrats refuse to fund ICE because they want millions and millions of illegal aliens to pour into the country just like they were under the Biden administration. They want murderers and rapists and thugs to remain in your communities rather than be removed by ICE and Border
Just
Patrol
send me a
agents.
text.
The
You have to get
Democrats
WhatsApp.
created this mess. They
You
are
need a
the
WhatsApp.
reason for long lines
So
at
if you don't
airports
have
and
WhatsApp,
tens
I
of
have no
thousands
idea
of
how you can
employees
join, but
going without pay.
anybody that
Once
is
again,
interested,
President
just
Trump
send
is
me a
cleaning
text
up their mess because he cares more about the American people than destructive, petty, partisan politics. With that, I will take your questions today. Here in our new media seat, we have Wid Lyman. Thank you for being here.
Really
Why don't you kick us off?
Thank you. Happy Easter.
Thank you. You as well.
Questions for you. Thank you. There are some concerns the administration is starting to change its position on deportation.
Surely this thing bounces at the beginning of April, right?
Policies. What would you say to Americans that are somewhat concerned that the shift has happened?
Sure.
There's so much time left.
While there has, of course, been a change in leadership at the Department of Homeland Security, with
Holy
former Senator,
crap.
now Secretary Mullen, joining the
Bearish
president's cabinet,
control.
I can assure
This
the
is
American
crazy.
people there has
Insane
not been
bull
a change
trap.
in policy. It has always been the policy of this president and this administration to deport
God
the
damn,
worst
that
of
one
the
DT
worst
would have
illegal
fucking
alien
printed
criminals from our
100%. What the
communities.
fuck?
That's something
I ain't
I
gonna
know
lie, that
Secretary
one
Mullen
DT would have
remains
printed fucking
wholeheartedly committed to
100%. That's
doing.
bullshit.
And it's something that is
the fuck
overwhelmingly
is this?
popular with the American
Ain't no
people.
way. In
And
my
it's
core
something
you,
that
I
is
missed out on.
necessary
I
to
missed
protect
out
our
on 1K
homeland
at
and to
least.
prevent deaths of
The
Americans
video
in
I
our
want
country.
short
Just
of the
last
second
week,
pass I did
Sheridan Gorman, a young woman in
Crazy.
Chicago, was shot and killed on the
SPX,
street
too crazy,
walking with her friends outside of her university by a illegal alien from Venezuela who had no right to be here in the first place. And
Shit
it's
is
despicable
expediting.
that Democrats are currently
Thing is
defunding the
literally
department that's
expediting.
responsible for removing illegal aliens like that. And I would also add it's despicable that the lack of coverage of this young woman's case, of her life, and the way that it was tragically cut short. I saw a survey over the weekend that I'd like to bring to all of your attention. This is the media coverage of the case of Sheridan Gorman. You have ABC News has spent 1 minute and 19 seconds between 2 days when this case was first alerted. You have CBS, 2 minutes and 1 second. You have NBC, 23 seconds spent on the life of a young, beautiful American woman whose life was taken short by an illegal alien who should have never been here in the first place, when we are in the middle of a battle on Capitol Hill with a major political party, the Democrat Party, who wants to defund the agency that is responsible for protecting Americans. I think her life was worth more than 23 seconds on cable television, and I think the people in this room have a responsibility to report on cases like this, because it just exemplifies why the president is so strong in deporting illegal aliens from our communities. And thank you for the question. Dasha, go ahead.
Caroline, I have 2 questions, one on Iran and one on DHS funding. On Iran, the president has said that the administration is talking to a new and more reasonable regime. How confident are you that they are legitimate and have enough grip on power? Marco Rubio said earlier that he's not sure and it's not clear whether they will be in power. So are you also talking to other factions? As the president is trying to make a deal, how do you ensure that you're making a deal with the people who can actually implement it?
Well, that's part of
so
the
much
ongoing
fucking
process
FOMO.
that's
I don't
taking
know
place.
why
In
they
the
didn't let that
ongoing
fucking shit
negotiations,
run.
Of course, anything that they say to us privately
I don't know why
will
they
be
let that
tested,
shit
and
run.
we will ensure that they
Yo!
are being held accountable to their word, and if they are not, the president has
You know how
laid
much
out
that
the
goddamn put is at
military
right now?
consequences that the Iranian
Everything going
regime will
down, even
see,
crypto going
if
down.
they don't hold
Oh
true
my-
to the words that we are hearing
The thing
privately
actually
behind the
40%
scenes.
is like
When the president says
1
more
DT
reasonable, again, these
Probably
folks are
50 now.
appearing more
Oh my
reasonable
fuck.
behind the scenes privately in these conversations than perhaps some of the previous leaders who are now no longer on planet Earth because they lied to the United States.
You know, it's 'cause I'm
and
hungry. I
they,
blame this shit 'cause I'm
strung us
hungry.
along in
It went up a whole fucking
negotiations, and that was
$1 and 50 cents.
unacceptable to the president, which is
I
why
missed
many
out
of
on
the
like
previous
1.2K
leaders were
on SPY
killed.
2 today.
So again, this is another
2.4K,
historic
including
opportunity
everything.
for Iran to do the right thing, to
Or
rid
UN
themselves
SPY.
of their nuclear ambitions, and to come to a deal with this president and the administration. or again, they will see the grave consequences of the United States Armed Forces, which they are continuing to see every day.
Whatever, I'm happy for what's going on, I guess. This is great.
How long can the administration keep paying TSA without action from Congress? And not to be hyperbolic, but given the airports were really the pain point that was pushing both sides
the VIX must be fucking spiked crazy now.
Do you see a way for DHS to reopen? Is it possible that this keeps going through the midterms?
Well, we certainly hope so. I mean, of course, the president just can't keep signing presidential memorandums and proclamations.
They were using the VIX, right, as a setup. They were below this 30 on purpose, and they blew it up.
Holding our entire country
just a matter of fucking time. That's why I literally said earlier today, at some point today, into tomorrow, 4 p.m. close, this shit's gonna fucking break
That's not how it's supposed to work. They voted 7 times against funding DHS over partisan and political reasons. And so, again, the president has stepped in to do the right thing at this moment in time, but the president is also encouraging Congress to come back to Washington to permanently fix this problem and to fund and reopen the Department of Homeland Security entirely.
Thank you, Caroline. 2 questions, one on TSA, one on Iran. On TSA, for ordinary Americans watching the briefing, how long until everything goes back to normal at airports after the president's action? And then on Iran, on the time frame, President Trump initially said about 4 weeks. Secretary of State Rubio on Friday reportedly said it might be another 2 to 4. Is 2 to 4 the current ballpark that the administration is thinking?
With respect to the timeline, again, the president, commander-in-chief, the Pentagon has always stated 4 to 6 weeks estimated timeline for Operation Epic Fury.
Bulls are trying from 135 until the low of 135
so again, you do the math
breaks. The 3/3 bears are in trouble.
The Pentagon needs to fully achieve the objectives of Operation Epic Fury, which I will reiterate: destroy the Iranian Navy, destroy their ballistic missiles, dismantle their missile and drone production infrastructure, significantly weaken their proxies throughout the course of this operation, and then, of course, preventing Iran from ever obtaining a nuclear weapon. To your first question, Stephen, about TSA and airports, nothing will be truly normal again until Democrats do the right thing to fund this agency fully. Again, the president has stepped in the meantime to do what's right to end this crisis that we've had at air travel and at airports across the country in the meantime. But again, Congress needs to come back. Democrats need to fund the Department of Homeland Security so we can formally and fully get these great employees paid long into the future. Jonathan.
Thanks a lot, Caroline. 2 questions regarding the financial costs of the war. Back during the Persian Gulf War, 1990, 1991, Arab countries paid for the vast majority of the cost of the war. Kuwait, Saudi Arabia, the UAE. Who's paying for the cost of this war? Will those Arab countries step up to do just that?
Well, I think it's something the president would be quite interested in calling them to do. I won't get ahead of him on that, but certainly it's an idea that I know that he has and something that I think you'll hear more from him on.
And then secondly, the cost of diesel is averaging at $5.38 a gallon right now. What's the message from the Trump administration to truck drivers who are dealing with those high fuel costs right now?
Again, we understand, we hear you, we see you. We are fully tracking this short-term fluctuation in oil and in diesel prices, and that's why the president and the administration have continually announced robust actions to provide stability in the global energy market. As you know, political risk insurance, one of those actions, allowing countries to purchase sanctioned oil just to increase the supply. In the meantime, we've worked to release 400 billion barrels of oil and refined products as well. We issued the 60-day Jones Act waiver. All of this has, with the goal of increasing supply to create stabilization in the market in the meantime. But the overall message, as we've repeatedly stated, is, again, these are short-term actions and short-term price fluctuations for the long-term benefit of ending the threat that Iran poses to the United States of America, our troops, and our allies in the region, and ensuring that this regime can no longer control the world's free flow of energy through the Strait of Hormuz, which is something the administration continues to tackle day by day as well.
Jennifer. Just 2 questions.
Which Jennifer?
I'll go to both of them.
Go ahead.
So 2 questions, one on China and one on Iran. On China, ahead of the president's trip to Beijing, will
Bulls
there
are
be a
trying
working level
off of
meeting
135.
with
See?
Secretary Bessent,
Look at that.
Greer, et cetera?
I
Since
do
at the bottom of
expect,
134
cabinet
breaks,
officials to travel to China
the Bears are
ahead of time. I don't
pooped
have
in
a
the third
readout
bird.
on their
Small cycle.
schedules for you, but this is something we typically do with international travel, as you know. So
not saying it's gonna
I'll talk
bounce,
to
I'm just saying
the
it's
Treasury
small
Department
cycle
and the cabinet myself, and we'll get you that answer. But
That's
we
how I
do
look at
expect
things.
them to move ahead of time.
Okay, and thank you. And on Iran, if Iran is kind of cherry picking what tankers get to go through the strait now and contemplating big tolls on those tankers, is that consistent, or how is that consistent really with the president's message about really wanting the strait to be fully open? Does the administration support a regime or system
what's a
where
order for? I'm about to
Iran
order
is
some DoorDash right now. I'm
effectively
hungry.
charging tolls on these vessels to access?
That's not something we
Horatio
support, and I
said
would
Caroline,
reject that they
smile-
are cherry picking. In fact, as you know, these tankers that are moving through, the 10 that were previously announced, and now the new 20,
Wow,
the
Rick
announcement
said
of,
I'm out. I don't wanna
20
be
additional
greedy. I made
tankers, which we expect
40%
to
on
see
my
over the coming
account.
days, are a result of the direct and indirect talks that are taking place
crazy.
between the United States and Iran. So you wouldn't have seen those tankers if not for the president's diplomacy and his team engaging on this matter, which we expect that compliance moving forward. And it's, again, something that we're working on very closely. Sure. And behind the mic in the back right there, you put up your hand very excitingly. Go ahead.
Hannah from News Nation.
Thank you.
Thanks for taking my question. I have 2 for you real quick. There are reports that Republicans are weighing cuts to health care in order to make way for that $200 billion for the Pentagon and Operation Epic Fury. Is that a trade-off that President Trump supports?
I've seen these reports. I haven't spoken to the president about it, nor have I heard this being discussed in any high-level meetings here at the White House. I don't want to weigh in definitively because I just haven't heard that being discussed here in the West Wing.
And then secondly, I know President Trump says we're ahead of schedule in achieving his military objectives in Iran. He laid out that 4 to 6 week timetable for this conflict, and we're now within week 5. So how do you square kind of those two?
Well, 4 to 6 weeks estimated timeline. Again, you just said we're on day 30 of the operation. I just provided you with some of the updates from the Pentagon directly in achieving the objectives, and the military has been enormously successful. I think we should all be very proud of our armed forces for what they have done over the
logged into my
past 30
Venmo.
days. The mission
I have
will continue until the
$170
objectives are
in
achieved, and
my
that 4 to
account
6 week
for what?
timeline does remain right now. I don't have any updates for you on that.
Yeah, like others, one on TSA, one on Iran. On Iran, I know it's tough to engage in hypotheticals, but I feel like this is one that you could engage in if the president does seek.
Probably not, but
Well,
let's see.
if the president does seek, or the United States seeks
This shit's
a ground
from
war,
literally
does he
last
intend
year.
to get congressional authorization of that march?
Look, the president has been asked about boots on the ground or alleged ground operations various times. He's obviously declined to rule them out. It's the Pentagon's job to provide maximum optionality to the president.
I guess
It does not mean
135
he's made a
never
decision,
breaking,
nor
folks.
would he
Time is
ever
142.
notify the media of
140
such
magnitude
decision as
volume
not to tip off our enemy. With respect to abiding by Congress and the rule of law, that's something the administration will, of course, always do, and it's something that we have great respect for Congress. The president does with
Sparrow said,
military
"Caught the meat of the
operations.
trade,
In fact,
all you can ask for."
when-
Bro, I want to go get
prior to the
I want
launch
to
of
go
Operation
get a
Epic
barbecue.
Fury, as you know, the administration
I don't
gave
know
a
about
courtesy
steak,
notice to Congress in the
but I
beginning
mean
of
barbecue
May,
meat,
and
it's like
top-level
$35,
administration
$40
officials
anyway.
and cabinet
I'm gonna go get
secretaries have
food.
gone to Congress multiple times over the past 30 days to provide those courtesy briefings to Congress when requested.
TSA quickly, I've been asked by multiple Trump supporters that have said, given the fact that the president on that Friday gave that memorandum informing DHS to pay
Trump
TSA
supporter?
workers,
I'm an America
I know there's a lot of
supporter,
negotiations involved in a shutdown of this size. Why did the president not sooner issue that payment to TSA workers?
Well, it's because of the Democrats voting 7 times against reopening the Department of Homeland Security that we came to a place of an existential crisis. I mean, you saw the lines at various major airports across the country, American travelers really paying the price for Democrats' partisan games. And so the president worked with his legal team here at the White House and the Office of Management and Budget to find a solution to take care of the emergency that we were seeing in air travel across the country. And it's because of the president that TSA agents are being paid.
I
But
think
again,
I have some food
he's calling
downstairs,
on Congress
so
to do
I'm
the
gonna
right
run
thing, to
downstairs
come
and
back to
grab some
Washington
food
and
while
to
she
fund
talks.
and reopen the Department of
I'll
Homeland
be back
Security
in
fully.
3 minutes.
Sure.
Hi, Lindsay Ellis from the Wall Street Journal. I'm trying to
Bullish
square
cycle
the
is
four
coming through
objectives
here.
laid out by
Trap
the
at the 3-3rd
administration
bear cycle off of
with the goal
130.
of reopening fully the Strait of Hormuz. Would President Trump declare victory and wind down military operations if the four objectives are met, but still passage remains quite slow through the strait?
Look, as I've said repeatedly and as the president has laid out, the objectives of Operation Epic Fury are as follows: destroying the Iranian Navy, destroying their ballistic missiles, dismantling their defense industrial infrastructure that produces those weapons that have long threatened the United States and our allies, and then, of course, preventing Iran from ever obtaining a nuclear weapon. The full reopening of the strait is something the administration is working towards, but the core objectives of the operation have been clearly defined for the American people by the Commander-in-Chief. Garrett.
The president posted this morning about, his threat that on leaving Iran, he said we might blowing up and completely obliterating all of their electric generating plants, oil wells, Harg Island, and possibly all desalinization plants. Under international law, striking civilian infrastructure like that is generally prohibited. Why is the president threatening what would amount to potentially a war crime with the U.S. military? And how do you square that with the administration repeatedly saying that the U.S. does not target civilians?
Look, the president has made it quite clear to the Iranian regime at this moment in time, as evidenced by the statement that you just read, that their best move is to make a deal, or else the United States Armed Forces has capabilities beyond their wildest imagination, and the president is not afraid to use them. That's not what I said, Garrett. And you're saying the word potential for a reason, because I'm sure some experts are telling you that in your ear to try to ask me that question. Of course, this administration and the United States Armed Forces will always act within the confines of the law. But with respect to achieving the full objectives of Operation Epic Fury, President Trump is going to move forward unabated, and he expects the Iranian regime to make a deal with the administration.
To that end, which of those objectives would destroying a desalinization plant most help?
Haley, go ahead.
Thanks, Caroline. I want to follow up on Iran. When you're describing that the Iranians you're in contact with are being more reasonable this time around in discussions, what specifically are you hearing that is leading you to that conclusion, and how are you defining what's reasonable versus unreasonable in that regard?
I'm not going to detail the private and sensitive conversations that are taking place between the United States and Iran right now.
But generally speaking?
Generally speaking, the president gave you the answer. What we're hearing from them is more reasonable. They have agreed to some of the points the United States laid out, as the president said last night aboard Air Force One. But again, as for the specifics, as these negotiations are ongoing, we're not going to broadcast them to the world unless the president chooses to do so, which he has the full right to do as the leader of the free world.
On Cuba, the president threatened to tariff any country that would send oil to Cuba, but now the U.S. is letting this Russian tanker to Cuba. Is this a policy change, or is he willing to let more tankers into Cuba now?
This is not a policy change. There has not been a formal change in sanction policy. As the president said last night, we allowed this ship to reach Cuba in order to provide humanitarian needs to the Cuban people. These decisions are being made on a case-by-case basis. And as the administration has said, Cuba's non-functional economy cannot be fixed unless they undergo dramatic political and leadership change. But there has been no formal change with respect to sanction policy.
So you could expect more tankers to go to Cuba?
Again, these decisions are being made on a case-by-case basis right now.
Thanks, Caroline. You addressed this a little bit in the opening, but just to follow up, because Americans are sort of seeing these conflicting messages between the United States and Iran. I know the president insists that negotiations are underway. As you just mentioned, he's also said that Iran has agreed to most of the 15 points. We just heard from Iran again. They're saying no negotiations are taking place. They're calling the proposal excessive, unrealistic. So how do you square that? How do you explain that discrepancy between the two?
I think the American people are smart enough not to take the word of a terrorist regime that has chanted death to America for 47 years at their word. And I hope the journalists in this room are wise enough not to take an Iranian regime.
I don't want to call this
that
shit bullish or bearish here. I think I want to call this shit I'm hungry,
our
and I'm
values,
eating,
about
and
everyone
it's
in this room, frankly, for nearly 5 decades. So I think the American public are smart enough to understand that.
And just to follow up on the objectives, you laid them out, but I know the president has set a deadline for April 6th in just 1 week. What does the president need to see to not move forward with those strikes by April 6th?
Well, I think he said it in his Truth Social post this morning. He wants to see a deal over the next 10 days. That timeline is waning, several days left, and we'll see. I won't get ahead of it. We'll see what happens in the end of the 10-day period.
Caroline, thank you. One on Iran, one on the shutdown. The president continues to say the U.S. is in conversations with a more reasonable regime, but there are now hundreds of U.S. Special Operations Forces, including Navy SEALs and Army Rangers in the Middle East, as well as thousands of other troops already deployed. So is he trying to end or intensify the conflict?
The president is focused on achieving the objectives of Operation Epic Fury. With respect to forces that are on the ground in the Middle East, it's the job of the Pentagon to create maximum optionality for the commander-in-chief. It does not mean the president has made any additional decisions. Again, he remains focused on ensuring that the Pentagon continues to achieve the objectives of the operation that was launched 30 days ago, and we're well on our way to doing that.
So if an American sitting at home hearing him say, I want to talk,
can't ever have a fucking good street.
Seeing them send troops to that region, what are they to make of what's going on?
There's two tracks here. The president has always said that diplomacy is his #1 option and priority. Again, he tried earnestly, in good faith, to engage in diplomacy with the Iranian regime prior to this operation being launched in the first place. He wanted to strike a deal, and he sent his top negotiators to do so. They spent extensive amount of time and effort trying to strike a deal, and unfortunately, the previous regime, again, many of those leaders no longer with us here on Earth because they faced the consequences of the United States military. So if there's ever a chance for a deal, again, the president is open to listening, but it does not deter him from focusing on the military objectives that he set out 30 days ago and that our military is continuing to achieve day by day.
On the shutdown, he signed the national emergency order last Thursday, making sure TSA officers will be paid. There's still other civilian DHS employees, however, who are not being paid.
Yes.
He signed something similar to ensure they also get paid?
Look, the president will always look into ways that we can make sure that the American people are being taken care of and doing what's right by the American people. But again, it's ridiculous that the president even has to go to the length of working with the legal team and the Office of Management and Budget to identify these funds. It is the job of Congress to fund these agencies. And Democrats in Congress have voted 7 times against funding the Department of Homeland Security. Congress should come back and they should get it done. The president, again, made the decision to prevent this existential crisis we were seeing at our nation's airports across the country that was only going to get worse, and that's why he wants Congress to do his job.
Thank you, Caroline. Since you mentioned,
I'll go to you as well.
You're welcome. Since you mentioned Easter and prayers, I wanted to ask you about something the Pope said yesterday. So Pope Leo said yesterday, and I quote him, "God does not listen to the prayer of those who wage war." Can you comment on that?
I think our nation was a nation founded 250 years ago almost on Judeo-Christian values, and we've seen presidents, we've seen the leaders of the Department of War, and we've seen our troops go to prayer during the most turbulent times in our nation's history. And I don't think there's anything wrong with our military leaders or with the president calling on the American people to pray for our service members and those who are serving our country overseas. In fact, I think it's a very noble thing to do. And if you talk to many service members, they will tell you they appreciate the prayers and support from the Commander-in-Chief and from his cabinet.
Caroline, thank you. President Trump told the New York Post that a response is coming shortly to Tehran attacking Israel's largest oil refinery. Is there a timeline on that? Is that tied to the success or not of the negotiations?
I don't have any updates for you on the president's comments.
Still consider the IRGC in control of Iran.
Well, look, as Secretary Rubio said today, the leadership is very fragmented. We have really neutered their intercommunication systems, and that's part of this process of diplomacy to continue figuring out exactly who's in charge. I know they appointed a new Ayatollah, haven't seen or heard much from him. And so that's part of this diplomatic process that's underway right now. I'll take a few more. Solon.
Thank you. You listed the described humanitarian reasons for allowing that oil tanker to reach Cuba. Just to clarify, why was the administration okay with Russia sending that oil to Cuba and not other nations?
Look, again, this was a decision. It'll continue to be made on a case-by-case basis for humanitarian reasons or otherwise, but there's been no firm change in our sanctions policy.
President Sheinbaum of Mexico also said that Mexico is exploring different ways to restart some of those shipments to Cuba. Is the administration okay with that at this time?
Again, there's been no change in our sanction policy. We still reserve the right to seize vessels vessels, if it's legally applicable, that are headed towards Cuba and that violate the United States sanction policy. But of course, the president and the administration also reserve the right to waive those seizures on a case-by-case basis.
And to clarify, just any more Russian oil tankers going to be allowed to reach Cuba at this time? I know you say case by case, but for the case of Russia, is it pretty much green light right now?
No, that's not what I said. It's a case-by-case basis. Sure, Jeff, go ahead.
Switching topics, the president has always attended CPAC. He did not this year. Why did he not attend, and does he believe CPAC is becoming less relevant?
No, I don't think he believes that at all. In fact, he loves CPAC and has a very good relationship with the great people who run it, Mercedes and Matt Schlapp. It was just simply for scheduling purposes this year, with it being in Texas. It was best for the president's schedule and what he has on his plate right now not to go.
Carolina.
Michael.
Thank you, Caroline. If and when
Michael.
a deal is finalized with Iran, how does the U.S. provide protection to who it's negotiating with to ensure that they can carry out the president's peace plan?
Again, that's something I'm sure our national security team is discussing. I don't have anything for you on that today.
The ballroom. Can you tell us more about this massive military?
What do you guys think? Still bullish? Still bearish?
I cannot tell you
I
more
said what
about
I think
that,
in the
actually, as a matter of
room,
fact.
but
However, the military
fucking
is making
interest
some
in this shit right
upgrades
now,
to their
personally, for
facilities here
myself.
at the White House, and I'm not privy to provide any more details.
I'm about to
on
order
that.
food, honestly.
Go ahead. Reagan.
Thanks, Caroline. Question on the Middle East and then
About
a
orders
question on
some Mexican
Antifa. Netanyahu said Sunday that Cardinal Pizzaballa will be able to hold services for Palm Sunday in the Church of Holy Sepulchre after he was initially blocked by Israeli police. Did anyone from the administration or the president call over to Israeli officials to assist the cardinal in this?
Yes, I did speak with Secretary Rubio this morning, and we did express our concerns with Israel with respect to these holy sites being shut down. We want worshipers to be able to access these holy sites. Of course, safety is a top priority, but we understand Israel is working on those security measures to reopen the sites throughout Holy Week, and that's something that we're appreciative of.
Antifa. In Texas, 9 people have been convicted by a federal jury on domestic terrorist charges connected to Antifa. The White House has previously indicated that you guys are investigating Antifa, who's funding them, who's leading them. Can you provide an update on how that investigation
$12
is
for
going?
a bowl of
Do you
Mexican
think we're going
burrito.
to see more charges against people connected to Antifa?
Well, I do know that there was an entire task force that was set up, an interagency task force to focus on the threat of Antifa, which, as you know, Reagan, this president declared a domestic terrorist organization, rightfully, and we will continue to look into it. I don't have any updates on those specific investigations, but I'd be happy to have my team get those over to you today, as this continues to be of the utmost importance to the president and his domestic policy agenda.
Caroline, JJ. On one question on landmines, there's been some reporting that American-made landmines have been spotted on the ground in Iran. Did President Trump sign off on using U.S.-made landmines in Iran?
I don't have any comment on that report today.
Caroline, whether they're being used at all?
I don't have any comment on that.
Karen.
Two on DHS. You said that the president is encouraging Congress to come back to D.C. You also said yourself. How has he done that? Has he told leadership that they should cancel recess and come back?
He said it repeatedly. I think you recall. He said that he'll host a big Easter dinner here at the White House if Congress will come back and fight the Democrats on this issue, which we should do, because again,
Bears are
the Democrat
still
Party is in the
trying,
wrong
but
here.
the
They
volume
have
is
voted 7
so
times
small.
against funding the Department of Homeland Security, which is completely egregious with everything we have going on in the world. And these brave men and women who serve DHS deserve to get their paychecks. The president wants to see that happen, and he wants Congress to come back to get it done.
On the paychecks, Caroline.
There she goes. And here comes the chaos. Here she goes. And here comes the chaos. I ordered a fire burrito bowl. for $13 with steak. I'm on the phone. Give me 1 second. They are not answering me.
Some Republicans, including Senator Mike Lee, say reconciliation won't work to pass the Save America Act because it's not budget related. What's your response to that?
Well, they say, and they'll have to, the parliamentarians going to have to make a decision on that. But I say, end the filibuster, terminate the filibuster, just vote, and you'll get everything you want. You get
Trash. Trash news.
Now about 150, 200. Brent crude right now at 107. And what we're also seeing is Bitcoin's getting a bid. It's up 1.1% at 67,000. So there's your big picture on what's going on here. Kevin Hinks is with me, host of Fast Market here on Schwab Network. Jay Powell spoke. He talked about a dynamic and productive economy and inflation. What are your thoughts here? What do you think? What's he really trying to tell us?
Well, Jerome Powell spoke this morning at the Harvard University Principles of Economics class. Sounds like kind of a Economics 101 class that he was speaking at today. And he answered a lot of questions. Some questions he avoided, like Kevin Warsh, his views on that. But he did say, much like Stephen Myron, who spoke at the New York Stock Exchange this morning, Nicole, that the spike in crude oil is not something that should change the interest rate policy of the Fed. Remember, it was a couple weeks ago that Austin Goolsbee came out and said he couldn't rule out a Fed hike in the near future. Jerome Powell said that is not in the case. As, remember, like Stephen Myron put it, if you move interest rates higher based on something like a spike in crude oil, that could be very short term, but it's 6 to 12 months before those interest rate changes hit the market. So it's just not appropriate to use interest rates when you're talking about a geopolitical spike in crude oil. That
I either see a chop sideways or a down.
We don't know for sure, but if the war or pressure starts to dissipate,
I would not like to see that.
Could relieve. And I think bonds, the 10-year yield.
Does this shit really run into fucking close? I mean, I would like to see that too. I'm not gonna lie. I have no fucking interest right now. I low-key want things to recover.
Understood. Look, we'll wait and see. I know Warren is coming in, but the question was whether or not the Fed would raise rates by the end of the year.
Has nothing to do with what I want though.
You saw energy being inflationary.
They do whatever the hell they want to Mondays.
Your groceries are going to cost more. Everything's going to cost more, and so will that then hit GDP and they'll bring down the economy? There's so much to digest there. And then we have the Friday jobs report. Some of your thoughts there, what we're watching for that.
Yeah, I think, the first week of the month means we're going to get the JOLTS data tomorrow, ADP on Wednesday, Challenger job cut and jobless claims on Thursday, and then Friday's non-farm payrolls, where after last month's
look at the fucking SIBO
negative
madness.
92,000, they're looking for something around positive 50,000 for this month. They expect unemployment to stay right at 4.4%. Wages, the all-important inflationary data off payrolls, up 0.3 month over month. That's a tenth lower than last month, and 3.8% is what they're looking for in a year-over-year wages. That is unchanged. If you can get wages staying at that level and bring down inflation, pretty good sign for the U.S. economy when wages are outpacing inflation, Nicole.
Right, understood. And what about what we're seeing in tech? we had some high hopes for some of the tech names, but cybersecurity and the like. Your thoughts?
Depending on what part of this economy you're in, you're either having a really good day or a really bad day, right? Palo Alto Networks and CrowdStrike both higher on the day. Meta, Microsoft having a nice day. Finally,
I don't have a lot of
Microsoft
interest
is
in
having a
fucking
nice
up right
day.
now, so
Amazon, Adobe
I want to
is
just
higher
book
today,
the profit
but
that I
then
have for the day.
on the downside,
It's my
Nvidia,
mentality. I did a lot today.
AMD, Broadcom.
I did like
some
5
of the
different
stocks that
fucking
are
trades.
related to that, like CoreWeave.
2 on Core U,
Micron and
3 on
Dell
SPY in the
are all on the
morning, like
downside.
2 on
some
SPY in the
heavy
afternoon. Like,
aspects of
it's
information
fucking more than
technology,
enough that I
but
didn't
there
fuck
are
up at some
parts
point today.
of this economy that
At
look
some
like
fucking
they're
point today,
firming
I
up
didn't get fucked
and
up.
starting
So
to recover. It's an interesting day.
I don't
want to
fuck around here too much.
Whatever sector of the economy you're in is getting hit, or actually some are
Maybe
doing
I
well
was
today,
thinking
Nicole.
small, like literally 15, 10 minutes ago, but like even then it would have done jack shit, and all it would have done is made me fucking even think about something
for
like
example, on those
FOMO or some shit
cybersecurity
more. I don't
names,
even know.
CrowdStrike, Okta, Zscaler,
Just want
Cloudflare.
to drink this
Those
water
had a lot,
and
and
wait
today
and
too, a lot of positive
food
comments on the group.
sad.
But now, just tech is back out of favor today. A lot of worries, even though President Trump says he really wants to see a deal before April 6th, and that they're making progress.
You're green.
And
Why are you sad?
serious
Yeah,
talks
fuck
underway.
money.
But at the same time, there's like a lot of the talk on the other side, like we're ready to
Money's
obliterate
great. Fuck
the
money.
oil fields. So it's a little tricky,
It's the
and we'll
fucking
have to wait.
root of
I
all
mean, and that's
fucking
an
problems,
understatement.
honestly, in families.
Kevin Hanks, thank you. Let's take a look at the bigger picture. Tyler Herridge is with us, partner Vertical Research Advisory. How do you sort of navigate this kind of market, right? I mean, I know the president is really trying to put this outlook that they really want to wrap it up, but at the same time, it doesn't seem like Iran's participating as quickly to end it.
Well, that's right. It doesn't seem like there's an exact end date on the horizon, which certainly has the market worried here. Even more than the fear is the uncertainty here with everything going on right now. But as we see it, the fundamental story here has remained unchanged. This has been a headline-driven sell-off outside of the oil shock, which you just talked about.
Hell nah. Hell no. Man, bears are fucking here so easy. Like, what the
The Strait of Hormuz and Iran control of it and charging tolls. What do you think about that? Well, I have to find out if it's true. And, they're going to do whatever they have to do. We could close that up in 2 minutes. We could close that up so fast your head would spin.
Do you want to see Gulf countries that are being attacked by Iran to start to fight back?
They are fighting back. Saudi Arabia is fighting back hard. Qatar is fighting back. UAE is fighting back. Kuwait's fighting back. Bahrain is fighting back. They're all fighting back. Actually, they were surprised to be hit. I was very surprised they got hit. And once they got hit, they started fighting very well. We're very strong communications with all of those countries, and they've all been fighting. They're 100% on our side.
How do you
Welcome back. We are an hour away from the opening bell for a Monday, and we have a rally underway. Take a look at futures indicating a triple-digit move for the Dow Industrials ahead of a holiday-shortened trading week. The Dow right now up 330. That's 0.75%. The Nasdaq is up 170. That's also 0.75%. We are at the highs of the morning right now. Of course, we got jobs data out this week, and the markets are closed on Friday for Good Friday, going into the Easter holiday. Still, markets are still in correction territory. The Dow, the S&P 500, the Nasdaq down about 7% since the beginning of this Iran conflict, which started on February 28th. Meanwhile, concerns are growing over private credit. Companies are talking about defaults ticking higher, links to banks and insurance companies raising some risks. Stocks are down better than 30% over the last 3 months within that that sector. The Treasury reportedly moving to scrutinize the industry, planning talks with insurance regulators. Treasury Secretary Scott Bessent focused on risks around leverage, liquidity, and transparency. Officials aiming to contain any fallout as stress is building in the $2 trillion market for private credit. Joining me now is Macro Mavens President Stephanie Pomboy. Stephanie, good to see you. Thank you so much for being here. And you made a point the other day when we talked, and you said, look, in periods of stress, people will sell what they can sell. And that is basically what we're seeing. You're going to sell wherever you have liquidity. That's exactly what Mike Milken said to me when I spoke with him last week, chairman of the Milken Institute. Watch this. What is your take about the current worry about private credit, gates going up, investors not able to take money out? How do you see things?
If you look at the major money managers, maybe 1, 2, maybe 5% of their assets are with individuals. Most of their responsibilities are insurance companies have 20, 30, 40-year liabilities promising you. Now, what are they going to invest?
Yo, that guy, is that fucking Milkins?
They're not going to come in and out overnight. So my opinion is what you're seeing is people want liquidity now.
Savage
and whether that proves to be a good decision or not in retro. But the financial markets are strong, and overall private credit is institutional investors loaning money to companies in the United States.
That's crazy. That's Mike Milkins.
Stephanie Pomboy, your reaction and assessment of this issue.
Well, I guess I have a slightly less sanguine take on the market. I do believe that these private credit woes will continue to devolve, mostly because we
Where's
haven't seen
Dr.
any
Burry
relief
when we need him?
to suggest
Where is the
that
savior,
they would anticipate.
Dr. J. Lord Burry?
I think the
when
real
we need
issue,
him, bro.
as
Right,
you
market
talked
is
about,
freaking
is
the
that
fuck
it's
out.
so
Dr.
illiquid,
Burry needs to come out and say,
you know, a lot
just
of this money
kidding,
is
AI
held by the
inflation,
big
just
investors
kidding,
in the
I was
private credit
JK.
space, and then pensions and insurers. So that's kind of sticky money, but I think that they still need, you know, the insurers still need the money with which to make the fixed rate payments on their annuities.
We have
Pension
101
managers
people here,
still need,
folks. 73 likes.
you know, the money to pay out whatever retirees they've got that are on the books. So they do need the income stream that is not being thrown off.
God
and, you know,
bless
in desperate
American
times
patriots.
to raise liquidity, they're going to sell the liquid assets
if
first.
you love America,
and so I think, you know, there's obvious potential for the stress in private credit to spill over into the public markets. In fact, I have long argued that the public markets will be flogged for the sins of the private credit space, and you're seeing that already. Junk is an obvious concern, but the less obvious and I think much more important concern is investment
Did anyone
grade.
notice?
I think a lot of people would be surprised to learn that the investment grade
better
market, which is
without
$9
this?
trillion of the 12 trillion in
not?
total corporate debt out there, 9 trillion is investment
we had no
grade.
fucking arrow drawn, and we had no fucking
so more than
LODHOD drawn.
Triple B rated,
We just
which
fucking
means
raw
that
eyeballed
one
this shit.
downgrade
Right?
renders
The
all
real
of
watchers
that
of the
paper
real watchers
junk,
of this live
and
stream
it
probably
becomes
didn't even notice the
off-limits to
difference.
any fund
But I mean,
managers that
seriously,
have,
we didn't
you know,
even have this
quality
drawn
mandates.
today.
If you're running an investment
All we
grade
had
fund,
was
all of a
time
sudden
and
you
low
can't
day.
own
Just
5
cycles.
trillion or more than half
No
of
wind
that
direction,
market
no
if
pivot
that
point
were
drawn,
to happen.
no nothing.
So the potential here for substantial downgrades in investment grade to lead to a cascading
What are
effect
they?
in the corporate
Raw
bond
eye.
market strikes me as very real, especially as we face this maturity wall, which you and I have talked about forever. There's 1.1 trillion in paper that rolls
kids
this
are off
year
of
and
school
4
today, going to the
trillion
park. Love
in
the
paper
stream
that rolls
today.
in the
See
3
y'all
years
tomorrow.
after that. So there's no relief
Oh,
coming for these
that is
companies.
so
And again,
fire.
interest rates have remained stubbornly elevated. So I don't see what changes. And in fact, I think the stresses will continue to build here.
So the stresses in the private credit market will ripple into the public stock market, you believe, as we see commodities move higher.
When
Do you
will
still want to
Korea
own hard
recover?
assets? I mean, look where oil is this morning. It's up, but even with Brent hovering around $115 a
Never.
barrel and you know, a record
When
monthly
will
surge and
Korea recover?
crude oil
Never.
at $100, 92 cents a barrel, stocks are up. The Dow Industrial is up 346, and there's a story out of Bloomberg this morning that says that there were heavy short sales by hedge funds and disposals by systematic investors have increased the
bad.
potential for a sharp swing
oil.
higher for stocks in the event of a de-escalation in the Iran war. these hedge funds are looking like they're going to capitulate. What do you think?
Yeah, I mean, it's hard to get whipsawed with all these headlines from day to day, and that's what hedge fund guys do. You know, they try to play the tape. That's not my game. Obviously, I have a much more long-term horizon here, and the longer oil prices remain elevated, the greater the risks, obviously, not just to the stock market, but the corporate credit market as well. So I continue to be bullish on hard assets relative to paper. The one thing that I have owned, and I'm very happy to have a position in, is volatility, because volatility has, not surprisingly, picked up dramatically, and I think that will continue.
That's like some professional
so
shit,
as
dude. I'm
to
telling
the,
you, the
the
retail,
futures
most of
being
them
up
get
today,
fucking destroyed on
we'll see how
volatility.
long that lasts.
I used to
But these
be a
headwinds
volatility
between
trader
higher
back
oil
in the day,
prices and
3
higher
years ago, 4
interest
years
rates
ago.
continue to
Volatility
bluster,
trading, fucking
and
doo-doo poo-poo.
until we see relief
It's
on
for the
those
fucking,
fronts, I
it's only
continue
for
to be
fucking
cautious
institutions, honestly.
on both the outlook for equities
Volatility
and
trading is
corporate
fucking
credit,
just literally
especially.
hope trading.
So what about gold, Stephanie? I mean, do you think gold resumes its uptrend after this most recent sell-off?
Well, I certainly do.
Volatility
I mean,
is fucking hope trading until events like this happen.
Gold got thrown out as one of the more liquid assets as well in this wind down, the de-risking that we saw over the last couple of weeks. We also had the Turkish central bank dumping an enormous amount of gold as they rushed to try to shore up the Turkish lira.
They fucking make it sound like it's easy, but
no. And you're seeing gold now start to recover its footing. I mean, I think long term here, again, the outlook for gold is incredibly bullish. Central banks are accumulating it, but also we're entering a period here where I think it's just a question
I'm
of time
at a payphone trying to call home all of my change I spent,
especially in Japan. Here in the U.S., obviously,
where have the
that
times gone, baby? It's all
and I think,
wrong.
the European and British central banks will follow. So I think we're setting up for monetary stimulus, which is always super bullish for gold as well.
I know it's hard to remember.
And we had on Nikki Bowman the other day, and she said she's still expecting 3 rate cuts.
You're not here next to me.
This year.
You say it's too late to make it, but is it too late to
try?
Thanks
so much.
And in our time that you wasted, all of our bridges burned out. I've wasted my nights. You turned down the lights. Now I'm paralyzed, still stuck in the time that we called it love, but even the sun sets in paradise. I'm at a payphone trying to call home all of my change I spent on you.
Good Monday morning, everybody. Thanks so much for joining us.
All of my change I spent on
7
you.
a.m. on the button on the East Coast.
Where have the times gone, baby?
Even though
it's all wrong.
The highs of the morning, Dow Industrials up 250 points. But take a look at Brent, hovering around $115 a barrel right now, on track for a record monthly
all those
surge.
fairy tales are full of shit.
Up 2%, and crude oil at 101.65, up better than 2%. Crude is now up better than 50% this month as markets price in escalating geopolitical tensions. With the war in Iran. The national average for gasoline prices also up better than $1 in the last month. $3.99 a gallon for regular gasoline. Joining me now is S&P Global's Vice Chairman Daniel Yergin.
Try to be fucking
Dan,
dumb
great
and short
to have you back.
for
and
you
of course,
again.
you were just coming off of your wildly successful conference last week, the Sierra Energy Conference, and you did on stage 39 interviews. Among those interviews was the CEO of Chevron,
when the fuck
Mike
is this shit
Wirth.
gonna bounce?
He said that the impact of the Iranian conflict is not being fully priced into the oil market. Can you talk to us about your observations and also what Mike Wirth told you?
Yes, I think what Mike is saying, Mike is looking at the physical realities of oil, not what the price of oil going up and down on futures markets and so forth. And he's looking, like other CEOs, at what are the constraints there, what are going to be the difficulties now and in the future. And when they look at that, they say, there's more risk, and I think as a CEO, his job, as with the other CEOs, is really to be looking at what the physical risks to supply are. And they see that this is an unprecedented situation. There's never been a disruption like that, and it flows through the whole system. And Mike made that point. I think the other CEOs in their own ways also made it, that their physical risk is greater. The constraints are greater when you have a system as disruptive as this is. It's not only the volumes of oil, but it's actually all the other things around the tankers and the movements and the threats that add to the risk.
Well, it's a great point because you're seeing damage to some of their infrastructure within the Middle East. Dan, what else are your observations from your conference last week? We were all watching you on stage talk to so many people, from oil to chemical CEOs as well.
Yeah, I think what came out is that this is not something that's, even if there was peace tomorrow, the next day, this is not something that's going to be unwound quickly, that it could take 2/3 of a year, actually, one of the CEOs said, in order to fully get back to normal if things stop now. And you pointed to the destruction because, of course, the focus has been rightly on the Strait of Hormuz in the way that the Iranians are really trying to turn it into a canal that they control and that they can extract revenues and decide who goes through and who doesn't go through. But also what's been mounting is the destruction on this vast amount of infrastructure that is so critical to the world economy that the Iranians have been attacking up and down the Arab side of the Persian Gulf, and repairing that is going to take time. It's oil, it's natural gas, it's petrochemicals. The list goes on. It's things that people don't think about. Helium, which is used in manufacturing semiconductors. And another one is fertilizer. The Gulf is a major source of fertilizer, aluminum. All of those are being hit, and that means disrupting supply chains, sending prices up, and particularly right now, Maria, hitting hard at Asia, because Asia has been so dependent on oil and gas flows from the Persian Gulf. But it's going to radiate around the world, and you see that you pointed to that gasoline 1 cent less than $4 right now in the United States.
Well, I'm glad you mentioned Asia, because there are also some new rules in place in Asia. I mean, China is putting some restrictions in place as a result of this. What can you tell us on that?
Well, China has been an exporter of oil, refined products, including sending some of those refined products to California. They're now restricting their exports of oil. Other countries are saying, work at home, work only 3 days a week, leave your car at home, take public transportation. And some of the countries are really in a panicky situation. Japan gets over 90% of its oil from the Persian Gulf. It has domestic reserves, which it's strategic reserves beginning to release. But and the disruption of gas supplies is very important to the region.
Of course. Now, global shipping is obviously facing the disruption in the Strait of Hormuz after Saudi Arabia diverted a majority of crude oil shipping through the Red Sea and its Bab el-Mandeb Strait. Yemeni Houthis, however, are stepping up attacks. They have joined the fight over the weekend. This is raising more questions here. What's your take on the Houthis? They said they launched ballistic missiles at Israel and would continue operations until the strikes on Iran and the proxy militant groups such as Hezbollah in Lebanon stop, Dan. But at the same time, the Saudi pipeline that bypasses Hormuz hit 7 million barrel goal last week. So with the Strait of Hormuz effectively shut down, what's your take on the Red Sea and the threat there and that Saudi pipeline?
Well, the Saudis built that pipeline system during the Iran-Iraq war when they saw that there was, a threat to the Strait of Hormuz, and it was a very smart thing to do so that they can move $5 million a day, in addition to what they're already moving to the Red Sea, get it in tankers. But what you point out, Maria, that's the Bab el-Mandeb. That's the other strait. And that one is only 18 miles wide at its most narrow. And who controls that? The Houthis, who are the dearest and closest allies of the Iranians and most powerful in the entire world. They closed the Red Sea for about 2 years. A couple of years ago, and they could certainly do that again. They have truce with the Saudis, but that could change, and so that adds to the vulnerability and the sense of risk. To think that the world is as dependent as it is on these two very narrow straits.
Dale said when 690,
which are basically controlled
Somebody said in our main chat, SPY 600 years, SPY 600 this year, and I said when 8,000. No, I said SPX 8,000.
Severe direct disruptions as well because of this conflict. I mean, you just mentioned beyond oil. You said that the Strait blockage is hitting supplies of fertilizer and helium, which of course impacts semiconductors, agriculture. He's got the price of urea, a form of nitrogen fertilizer, up better than 50% since this conflict began.
SPX 8,000 and 7,000. SPX 8,000 when?
Take a look at that market. I see some green still there. Yeah, we've got the Dow up 200, but the Nasdaq is dead flat. Jeff Seeker with me this morning. Jeff, we've got oil this morning at $102 a barrel, and we've got gasoline at $4 a gallon. What's the effect of these high energy prices on the housing market?
Yeah, how fucking Microsoft is not popping any day is actually
high energy prices are kryptonite for the housing market. And the housing market,
I've never seen
the best way to describe the housing market,
every single morning at 9 they try to pop and they fail every single fucking day. I've never seen such a thing in my life. That's like
happening with interest rates.
That's like fucking Houdini saying some bullshit. I've never seen.
What I would say is, if you look at what we were hoping for, we were hoping for rates to come down and for mortgages to be affordable. We were also hoping for construction costs to come down. Now we get hit with this double wave of negatives, which are construction costs are going up because when oil goes up in price, everything goes up in price. And mortgage rates are not going to come down. If you look at the 10-year Treasury, we talked about the 10-year Treasury last week on the show. The 10-year Treasury, right now, mortgage rates are usually 1.5% to 2% higher than the 10-year Treasury. When the 10-year Treasury declines, yields go 69. Up, mortgage rates go up. 69. So affordability, especially for those first-time home buyers, is now an elusive dream until oil prices come down and interest rates come down.
Look at diesel. The average gallon diesel is $5.41. That is up $1.66 in a month.
Right.
That's highly inflationary.
It is, and think about the importance of diesel on trucking, because right now, in order to get real estate prices down, in order to make houses more affordable, they need to build more houses. And from the steel to the lumber, everything is shipped through trucks, and diesel fuels the trucks. So when we go to decide whether we're going to do a development deal, we look at what our overall costs, and when diesel prices are up, when oil prices are up, it affects everything. So you're not going to see, you'll see in the housing numbers, you're going to see a slowdown in construction, which is very, very negative. So we need oil prices to come down. We need interest rates to come down, because affordability is now, as I said before, an elusive dream for a lot of people.
One of these days, you'll bring us some really good news.
I hope so.
I'm waiting for.
I was thinking of that as I was talking.
I'm in $15,000 for you.
Something good.
Next week, okay?
Something good.
Thanks, Jeff.
Snap your W-2 and file your taxes 100% free.
Where's my Mexican food at, bro? I need my Mexican food. Oh, he's here. Alright, I'm about to eat. My food about to be outside. I'm about to go pick it up. I'll be back in 2 minutes. All right, I got some food.
Welcome back. Let's check crypto. Bitcoin this morning below $70,000, but up on the session. The digital asset is down about 22% from its all-time high of $126,000. Joining me now is the CEO of Ledger.
Joining me now.
Pascal, thanks very much for being here. Your reaction to the moves and what you're expecting here in this market.
Well, you know, we don't really look at the moves at Ledger. What we look at is the volume of exchange and the trends. The trend is that we're moving into a tokenized world, tokenized asset world, and humans will be moving, but also AI will be moving these tokens. And so at Ledger, we're very focused on building the security infrastructure that underlies this whole economy, making sure that you can be secure and autonomous, and also that you can control your agents.
Why is my Corgi chart fucking frozen?
The tension is between self-custody and convenience. And I want to get your take, given your own recover situation there and what institutions are doing. Pascal, do you expect all markets to be tokenized? How will this look in financial services going forward?
Yeah. Possibly. I think, you know, what Bitcoin has been and what this tokenized world is just better rails to transfer value. And so let's think about it as an upgrade in technology. And so will the financial world and will Wall Street use better technology to transfer assets? I think for sure. And, you know, it's not a question so much about, you know, self-custody versus custody is how can these assets be secure? And this is where Ledger comes in play. These are very new assets. The transaction is immutable, and so you need a new form of security around it. And that's what we're building for the consumer. And this is why you talk about self-custody. But we're also building this for financial institution, and that's Ledger Enterprise. But the idea is you need to be able to secure these assets, and when you move them, you need to be able to be autonomous and move them with the same kind of security.
But Pascal, what about these keys? I mean, should investors trust that their keys are not going to be exposed?
Well, with the right security framework, and if you have your keys in a device like this, then yes, you can trust that they will be secure. You know, security is about being battle tested, and Ledger, we have now 8+ million devices that are out there. We're securing close to 100 financial institutions, and we've been doing this for the past almost 12 years now, or 11 years. And so the proof is in the pudding. You know, security is never resting, but we've proven time over time that we are the best line of security if you want to protect digital assets.
So what do you want to say to those 100 million people who are holding keys right now in terms of where this market moves?
Well, we want to say wherever it moves, be secure. Again, movement of the market and speculation is not our play. We are about utility. If you want to use those private keys and engage with decentralized finance, or
I like your little paragraphs you type in, so it's like a look back in time.
Then you need to do it from a secure place. And you know, this is also linked to your private property with Bitcoin and those digital assets. What you have now is a possibility for private property for the individual. And we say to those 100 million individuals, you need to upgrade your security and buy a ledger.
What do you want to see in terms of the policy backdrop, Pascal? I mean, in terms of regulation here, and whether or not you're looking at governments trying to restrict
it is very important to understand what happened, right, and how, and what, you know what I mean, like what happened and what you were in, instead of looking at candles and being like bullish and bearish. It's literally, like, if you really think about it, right, there's people online on YouTube saying bullish, bearish, bullish, bearish, but if you really think about it, like, is that shit better than being happy on green and happy on red, and when the portfolio is green, oh, it's a good day, or is it really about understanding and truly fucking thinking about what happened, how happened,
what they're trying to do is to catch bad actors. And so when it comes to catching bad actors, I think Ledger is really behind this. And again, we are not in the secrecy business. We are in the security and autonomous business for good actors that wants to play, law-abiding citizens. And so I don't think any regulation is actually against us. there is only one point, which is the how do you put yield on your stable coins, and actually that is in favor of ledger. Like, why would you have to trust your stable coins through a bank to get yield on them? You can actually keep your stable coins on a ledger and have the same yields. A ledger offers exactly the same as a bank would offer you, but in a very decentralized manner by connecting you to regulated actors.
Yeah, I mean, we're trying to figure out who's winning in this back and forth as we await the Clarity Act, because banks are worried that if the crypto platforms are paying those rewards, then money is going to come out of their traditional deposit accounts. But of course, why not pay a reward if you're in a membership program? If you're talking to Coinbase, that's his argument.
Right, but again, my argument is to say, but if you hold your own money, why would you be allowed to have access to yield? And actually, you will. The bill right now, doesn't really cover what you call self-custody, but which is really digital private property. And to get yield on your digital private property is something that you'll be able to do through a ledger. So I think there is a debate today that doesn't really concern us. It's between the banks and Coinbase. We are totally for regulatory clarity. And
anybody in the world can do good when
what's
the market
happening
is
right
going
now in
up
the
or down.
US is very important for the world, because whatever
when there's truly
regulation is going to
setups
happen
going
in
on
the
and
US,
like,
that's going to be a beacon that the world is going to follow.
Absolutely.
Traders,
and Pascal, I know you recently sold $50 million
every
in a
single day.
secondary
It's not like every one day and
order.
in a
You
week,
say there's plans
one
to take the
trap
company
day
public,
out of It's not like Tuesday is a trap day. It's like Monday, Tuesday, Wednesday, Thursday, Friday, every single
and
day.
So it's not necessarily that we're going to take the company public. Actually, we have
fake
no
traders,
such an, but I am
all that
always
shit
making sure that the company can be the best it can be, and so therefore having access to private markets or public markets. That's my job, getting the company ready, and this is why we announced last week John Andrews to join us as our CFO from Circle, and also we announced that we opened our New York office. And why? Because the world of finance is happening in New York, and with this new administration and this new regulation, we hope that will pass. Everything is going to happen in New York, and New York is going to be the epicenter of crypto for the world, and so we are just getting ready.
So, I mean, that was a huge hire from Circle, Pascal. Tell us where the growth comes from at Ledger in the next 3 years right now.
Well, this is what's very exciting, because we have built a great consumer arm, and again,
last 1 month has been really a test
and right now our business is not just selling the hardware, but it's an ecosystem that you build around the hardware, and so our revenue is
made out of basically
half hardware, half software, and software revenue coming from the transactional model. But we also have a great enterprise business, and right now with everything happening in the US, what we're seeing is the enterprise business is just colossal. Every bank in America and most actually financial institutions in the world are moving towards tokenized
Wall Street
assets and
bets.
crypto assets.
This is how people
so
fucking
right now,
go
the
broke.
world
This is how
of
people
Ledger
become millionaires.
Case on point, go online, Reddit, every fucking day. I do every day. 1,000 times bigger.
We talk about Wall Street bets, and we look at online
AI
shit as a
agents
joke.
now will transact on behalf of financial institutions and on behalf of users.
Wall Street bets is the only online fucking media you can actually go on now.
Users and financial institutions will need a kill switch. We'll need something to control those AI agents, and that's going to be their Ledger.
Yeah, I mean, that gets me a little nervous with the agentic AI. You're right. You make a great point, Pascal. And I guess financial services is the industry that's really getting impacted the most by these changes.
That's correct. Yeah, massively. And look, I spent the months of March in New York, and it's just meeting after meeting, and the largest financial institutions are just moving in. I've been in the business for the past 12 years. We went from is this a test? Is this real? To now it's just the gates are completely open and a tsunami of tokens.
I literally said this shit on fucking day one. That
Pascal,
some crazy shit's gonna happen.
Watching your work, and of course Ledger. Please come back.
Big time fucking just hit it naively. They're not gonna give a shit. They're not gonna give a shit. It's like 4 fucking months ago. Shit like this has been there for months. shit. I just F11 my computer. Fuck, sorry. Yo, like, bro, you know what I'm saying? Like, the fact that we just fucking went on Wall Street bets and the first goddamn fucking thing was that tells me right now that it's been like this for 4 fucking months. It's been like this since the fucking tippity top, not fucking just now. It's been like this from the tippity fucking top. Alright, just on fucking candles alone. 700 when? Exactly. Fucking 700 when? That shit is funny as fuck.
Your loved ones deserve a secure tomorrow.
We gotta watch this one. Watch this
Partner
shit.
with experts who deliver results.
This one just came out 9 minutes ago.
At BAM Capital, we've spent over a
3 minutes to the start of trading.
20
down
trillion
up about
by
300. Nasdaq about
as the shit
about
going lower every
180.
fucking day.
That's at the open. I know how we close. Beth Kindig joins us this morning. Okay, Beth, which data tells you that Nvidia is going to be valued at $20 trillion by the year 2030? Not 10 trillion, as we've heard, but 20 trillion. What data points are you looking at to justify that?
Yes, Stuart, as you said, Jensen Huang made a comment that he sees $1 trillion in revenue from 2 generations of GPUs.
Joke.
Now, that implies $500 billion a year by 2027 on a stock that trades at 20 times forward revenue. If you do the math, we're getting there to that 10 trillion you talked about. What I'm betting is that over the next 3 years, from 2027 to 2030, that we double that. We see 1 trillion in AI revenue. Now, that's 100% growth over 3 years on a company that is growing.
This is how people get fucking thinking on XRP and Bitcoin and bullshit when they're going lower.
Which would translate to my estimate being quite conservative.
Any fucking news they
But
fucking
that would
see
take
and read
okay, let's, it goes to 20 trillion by the year 2030. 20 trillion is roughly half of the United States economy. So you're saying that one company could be valued at half the value of the U.S. economy in about 4 years' time. You say that?
Especially when you look globally. This company is powering what they call sovereign AI. That means on-premise AI servers across many, many countries. And that is why when you look at it at a global level, this company's importance cannot be overstated.
So what does if it made that 20 trillion by 2030, what does that translate to in terms of its stock price? I mean, it's at 169 now.
From where we're at today, it's roughly 5x, about 400%, 500% move over, by the end of the decade.
Are you popular for putting out that value, 20 trillion?
Stuart, I got popular by actually being on Fox News, Fox Business News, when it was at 100 billion to 200 billion, and I said it would become the world's most valuable company. That was a much harder prediction for 4,000% returns than what I'm saying today.
Well, we're glad to have you on Fox Business saying what
Welcome back. Good Monday morning, everybody. Thanks so much for joining us this morning. I'm Maria Bartiromo, and it is Monday, March 30th. It is 7 a.m. on the button on the East Coast. Oil prices are climbing once again this morning, even though stocks are at the highs of the morning. Dow Industrials up 250 points, but take a look at Brent hovering around $115 a barrel right now, on track for a record monthly surge, with Brent at 115, up 2%, and crude oil at 101.65, up better than 2%. Crude is now up better than 50% this month as markets price in escalating geopolitical tensions with the war in Iran. The national average for gasoline prices also up better than $1 in the last month. $3.99 a gallon for regular gasoline. Joining me now is S&P Global's Vice Chairman Daniel Yergin. Dan, great to have you back. And of course, you are just coming off of your wildly successful conference last week, the Sierra Energy Conference, and you did on stage 39 interviews. Among those interviews was the CEO of Chevron, Mike Wirth. He said that the impact of the Iranian conflict is not being fully priced into the oil market. Can you talk to us about your observations and also what Mike Wirth told you?
Yes, I think what Mike is saying, Mike is looking at the physical realities of oil, not what the price of oil going up and down on futures markets and so forth. And he's looking, like other CEOs, at what are the constraints there, what are going to be the difficulties now and in the future. And when they look at that, they say, there's more risk. And I think as a CEO, his job, as with the other CEOs, is really to be looking at what the physical risks to supply are. And they see that this is an unprecedented situation. There's never been a disruption like that, and it flows through the whole system. And Mike made that point. I think the other CEOs in their own ways also made it, that their physical risk is greater. The constraints are greater when you have a system as disruptive as this is. It's not only the volumes of oil, but it's actually all the other things around the tankers and the movements and the threats that add to the risk.
Well, it's a great point because you're seeing damage to some of their infrastructure within the Middle East. Dan, what else are your observations from your conference last week? We were all watching you on stage talk to so many people, from oil to chemical CEOs as well.
Yeah, I think what came out is that this is not something that's, even if there was peace tomorrow, the next day, this is not something that's going to be unwound quickly, that it could take 2/3 of a year, actually, one of the CEOs said, in order to fully get back to normal if things stop now. And you pointed to the destruction because, of course, the focus has been rightly on the Strait of Hormuz in the way that the Iranians are really trying to turn it into a canal that they control, and that they can extract revenues and decide who goes through and who doesn't go through. But also what's been mounting is the destruction on this vast amount of infrastructure that is so critical to the world economy that the Iranians have been attacking up and down the Arab side of the Persian Gulf. And repairing that is going to take time. It's oil, it's natural gas, it's petrochemicals. The list goes on. It's things that people don't think about. Helium, which is used in manufacturing semiconductors. And another one is fertilizer. The Gulf is a major source of fertilizer, aluminum. All of those are being hit, and that means disrupting supply chains, sending prices up, and particularly right now, Maria, hitting hard at Asia, because Asia has been so dependent on oil and gas flows from the Persian Gulf. But it's going to radiate around the world, and you see that you pointed to that gasoline, 1 cent less than $4 right now in the United States.
They're here, Cuzzo.
Well, I'm glad you mentioned Asia, because there are also some new rules in place in Asia. I mean, China is putting some restrictions in place as a result of this. What can you tell us on that?
Talk about Korea.
Well, China has been an exporter of oil, refined products, including sending some of those refined products to California. They're now restricting their exports of oil. Other countries are saying, work at home, work only 3 days a week, leave your car at home, take public transportation. And some of the countries are really in a panicky situation. Japan gets over 90% of its oil from the Persian Gulf. It has domestic reserves, which it's strategic reserves beginning to release. But and the disruption of gas supplies is very important to the region.
Of course. Now, global shipping is obviously facing the disruption in the Strait of Hormuz after Saudi Arabia diverted a majority of crude oil shipping through the Red Sea and its Bab el-Mandeb Strait. Yemeni Houthis, however, are stepping up attacks. They have joined the fight over the weekend. This is raising more questions here. What's your take on the Houthis? They said they launched ballistic missiles at Israel and would continue operations until the strikes on Iran and the proxy militant groups such as Hezbollah in Lebanon stop, Dan. But at the same time, the Saudi pipeline that bypasses Hormuz hit 7 million barrel goal last week.
This shit is
sad.
So
with the Strait of Hormuz effectively shut down, what's your take on the Red Sea and the threat there and that Saudi pipeline?
No fucking bounds.
Well, the Saudis built that pipeline system during the Iran-Iraq war when they saw that there was, a threat to the Strait of Hormuz, and it was a very smart thing to do so that they can move an additional 5 million barrels a day in addition to what they're already moving to the Red Sea, get it in tankers. But to what you point out, but Maria, that's the Bab el-Mandeb. That's the other strait. And that one is only 18 miles wide at its most narrow. And who controls that? The Houthis, who are the dearest and closest allies of the Iranians and most powerful in the entire world. They closed the Red Sea for about 2 years. A couple of years ago, and they could certainly do that again. They've had a truce with the Saudis, but that could change. And so that adds to the vulnerability and the sense of risk. To think that the world is as dependent as it is on these two very narrow straits, which are basically controlled by Iran or by Iran's most beloved ally.
Now, President Trump is expecting this to be temporary, but you mentioned some other markets facing severe disruptions as well because of this conflict. I mean, you just mentioned beyond oil. You said that the Strait blockage is hitting supplies of fertilizer and helium, which, of course, impacts semiconductors, agriculture, manufacturing. You've got the price of urea, a form of nitrogen fertilizer, up better than 50% since this conflict began. What did you learn about that? I know Jim Fitterly of Dow Chemical was with you, and he talked about 25% of...
Quick question. Do you actually know why the market moved today? If not, tap the link and watch the new Money Crew Daily Market Show. Now, most traders...
As you know, they've agreed to send 8 boats 2 days ago, and then they added another 2, so it was 10 boats, but they gave us, I think out of a sign of respect, 20 boats of oil, big boats of oil, going through the Hormuz Strait. And that's taking place starting tomorrow morning.
President Trump saying the U.S. is in serious discussions with what he calls a more reasonable Iran, but still making it clear. If a deal doesn't happen, the next stage won't be negotiations. It will be devastation. Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, Dagan McDowell, Brian Bremberg, and with us for the hour, Rosecliff founder and managing partner Mike Murphy. The president's demands come as U.S. forces move into position, and new reports suggest that the White House is actively weighing a military operation to physically extract or destroy Iran's enriched uranium stockpile. It's a sign that this could shift from the air to something potentially bigger. Meanwhile, Iran isn't backing down, threatening retaliation, expanding the conflict through proxy groups, even warning of new targets across the region. And right in the middle of all of it, the global economy. The market can't decide whether to price a deal in or price in a catastrophe. So it's doing a little bit of both. Oil prices, though, climbing again. Markets edging higher on hope, but one headline away from reversing because the clock for a peaceful resolution is ticking.
I feel like I should be happy today, but I realize
is insulated, it's not immune.
We are not going to feel it as much as Asia and our European allies are going to feel it because of American production, of course. But this is a crisis for Europe and for Asia right now. But the only real solution, it has nothing to do with tariffs, the only real solution is to get the Strait opened. Okay. And if we can do that this week with targeted regime actions, I think we have to take that opportunity because it's only going to get worse over time.
Okay, and we're going to watch this all play out this week, but we're looking at a market, Mike, that is trading higher in terms of stocks. There's some appetite to put risk on the table, but oil prices also climbing on this perceived escalation. The fact that the president is weighing options, but also the troops are moving over in that direction, you think to yourself, he's having these conversations, he says he's optimistic, but there are alternate plans in place if they're not successful.
For sure. And I think one of the reasons the market's moving up today is the messaging coming from President Trump. So here it is. We're negotiating. It's going well. If not, we're going to do this. So we have the date. We know the action that's going to take place. So that would, if we're forced to carry out those actions, blowing up the energy infrastructure in Iran, oil's going to go much higher, and it's going to be a short-term hit to the markets. However, if we get a deal, oil's coming a lot lower, and buying's going to come back into the market. So I think right now people are liking the messaging coming from President Trump. That's why they're willing to take some risk to go in and buy some of the market here, equities across the board. And it feels to me like right now the glass is half full, that people are believing the messaging. They're believing that there's some sort of deal out there to be had. But again, it's a short trading week. Markets are closed on Friday, so let's hope we get a deal before then, because no one's going to want to be long into a long weekend.
Okay, and crude oil, West Texas, is trading at $103 a barrel and change. That is way past my uh-oh mark, Brian. I don't like it.
Are you still uh-ohing at 103?
Yeah.
Really?
Once it crosses 100 and stays there,
okay.
I'm not really happy about that. But I'm wondering if you think that the market is getting this right, because I look at Trump's negotiating style in the past, and I also look at the people he's supposedly negotiating with, and I really have to question whether these talks can lead us somewhere positive.
I don't know. He's forcing the issue. Okay, I think oil's creeping up a little bit because clearly he's forcing the issue. He is focused on the Strait of Hormuz. He wants it open, and he's saying if you don't open it, it's going to get nasty.
I want a
okay,
2K
and
day.
that may include ground troops. That could include energy infrastructure. Carg Island could get hit hard. But, you know, what have we been saying for weeks? We wanted the president to get focused on the Strait of Hormuz. We wanted to deal with this issue. And Israel and the United States have been taking out military assets and production facilities and moving in. And he says, we're now there. Open this up or I'm going to unleash fury. It's called epic fury. I'm going to unleash fury. And markets are saying, well, that could go bad. Right? That's why I think prices are going up, because they're saying if it's not executed well, it could go bad. But if it's executed well, or if it's not executed at all,
this is like one of the best months of my life.
The leverage of the threat brings whoever these people are. Jackie, I have no idea who these people are. I don't think you can trust anyone in that regime, but I don't know who he's talking to. And if the leverage of the threat brings these people to the table, maybe you get a deal. And we just have to see, right? But markets don't know that, and they know it could get messy, and I think that risk is priced into oil right now.
But if whoever's in charge or leading right now, which is, I mean, we're not really 100% sure, because so many top leaders have been taken out, and the regime definitely has been weakened. But provided these talks, you know, are at least constructive, there are going to be certain things, Dagan, that the president asked them to do that part of me says there's no way they will do, because those are the things that have kept them in power so long. And that's what they're worried about, their power.
Right, and the regime representatives, whomever they may be, have come out and indirectly rebuffed some of what has been said publicly by the United States. The problem trying to invest into this is, do you take anyone at their word? President Trump came out this morning.
Here comes Power Hour in 3 minutes, folks.
On True Social, talking about attacking potentially power stations, oil wells, Carr Island, at possibly all the desalination water plants was also mentioned. That would be a war crime under international humanitarian law, according to the additional protocols from '77 to the Geneva Convention. So do you invest into that? To what extent? It's just
I think it's going to be fucking crazy, Bearish, at Power Hour. They're setting crazy.
For the benefit of Asia and the benefit of Iran, in terms of how much money Iran has still been able to make through oil exports. Just this morning,
time is already 3. Here they go.
Tehran
Time is already 3.
5
Here
oil
they go.
tankers at the same
I'm up
time.
$1,875 for the day now. Here they go. Holy shit, here they go.
This is also wildly enriching
this is a
Russia,
fucking crazy day.
which is providing not just intelligence to Iran, but is able to, at the moment, sell its oil on the market with a waiver from the United States at a much higher price. How do you invest into that? I can go on in terms of what there was an article that I read over the weekend that PEMCO and JP Morgan are saying the bond market is misjudging the slowdown risk, in essence, meaning that the U.S. economy, world economy is heading toward a slowdown. Yes, I do think that there is a global slowdown from the energy shock that Asia and other parts of the world are experiencing. But do you buy treasuries here? Not after the screw job, the smoke show, the shellacking that treasury investors got during COVID. from
I'm no longer Jeff. I'm BNF of Korea.
The Fed keeping short-term interest rates low, from the trillions of dollars in money that the Federal Reserve pumped into the system, and the checks that the U.S. government sent out, in essence,
I'm BNF of Korea. You hear me?
All
right, BNF of Korea.
From the almost 40% losses in longer-term treasuries they experienced over 5 years. So, no, pay me a lot higher interest rate if you want me to loan you money, Uncle Sam. And that's kind of what we're staring at here.
Yeah, and we're putting, let's see, that's the 2-year. It's almost
They call me motherfucking Dr. Burry of Korea, bro. They call me motherfucking Dr. Burry of South Korea. They call me the motherfucking the monster, the BNF.
For you, Taylor.
So,
right,
you know
BNF
what's
of Korea,
interesting?
dude.
There's a few things in.
Get the fuck out of here,
I don't know if Dagan will agree or not, but I'll throw some things out there about what I'm reading. Yields are falling today. Jay Powell was speaking, and he said the Fed doesn't have tools effectively for a supply shock. What's interesting is we talked last week that this isn't a supply shock, it's a price shock. Anyway, so I think markets are trying to figure out what he means by that. Maybe the Fed can intervene, right? If this is sort of a one-time price bump, then that hike, and I don't think that there will be a hike, right? That doesn't materialize, and that's sort of good news. I think what's also interesting is foreigners own about 30% of marketed treasuries.
Love it.
So there were some comments last week that if you have to raise money and you're a foreigner, you were trying to sell treasuries, you sell what you can to raise money. There was a report that Turkey liquidated its gold to buy its currency, to prop up its currency. So I don't want to say that what's going on in the treasury market isn't real. But I think people are selling because they can raise money to buy other things. You sell what you can in a down market. So I thought that was interesting. I think the good news from the equity side, and I come today with some positive news, is let's think we're down maybe about 10% in stock markets. We're up today, but from recent highs, it's been a drawdown, but it's only been a month. And we remember that V shape during 2020, that as fast as you go down, as fast as you can recover. So that could be a bright spot when thinking about how to invest in this market. Valuations haven't been this attractive in 6 months. So I think some people are thinking, is this a good time? I've been waiting for this moment. I've been waiting 6 months. Maybe this is the moment. So that could be another interesting. And then in terms of sentiment, the fear greed index is down to 10. The low in COVID was a 3. So you're getting like very, very fearful. And usually if that's a contrarian indicator, that's when a lot of people think it's a good time to buy, when it gets like an oversold market. So that's sort of a hodgepodge of data points. But overall, the notes I've been reading actually felt more constructive this morning. That being said, a lot of people are thinking like, you're right, when we're just trading on every single headline, and I don't know tomorrow if we escalate or de-escalate, that can be very tricky unless you're really in it for the long term.
So if it's all headlines, like trading on headlines, we talk about this all the time, it seems like a loser's game. How in the world are you going to figure that out? Aren't you just making a bet like either the world's going to get safer and more prosperous sometime or it's not, right? And if it is, you're buying into the opportunity. And if it's not, maybe you're sitting on the sidelines or something.
And I hear you about that in terms of a longer term play, but I also look at this blip, which can't be ignored, that's happening right now. And I wonder if investors look at their portfolio and they're feeling down 10%, Mike, if that creates a little bit of a pullback, because my unofficial meter is, can I get into good restaurants last minute here in New York City? And you know what? All weekend I could, and the restaurants were packed. And I'm wondering to myself, you know, you're not traveling with the TSA lines. I can't worry about, can't think it's that people are all over the place. But I do think that, you know, there has been a wealth effect as a result of this stock market and some of the other asset classes. And all of a sudden, you might see people pull back. And that
I'm having a hard time
ripple
leaving.
effect on the economy.
Low liquidity on this dumbass
but this 10% pullback, I think, more to the larger, almost 20% pullback we saw in tariffs last year. I think people are ready to put money to work because remember, the big investors, they get money from people and they have to put it to work.
Sure.
So they can't sit indefinitely and wait for a better time. So down 10%, great time to put some money to work. And also midterms, you know, the midterm year since 1950,
God, I'm fucking
there's
scared,
a drawdown in this year that we're in. And the average drawdown in midterm years since 1950 is about 15%. And if you buy the drawdown, like we're in right now,
volume is 5.
that trade has been profitable 1 year later. Every single time.
Fucking low.
So right now, yes, we need to get past what's going on in Iran, and those headlines are going to move the markets.
Who the fuck am I playing against?
The valuations that we have right now, and people,
the BNFs of Japan, BNFs of fucking South Africa.
Down 10% is a great opportunity.
How is the open interest 142? Volume 5.
That's the sound of an American.
There's motherfucking nobody.
Want to be?
There's nobody in this shit. Oh my god. There ain't nobody fucking in core you. Only the madmen do core you. I'm actually fucking playing against like fucking 10 people in the world. This is fucking crazy. I'm actually playing against 10 people.
Ron Insana, CEO of Insana Information Partners. Ron, great to have you back at the desk.
I'm actually playing against pros.
So I want to get a check-in on your market sentiment, because you were last on in December and you were a bear then, and that was before we were in a war with Iran, before oil hit $100 a barrel or more, and before some of this pressure that we've seen on tech. How are you feeling about the market now?
About as bad as I did then. I think there's a 50-50 chance that we go from correction to bear market over the course of the next couple of months, which, strictly defined would be a 20% downdraft for the major averages, maybe a little bit more, particularly if the war is not settled in relatively short order. I think if you start to see crude oil, jump to 110, 120 here in the States, or 130, 140 in London, there's also this lagged effect that the crude oil that we have that's been distributed around the world from several months ago is just reaching the shores of these destination countries, whether it's in Asia or in Europe. So this disruption that's taking place in the Gulf now won't really hit other countries for several weeks to come. So we may see supply shortages of fertilizer, of energy products, of agricultural products around the world that could create a weaker global economy and by extension hurt the United States and keep inflation above target for some time to come.
Okay, so we have seen stocks rallying a bit this morning on hopes that the war could be over soon. We have seen the NASDAQ dip into negative territory
We also
already.
hear that every Monday morning.
If the war ends tomorrow, where does the market go?
I'm trying to become a millionaire by 30.
You'd have to expect it to be a rocket shot straight higher just on a relief rally.
Is it possible?
Whether or not it
so.
eliminates all the problems that we have as a consequence of not just the war, but the lingering effects of tariffs. As you said earlier, the gutting of some of the technology stocks
who
that
the fuck is 30
are down.
right now?
And then all the alternative asset managers are down 20, 30, 40% as well. And so there are still these lingering concerns about credit quality in the private credit space. So I don't think we have resolved all the issues that this market faces. The war would be one, the biggest one, but not all of them.
So your 50-50 correction to bear market, what does that change to if the war does end quickly?
Well, I think you get a big relief rally, and then you go back and contend with a couple of other issues. Can the Federal Reserve cut interest rates even if the war comes to a swift conclusion? Will tech rebound? And will alternative asset managers who have been, preventing investors from withdrawing their funds from certain private credit vehicles, is that a canary in the coal mine that there's problems in the credit markets that haven't yet made themselves fully known in the financial system?
And we actually saw the market starting to price in the potential for a rate hike later this year versus another cut because of inflationary pressures. How damaging would that be for stocks?
A rate hike would be, listen, all bear markets start with a rate hike, right? So we've had just a garden variety correction, despite how big the headlines have been. The S&P before this morning's rally was down 9.7% from its high. The Dow, the NASDAQ, and the Russell were all down more.
The motherfucking bears are here! I'm up 2.1K for the day! In 5 minutes! Probably. The motherfucking... The honey-loving bears are here. Winnie the Pooh's fucking entire family, and his step cousin, and his step fucking sister, and the niece, the nephew, the entire bear family here. Winnie the Pooh.
more than 10%. We're negative for the year.
Bears are here.
And that's without the Federal Reserve getting less friendly. So my late friend Marty Zweig, very famous investor, said, don't fight the Fed, don't fight the tape. Tape doesn't look that great. The Fed's being called into question. If you were to get those two things combined, where the tape gets weaker and the Fed's leaning towards tighter policy, you could pretty much guarantee there'd be more downside in the stock market.
We're also hearing more about stagflation. That has entered the conversation. Is that base case now, or do you think that's still just a risk case?
No, that's been my base case since last year, since the end of last year, I think. I don't know if we talked about it in December, but it's mini stagflation. I mean, I think Jay Powell was correct in his last public comments to suggest that anything like the 1970s and early 1980s is off the table. I mean, you would need a 15-year period to build that case where inflation's 13%, unemployment's 11%, and interest rates go to 20%. That's not where we are. But you could see the labor market stagnating or weakening. You could see GDP growth slowing, and you could see inflation holding above 3.5% for some period. And it's not the worst of all worlds. 1980 was, as was the financial crisis in 2008. It's aggravating enough that consumers spend less, that policymakers are frozen because they don't know which item to focus on, a weaker economy or higher inflation, and it kind of just locks the economy into this, kind of no-go, if you will, or low higher, low fire inflation that's uncomfortably high for most, particularly middle and lower income individuals, be it a stagnant economy.
You've also been cautious on the AI build-out and the AI trade.
Oh my God!
The gutting of tech as just an overextended sector that's right-sizing, or do you look at this as the beginning of a bubble unwinding?
I ain't gonna lie, my option, my portfolio, I'm up 2.3K now, or 2.2 something. Shit. I think I'm up like 22K for the month. Like, this shit crazy. Yo! Oh my God. Alright, I'm filled on Koryu. This shit going crazy. God did. I'm filled on Koryu. 8,300. I'm out. I'm done for the day. I am out of Koryu. I just made nearly $1,000 on Koryu. I'm done. I'm out. I'm out of everything. I just booked fucking $16,000 on Koryu. Let's go! Oh my God, that's crazy. Look at the morning shit from earlier. It went so high. Let's go! Oh my God. Perfect. I don't end the day. I don't give a fuck what they do now. I don't care now. Time is 3:10. Koryu could bounce for fucking $40. I hope it does. No, it won't. But probably. That is one godly exit on Koryu. The thing literally went from 8,000 to 8.2. Like, I don't even know. It just started flying. It started flying. It just filled me in this fucking humongous candle. God damn, that's crazy on SPY. 6:30. 5:56. Oh my God. Power hour, right? 3 to 3:10. Power hour. Oh my God. Power hour. I think after today, 22K. This shit is from earlier, not settled. $21,750. Oh my god. What the fuck just happened? What the f just happened? Ay, ay, ay. I hope Corey bounces now. That's good. 310. Oh my god. Came so fucking bearish today. Market came in so bearish today. They sent it off. They literally just pushed it off the cliff. Fuck, I feel like I would have printed way more on SPY. Damn, they pushed it fucking off the cliff on SPY. Oh my god, that's crazy. Before 3, like that's the craziest part. Time is fucking 3:30, 3:15.
Hard to tell. I mean, I think we've had these SaaS apocalypse now, where software stocks, both in public and private markets, seem to be marked down rather substantially. I think what we don't know yet is whether or not any of these prominent AI companies can earn enough over time to fund the trillions of dollars they're spending on infrastructure. And if AI becomes a commodity and they don't have pricing power, and we can all buy, ChatGPT or Claude for $20 a month, is that market going to be big enough to finance what's expected to be at least a $3 trillion spend over a 5-year period? I think that's where it gets a little sticky, and I think it's still too early to tell.
Is there anything in tech that you would look at as a safe bet right now, though?
I don't, right now, I mean, certainly the valuations have come down a lot in the tech sector. In fact, the entire outperformance of the Mag 7 relative to the S&P is gone. And, we've seen Microsoft come down 26% from its highs. We've seen a lot of stocks really get taken out to the woodshed, including NVIDIA, which was the premier company in the space. We might be getting closer to a point where people can nibble safely. I wouldn't be throwing a ton of money yet at any area of the equity markets right now until we get some clarity around all the issues
like this every day.
So far.
I don't know
so if you're someone sitting here right now with money in the market, what do? Do you hold?
Like every day.
Do you trim?
Oh my God!
We've always
been like this for fucking 2 months.
It was editorial week. We've always suggested that if you're overexposed to a specific area, you reduce it back to the weighting that it's supposed to be in your portfolio, and you take all those prudent portfolio management steps to make sure that you're not, too far out on a limb with respect to either individual stocks or specific sectors. So
that's why I just wanted some people to join.
Portfolio management is always wise. if you've got 10, 15, 20 years to retirement, you continue to dollar cost average, you put the money to work. My preference, like Warren Buffett's, is for just buying index funds and not getting too cute, unless you really know, unless you're really spending time studying individual stocks and you have a complete understanding of what their business model is. For most folks who don't have the time to pay attention that way, you can go with the S&P, the Qs, the Russell, or even the international index and create a basket of those four and just keep putting the money away. Sock it away until you need it. If you need it in the short run, I'd be a little more careful and maybe buy some T-bills and
My God.
hedge just a touch.
Last time you were on with us, you actually liked international over U.S. opportunities. Does everything happening in the world and also the recessionary risk that Europe, Asia is now facing change that view?
A little bit. I mean, I think the rest of the world is still modestly outperforming the U.S., but that differential is by how much they're down versus by how much they're up. So last year, we had European and Asian markets outperformed by leaps and bounds, 2 to 3x the United States. Now we have the U.S. down on the year, and Europe and Asia are, in some instances, still in positive territory, but only by a couple percentage points. So there's still a spread, a positive spread between the rest of the world and the United States. It's just not as pronounced as it was last year.
So as I think about your sentiment at the end of last year, which felt very bearish, to now 50% chance of a bear market, I mean, that's kind of a safe,
I can get more negative if you want me to.
I'm just curious, are you a little bit, do you think that what we've seen in terms of the sell-off, we're at valuations now that maybe are more justified and there's not necessarily reason to move lower?
Well, I mean, I think there's still the risk of moving lower, but the valuation question, I guess the PE on the S&P 500 is now down below 20, which is much closer to historic average. And so it's a safer environment relative to where we've been, but we have seen an uptick in interest rates as well, even without the Fed getting involved. So as rates go up, they're down a little bit this morning, but if they do continue higher, that changes, the relative value between bonds and stocks.
So what is it that you think investors might be underestimating right now?
Well, I think private credit risk, I still think is an issue. Whether it's systemic like 2008, I don't think it's that magnitude. To me, it still seems like it may create a shock that's more like the failure of long-term capital or the Asian currency crisis, where we get a big market disruption that shakes the tree, maybe prompts the Federal Reserve to cut interest rates, and then sets the stage for another rally down the road. I'm keeping as close an eye on that as possible. It's impossible to escape the war right now as being the principal risk, both domestically and globally. I don't know if that bill means my time is up, but I think that, we're getting closer to where valuations are reasonable, but we still have these major concerns, principally first around the war, then secondly, I think, around deterioration in private credit. That's very hard to assess because it's such an opaque market, and we don't know how these loans are being valued, and we can't see through those markets to get good information about where they stand.
We had Gareth Soloway on not too long ago. He's a trader. He looks at the charts, a technical analyst, if you will, and he has a 5,600 price target for the S&P 500 by year-end. Is that about right? Is that aggressive? Is it conservative?
It's middle of the road, I think. At this juncture, if you're hovering around 6,000 and, another 400 points to the downside wouldn't be shocking. That would, again, put us in bear market territory, effectively. We've broken, in technical terms, we've broken the 200-day moving average. There's some talk about a death cross in some of the major averages, which historically has led to further downside activity. It's not always a reliable indicator, but you've seen also what I would call a gutting of the market, right? You see the technology stocks get killed. You see the Mag 7 have lost their outperformance. You've seen alternative asset managers and financial stocks also get hit. And usually when you see that type of internal deterioration, the averages are more likely to catch down to those sectors than the sectors are to catch up to the averages. So you've had big declines in a lot of different assets and a lot of different asset classes. Bitcoin is down.
But is there any reason to be bullish right now? What would flip your outlook?
The war coming to a very swift conclusion and oil flowing again. fertilizer flowing again, some measure of, I guess, stability in the Middle East that would not guarantee, because that's impossible, but would make more likely a much calmer environment. That would allow for a big relief rally. But yeah, there are, look, we haven't had a bear market in quite some time, you know, and we've also had a 4-year bull run, so it's not unusual that we're seeing downside. In fact, the average annual decline peak to trough is 14%.
Let's do a poll, folks. This is the last poll of the day. In your personal opinion, we are in a bear market. In your opinion, we are in a bull market, right? All right. Let's do the poll. Why do I not want this shit to be in a bear market? But yeah.
So we haven't even hit that, just on, you know, as a matter of course. It's not the end of the world. I don't think that's what's happening. But, you know, I think people have to recognize that this type of volatility is normal. You know, over the course of my career, I've gotten these questions, you know, you think there'll be more volatility in the stock market? And the answer is always yes. I mean, you know, we've always had it. I started in 1984, and there was tons of volatility then. There's tons of volatility now, and it's just a feature of the market. It's not a bug.
Okay, well, we're going to transition to our rapid fire game of this or that, pin you down for some quick answers, quick questions here. You ready?
Okay.
More likely, correction or bear market?
Bear market.
Should I be the chicken
Buy
little?
dip or wait for lower?
Should I be the chicken little?
Rotation or real de-risking?
Real de-risking.
Should I go
Small
long
caps,
2 weeks
catch-up
out?
trade or value trap?
Value
Should
trap.
I be
Fed's next
crazy?
move, hike or cut?
Should I be
Neither.
fucking crazy?
Stay on hold. Inflation,
There's so many
temporary
fucking bears.
spike
1,
or
2,
persistent
3,
problem?
4. 8 people said bear market.
Which are
No
we
one said
closer
bull
to,
market.
stagflation or recession?
By definition, they're partly the same thing. So, but I'm still in the stagflation camp.
Oil, stabilizing or heading higher?
Heading higher.
Geopolitics, market noise or real economic risk?
Real
Fuck
economic
it.
risk.
Iran war, priced in or just getting started?
Fuck it.
That's a coin toss.
Fuck it. Chicken little.
I'm going to say just getting started because I think that there are some risks that have not yet been realized, particularly if we put troops on the ground.
They call
Dollar,
me chicken
safe
little.
haven or problem asset?
Neither.
Better place to hide, gold or treasuries?
Treasuries. Short-term treasuries.
AI build-out, sustainable or overextended?
Slightly overextended.
AI, opportunity or bubble?
Both.
AI winner AI winner you'd invest in regardless.
Anthropic.
Stay invested or raise cash?
Raise a little cash.
U.S. markets or international?
Still international.
Credit markets, stable or starting to crack?
Starting to crack.
Private credit, opportunity or risk?
Risk.
One word
Let me
to
do the poll,
describe the
guys.
market right now.
Let me do the poll. It's not bringing my chat down.
Unstable.
One word to describe how you're feeling about the market this year.
Unstable.
We'll leave it there. Ron Insana. He is CEO of Insana Information Partners. Always a pleasure. Thanks so much.
Good to see you.
Oh, God. Oh, God. This is fucked. Nah, I'm kidding. I want there to be a small time bounce. I think that's logical, but like no matter what
the American Express Platinum.
do, what it could do.
Homo.
We are very oversold, so why not? But how is it actually possible the market keep going down every fucking minute? That's fucking crazy. I mean, there must be fucking so many people on every single candle trying to fucking long, so just imagine. God. I'm bullish, bearish, down.
Dissenting in favor of bigger cuts at recent meetings. Fed Governor Stephen Myron joins us now for a CNBC exclusive. Welcome. Good to have you.
Good morning. Thanks for having me back.
Has your view changed at all as a result of the rising oil prices and diesel prices and fertilizer prices about the outlook for inflation?
So traditionally, the Federal Reserve looks through an oil price shock. Now, the reason why we do that is because oil price shocks tend to boost the price level immediately. They flow through into prices very quickly.
How the
Gas
fuck
prices
does
move higher.
how does
monetary
prices
policy
just go
only hits
lower
the
and lower
economy
and
with
lower?
lags. It doesn't. If you change monetary policy today, it doesn't
market
affect
is hard as
economic
shit to
growth.
go
It doesn't affect unemployment or inflation for 12 to 18 months from now. Right?
Look how
So
fast.
if the oil price boosts the price level today through the gasoline price and other things, but not 12 to 18 months from now, monetary policy simply cannot affect that. Now, the way that wouldn't work, that this traditional logic the Federal Reserve has always observed, the way that this logic would not work is in one of two scenarios. One is you get a price-wage spiral, where wages start moving higher and then prices start moving higher too. There's not really any evidence of that thus far at all. And with the labor market on a gradual cooling trend for the last 3 years, that seems extremely unlikely. The other way that you would get the oil price shock boosting inflation 12 to 18 months out is if inflation expectations started to get affected. And when you look at the inflation expectations, you don't really see that. So I like to look at CPI swaps.
Don't get
CPI
scared. We're
swaps
going to do
for
a
the next
measured
year
move.
moved higher because prices move higher immediately, exactly as you said.
far this
When
shit
you look
goes.
at forward rates, when you look at inflation expectations, 1 year forward, 1 year, 2 years forward, 1 year inflation, 3 years forward, they haven't budged. And when you look at medium to long-term inflation expectations, like 5 years forward, they've actually been coming down since this entire thing started. So in order to get an inflation shock from oil that the Federal Reserve can affect, it needs to affect inflation beyond a 1 year horizon, and there's thus far no evidence
All of that is true, but you know, there was evidence, first of all, that the Fed's inflation target was higher. I mean, that inflation was higher than the Fed's target going into this, right? And that what this will do is, even if it's in the short term, will have an impact on headline CPI, on PCE. You know, the longer this lasts, and it's now, we're 5 weeks in, and there are concerns that it will have a bigger impact on underlying inflation, even if you're not seeing it necessarily in those expectations or wages.
Yeah, so if I saw one of those two things happen, if I saw a wage price spiral or I saw evidence that inflation expectations were starting to pick up, then I would get worried about it. But as I said, there's no evidence of it thus far. And you can move the monetary policy rate all you want, you know, today, tomorrow, but it's not going to affect inflation the next couple of months, right? It can only affect inflation a year to a year and a half out. And unless you start to get evidence that inflation a year out is moving higher.
So is that just
monetary
something
policy just
your colleagues don't agree with you on? Because most of the other Fed members and officials that have been speaking in the last few weeks have said, okay, we're good to hold and see what happens with inflation here as a result of
this
oil.
is fucked. My sense is that a lot of those people had that view before the Iran war broke out. I don't have a real sense that anyone is sort of really moving their position as a result of this, and maybe they'll tell you otherwise. I can only speak for myself. But what I just outlined is traditional Federal Reserve Federal Reserve logic and way of treating
the market has completely moved as a result of this war. It's taken out all the price cuts and now started to, I mean, we're not fully there, but increase odds of a hike.
Absolutely. Look, we're in the middle of a war, right? And if there's ever a time when markets are going to be volatile, it's in the middle of a war. So in a time like this, I'm disinclined to sort of disinclined to read too much into that. But you know, markets will do what markets do.
Would you argue it's made your ability to persuade would-be fellow dissenters, made it tougher?
You know, I don't think that the Iran war has really done that. But you know, look, I think that the labor market was on a gradual cooling trend for 3 years running into this. I don't think that there's anything that I've seen to convince me that that trend has changed, and I doubt that others will come away from what's happening in the Iran war and have a different view than that, right? If you think about it, higher oil prices, higher gas prices, they suck money out of expenditures that consumers would be making on other products, and so it leads to lower overall aggregate aggregate demand. And in a time when the labor market was running in the wrong direction from the Fed's mandate to begin with, that makes me a little bit more concerned about downsides to the labor market. And it is the type of thing that I think the Federal Reserve can accommodate.
So you're more concerned about weaker growth and higher unemployment than inflation, clearly. And it feels like that's a reverse of most of the other folks at the Fed. Fair?
Well, I mean, I can't speak for the others. I can only speak for myself. But what's happened?
That was Powell's message at the last meeting, really, is inflationary risks are rising, unemployment is kind of stable.
What's happened has made me more concerned about that. And as I said before, I just gave you what would make me more concerned about inflation. It's seeing inflation expectations pick up more than a year out. It's seeing wages pick up in a way that is feeding a wage price spiral and not driven by productivity gains. Right? Wage growth has been coming down even with high productivity growth. Right? That tells you that the Fed is holding back labor demand in a way that I'm not sure that I don't think is appropriate.
So how much easier should the Fed be at this point?
Well, I think that at the moment, I think that we could be about a point easier, gradually done over the course of a year.
So you'd like to see now 25 basis point cuts?
That's what I voted for the last two meetings, 25 basis point cuts.
I'm Mike McNerney, equity investment strategist.
$335. Temptation. $336. Bouncing from 335. That's a crazy candle.
Today's industries are evolving fast. Comcast Business keeps you in step, powering over 90% of the Fortune 500 and millions of small businesses, just like hers. No one does business like Comcast Business.
Welcome back. Anthropic reportedly testing a powerful new AI model with more advanced cybersecurity capabilities. That news hitting the cybersecurity stocks last week. Seema Modi has the details in today's Tech Check. Hey, Seema.
Hey, Leslie, and there's a key distinction here. This is Anthropic's latest model, rumored to debut in April, and the expectation is that it will be more powerful and robust in nature, and according to reports, will lower the barrier, possibly to bad actors. Now, the CEOs of the world's largest cyber companies are calling on AI labs to be more responsible. Palo Alto Network CEO Nikesh Arora writing in a blog post this morning that a single bad actor will now be able to run campaigns that once required entire teams. Every desktop, he says, now effectively behaves like a server and is likely to have unsupervised AI tools operating near sensitive systems. The attack surface keeps growing, mostly unnoticed. Arora, who bought $10 million in Palo Alto stock last Friday, is calling on OpenAI and Anthropic to release these capabilities in a responsible fashion while ensuring the defenders have been consulted. The key question, Leslie, now for investors is if the large language models continue to enhance their AI capabilities and build offerings that are competitive to the software and cybersecurity vendors, will they replace these companies or they actually increase the total addressable market? Analysts at Wolf weighing in on this whole conversation, they think this only leads to more spending on cybersecurity. They're actually upgrading shares of CrowdStrike to $450 a share.
Go Korea, go Korea, go Korea.
Let's take a look at the bigger picture. Tyler Herridge is with us, partner Vertical Research Advisory. You know, how do you sort of navigate this kind of market, right? I mean, I know the president is really trying to put this outlook that they really want to wrap it up, but at the same time, it doesn't seem like Iran's participating as quickly to end it.
Well, that's right. It doesn't seem like there's an exact end date on the horizon, which certainly has the market worried here. Even more than the fear is the uncertainty here with everything going on right now. But as we see it, the fundamental story here has remained unchanged. This has been a headline-driven sell-off outside of the oil shock, which you just talked about with Kevin as well. But if you look forward towards the end of the year, you're seeing oil futures coming in at much better levels than they're at today. So once we can put this behind us, it should be off to the races for our market because nothing else has changed here again. To us, from where we're sitting, this has been a headline-driven sell-off. It's created an incredible amount of fear out there from individual investors all the way up. And that's usually around the time when you see a bottom. Now, bottoms are messy, but so far, this really hadn't been outside of the realm of normality. We get big pullbacks like this typically in midterm years, and on average, the pullback is 16%, but 1 year later, higher every time for the S&P 500. So we're looking at this as a buying opportunity, and the more fear that we see as contrarians, the more bullish that we get.
And in the meantime, are you worried about inflation? I mean, I'm reading here, JetBlue Airways raises the bag fees as fuel prices soared. This is according to one of the media outlets. Look, it looks like everything is going to be raised. I was hearing a story today from China that the paddle rackets are going to be, increased for pickleball. Just PVC, polyester, plastic, everything is going up because of the oil situation. Do you find that you're more worried about inflation or labor?
Well, we definitely want to see job growth start to increase. We've seen it from the right places, but definitely a little bit on the weaker side than we would like. As far as inflation goes, I get that the oil shock will definitely send some shockwaves through the system, whether that's on food for transportation costs, airlines, as you mentioned before. But we do see it as a short-term shock. Inflation, in our view, we're not going back to 2022 where we saw massive inflation. So in our view from there, it is a rearview mirror topic, and going forward, we've called this the innovation revolution, and we think that innovation drives deflation ultimately. So in the short term, could we see some spikes in inflation? Absolutely. It's never a straight line down. But over the medium to long term, we remain confident that inflation will remain subdued and could even surprise some people in the coming years.
And I think about, is there opportunity? When you think about this kind of sell-off historically, maybe it doesn't match others historically exactly. However, it is 5 weeks of selling. The major averages, for all intents and purposes, without the S&P just ever so slightly, are all in correction territory, including the Russell, the Dow Jones Transport, the Dow Jones Industrial Average, the NASDAQ, all 10% lower, right? Is there buying opportunity? Because we think about the innovation, the revolution, the AI world. Where's the opportunity then?
Well, we see it in a lot of areas. It definitely is going to affect more sectors than many people imagine. It could be from energy to tech to transportation. But in the shorter term here, after the pullback, like we've seen, we do see a lot of opportunity out there. We do continue to like tech, semiconductors. NVIDIA is still one of our favorites. But as far as tech goes, our #1 stock to own for the innovation revolution is still Tesla. There are multiple companies inside of Tesla that could catch a $1 trillion valuation today. So we think it's really still
Tesla
early
deduction
innings for
bot.
Tesla. There's so many exciting stories there, but there's also opportunity in the commodities market beyond oil. Gold and the gold miners. We're big fans of those as well. Hopefully we can talk about that a little more in a second, but they have pulled back significantly as well. So for stocks like Tesla or NVIDIA, though, in the tech sector, or your favorite gold miner stocks, we're looking at this as a great opportunity to monthly dollar cost average into our favorite positions.
Yeah, let's talk about some of your favorite positions as you talk about some buying opportunity. I see Snowline Gold there. That's a name you like, right?
Yes, especially with gold on the tear it's been. I know it's come down over $1,000 an ounce from the all-time highs. That's anytime you hear a stat like that, it's a jaw-dropping number. But it's important to remember, just 2.5 years ago, gold was below $2,000 an ounce. And for the gold miners, they were priced for gold, and the break-even prices were priced for gold at $2,000 an ounce, or potentially even below. So Snowline Gold here is one of our favorites in the junior miner space. Fantastic financials, fantastic team as well. That's one thing we look for in a company like this, fantastic management. But just a few years ago, most researchers, analysts, brokers wouldn't touch gold miners with a 10-foot pole. But in the last year now, we broke out of the 14-year essentially bear market. Gold miners peaked in 2011 and didn't hit another all-time high until last year. So we think that there is a massive repricing underway in this group, and there's still a ton of action to the upside.
And so you also have some of the Mag 7 names on here. You have Tesla and NVIDIA. Tell me about each one. First, Tesla.
Yes, so again, we have called this our #1 stock to own for
Mr.
the innovation
Dunk said,
revolution.
"Hey guys, what happened to SPY
a few years ago, everyone thought that this was a car company, and then they started to catch on. All right, this is more than a car company; it's a tech company, and it deserves a higher valuation. But what happens beyond that, most people forget about, whether it's battery storage, Optimus, which of course isn't on the market yet, but is going to be a massive product launch. When full self-driving rolls out as well. I'm here in Austin, Texas, so love seeing the cybercabs on the road. We want to see way more of that. But also this big, back to the semis, this big announcement last week with SpaceX and AI partnership on the Terafab. So again, there's multiple companies inside of this. We didn't even talk about solar power or other areas too that have massive opportunities. So we think that Tesla is on the road to a $10 trillion valuation, and we're in the process of raising those price targets.
Understood. I mean, when you think about NVIDIA, why NVIDIA here? I mean, I was just reading how Meta maybe has a lot of agentic AI that people don't realize. Why does NVIDIA seem like still the AI revolution leader? Is that how you feel about the company?
Yes, I think there's so much room for many players in this space. So we are going to see, kind of the bespoke or boutique style chips like Tesla's doing with Terafab or Google with their TPUs. NVIDIA is the leader in general processing. So many different functionalities for their chips at the end of the day, which keeps them in that leadership role. They've got a great vision, another great leadership team there, and they are the leader in this space. So oftentimes you want to own the leader. But again, there's so much opportunity in the semiconductor space right now, especially after a pullback like this. When we do resume the move higher, we want to see, again, tech leading, and specifically the semis leading tech. When it comes to the Mag 7 as well, really they've been the lag 7 over the last few months, despite phenomenal
Does anybody
Q4
know how to make fried
earnings.
Oreos?
So we think it's only a matter of time until they resume their leadership role as well, and it really helps propel our major indexes to all-time highs once again.
Tyler Hurridge, partner, Vertical Research Advisory. Tyler, thank you so much.
Make fried Oreos by dipping fried Oreos into pancake batter and deep frying. How the f do I do that? Package of Oreos. Pancake mix. Large egg. Milk.
It's time now for the big picture, so let's welcome in Colin Martin, Head of Fixed Income Research and Strategy, Schwab Center for Financial Research. Okay, Colin, so yields pushing higher across the board.
I'm about to go eat fucking motherfucking 20 Oreos for dinner.
Last week, it started to come off a bit though in the Friday afternoon session, and we've got the 2s, the 10s, the 30s all pulling back. So we've seen some buying this morning as well. What's changed?
I wouldn't say much changed. I think it's more important to focus on kind of the two risks here. What we saw initially over the past few weeks is yields rise pretty sharply based on the oil supply shock and the likely increase that it'll do to inflation. So we've seen kind of a reshifting in Fed expectations and higher long-term yields. But we're also worried about the potential negative consequences. Now we thought the economy was in pretty good shape before the conflict began, so there could be some sort of buffer to kind of absorb the increase in oil prices and what we as consumers are seeing at the pump. But there are negative consequences from war, so I think maybe it's starting to shift that way. We saw that with the stock market decline on Friday, so I think that's what's pulling down yields as well, and that's a challenge in, I won't call it a stagflationary environment because it's still very early and that has very negative connotations. But when you have low growth but also high inflation, it's a challenge for bond investors and treasury investors. So I think what we're seeing is kind of a reversal of the supply shock driven inflation increase, yield increase, and now maybe focusing on the potential negative consequences to economic growth.
Okay, and obviously there's a big debate going on about that, isn't there, Colin? Because as I was speaking to Barry about, I mean, a lot of the conversation this morning seems to be around the inflation shock versus the growth shock. And I mean, does the Fed have to hike to create some sort of demand destruction in the face of those higher prices, or does it do it itself somewhat with the deterioration of the growth? So where does that leave the Fed then, in your perspective?
I think it leaves the Fed on hold for an extended period of time. We don't think that the Fed needs to do much right now because the markets are doing their job for them. We're seeing an increase in yields across the curve that raises borrowing costs. It tightens financial conditions. We're seeing that with credit spreads. We're seeing that in a lot of indicators out there that we are seeing tighter financial conditions. So the markets are doing the Fed's job for them. If we look at where we are today, and given that it is more of a supply shock versus something that the Fed can impact from a demand side of the equation, we're in a very different situation than we were 4 years ago back in 2022. I mean, I think that's pretty obvious. No one's really comparing the two situations, but we had inflation back then that was very high. We saw a stronger labor market, and consumer sentiment was a little bit better. And when we look today, inflation's not as high as it was back then. The labor market is more stable and showing some signs of weakness, and sentiment is down compared to what it was 4 years ago. So I think there are risks to the Fed hiking into this sort of environment that maybe it results in even more negative consequences than what might happen if they were to kind of stand still.
Okay. And so what data prints are you looking out for this week? Because I know there's been a lot of attention on the input prices, the prices paid in that ISM manufacturing, just for an indication of how that's starting to feed through, particularly at the wholesale level. Then obviously the jobs on Friday during a market holiday. What are you going to be looking out specifically?
I think the jobs data will be very important, but we'll take it with a grain of salt because of the reporting period. It's not really, it wouldn't have been, the war wouldn't have been in effect for a very long time when we got that data. So we'll take that with somewhat of a grain of salt, but it still is important. When we look at what the Fed outlook is and what the trajectory for the economy is, and the labor market is a key input there. So we're going to be looking for signs for some stability, hopefully. And that's what the markets and the consensus expectations are pricing in right now. The consensus estimate is for the unemployment rate to hold steady at 4.4%. That'd be a good thing. We don't want to see it keep increasing. And I think the consensus estimate for the monthly payroll gains is around 60,000. We're hoping for, it to at least meet that or maybe a positive surprise because we got a pretty negative surprise over the past month. So we're going to be paying attention there. But Sam, you mentioned ISM manufacturing. That will be important because we'll get to see how businesses are thinking about everything that's going on. Is it impacting their hiring plans? Is it impacting their prices, what they're paying or what they're receiving? So we're going to be digging into the details there because these are for March. So we're going to get the impact of the conflict and the war and see how that is feeding into business sentiment.
Let's see. I'll see you guys tomorrow.
I know that you said that it's a really complicated time, obviously, to be investing, and we've seen the 640 portfolio has been a bit of a tricky one, particularly this month. I was just looking at the flow of funds last week as well, particularly when you look at the long end, the biggest ever outflow for bonds since March 2020. I'm just wondering, exactly what you're saying to clients right now about the situation, given, of course, you have the Fed, which is got its hands tied because of a dual mandate versus some other more hawkish-sounding central banks around the world, like the BOE and the ECB at the moment, which is an area where you continue to see those higher yields on the long end. Japan, what was it, the JGB 10-year overnight, like up the highest since, what, 30 years almost?
Yeah, it's a challenge for investors. When you hold fixed income investments, especially high quality fixed income investments like U.S. Treasuries or even government bonds from other developed market countries, you're usually looking for stability, and we haven't really seen that. With the increase in yields, not just in the U.S., but pretty much across the globe, that's pulled the values of most government bond yields lower. But it's important to point out that when you hold bonds, prices are going to fluctuate, but most of the income you get from bonds is from the income paid, the income you receive as an investor, and it takes time to earn that. So yes, the 60-40 is not looking great right now, mainly because both stocks and bonds are down over the past month. But when you own bonds and hold bonds, you want to make sure you're holding them for a long enough time frame to earn that income and help offset the potential price fluctuations. I'd also add that the decline we've seen in bond values, while still a decline, relatively small for now. From year to date, we're looking at total returns, -1% to -2% for most high-quality bond investments. So I think perspective is important when we talk about investments being down. Bond investments are still just down a little bit so far this year.
Okay, good stuff. Well, Martin, always appreciate it. Thanks so much for joining us today. That is the head of fixed income research and strategy, Schwab's head of financial research there.
One more wouldn't hurt. I'm gonna go stress sleep.
Welcome back to the opening bell. We're getting ready for the trading day. Special guest with us, Kevin.
Housing shit.
It's time now for the big picture, so let's welcome in Colin Martin, head of fixed income research and strategy, Schwab's head of financial research. Okay, Colin, so yields pushing higher across the board last week. It started to come off a bit, though, in the Friday afternoon session, and we've got the 2s, the 10s, the 30s all pulling back. So we've seen some buying this morning as well. What's changed?
Bye-bye.
I wouldn't say much changed. I think it's more important to focus on kind of the two risks here. What we saw initially over the past few weeks is yields rise pretty sharply based on the oil supply shock and the likely increase that it'll do to inflation. So we've seen kind of a reshifting in Fed expectations and higher long-term yields. But we're also worried about the potential negative consequences. Now we thought the economy was in pretty good shape before the conflict began, so there could be some sort of buffer to kind of absorb the increase in oil prices and what we as consumers are seeing at the pump. But there are negative consequences from war, so I think maybe it's starting to shift that way. We saw that with the stock market decline on Friday. So I think that's what's pulling down yields as well. And that's a challenge in, I won't call it a stagflationary environment because it's still very early and that has very negative connotations. But when you have low growth but also high inflation, it's a challenge for bond investors and treasury investors. So I think what we're seeing is kind of a reversal of the supply shock driven inflation increase, yield increase, and now maybe focusing on the potential negative consequences to economic growth.
Okay, and obviously there's a big debate going on about that, isn't there, Colin? Because as I was speaking to Barry about, I mean, a lot of the conversation this morning seems to be around the inflation shock versus the growth shock. And I mean, does the Fed have to hike to create some sort of demand destruction in the face of those higher prices, or does it do it itself somewhat with the deterioration of the growth? So where does that leave the Fed then, in your perspective?
I think it leaves the Fed on hold for an extended period of time. We don't think that the Fed needs to do much right now because the markets are doing their job for them. We're seeing an increase in yields across the curve that raises borrowing costs. It tightens financial conditions. We're seeing that with credit spreads. We're seeing that in a lot of indicators out there that we are seeing tighter financial conditions. So the markets are doing the Fed's job for them. If we look at where we are today, and given that it is more of a supply shock versus something that the Fed can impact from the demand side of the equation, we're in a very different situation than we were 4 years ago back in 2022. I mean, I think that's pretty obvious. No one's really comparing the two situations, but we had inflation back then that was very high. We saw a stronger labor market and consumer sentiment was a little bit better. And when we look today, inflation's not as high as it was back then. The labor market is more stable and showing some signs of weakness, and sentiment is down compared to what it was 4 years ago. So I think there are risks to the Fed hiking into this sort of environment that maybe it results in even more negative consequences than what might happen if they were to kind of stand still.
Okay. And so what data prints are you looking out for this week? Because I know there's been a lot of attention on the input prices, the prices paid in that ISM manufacturing, just for an indication of how that's starting to feed through, particularly at the wholesale level. Then obviously the jobs on Friday during a market holiday. What are you going to be looking out specifically?
I think the jobs data will be very important, but we'll take it with a grain of salt because of the reporting period. It's not really, it wouldn't have been, the war wouldn't have been in effect for a very long time when we got that data. So we'll take that with somewhat of a grain of salt, but it still is important. When we look at what the Fed outlook is and what the trajectory for the economy is, and the labor market is a key input there. So we're going to be looking for signs for some stability, hopefully. I mean, that's what the markets and the consensus expectations are pricing in right now. The consensus estimate is for the unemployment rate to hold steady at 4.4%. That'd be a good thing. We don't want to see it keep increasing. And I think the consensus estimate for the monthly payroll gains is around 60,000. We're hoping for it to at least meet that, or maybe a positive surprise, because we got a pretty negative surprise over the past month. So we're going to be paying attention there. But Sam, you mentioned ISM manufacturing. That will be important because we'll get to see how businesses are thinking about everything that's going on. Is it impacting their hiring plans? Is it impacting their prices, what they're paying or what they're receiving? So we're going to be digging into the details there because these are for March. So we're going to get the impact of the conflict and the war and see how that is feeding into business sentiment.
I know that you said that it's a really complicated time, obviously, to be investing, and we've seen the 640 portfolio has been a bit of a tricky one, particularly this month. I was just looking at the flow of funds last week as well, particularly when you look at the long end, the biggest ever outflow for bonds since March 2020. I'm just wondering, exactly what you're saying to clients right now about the situation, given, of course, you have the Fed, which is got its hands tied because of a dual mandate versus some other more hawkish-sounding central banks around the world, like the BOE and the ECB at the moment, which is an area where you continue to see those higher yields on the long end. Japan, what was it, the JGB 10-year overnight, like up the highest since, what, 30 years almost?
Yeah, this is a challenge for investors. You know, when you hold fixed income investments, especially high quality fixed income investments like U.S. Treasuries or even government bonds from other developed market countries, you're usually looking for stability, and we haven't really seen that. With the increase in yields, not just in the U.S. but pretty much across the globe, that's pulled the values of most government bond yields lower. But it's important to point out that when you hold bonds, you know, prices are going to fluctuate, but most of the income you get from bonds is from the income paid, the income you receive as an investor, and it takes time to earn that. So yes, the 60-40 is not looking great right now, mainly because both stocks and bonds are down over the past month. But when you own bonds and hold bonds, you want to make sure you're holding them for a long enough time frame to earn that income and help offset the potential price fluctuations. I'd also add that, you know, the decline we've seen in bond values, while still a decline, relatively small for now. You know, from year to date, we're looking at total returns, you know, -1% to -2% for most high quality bond investments. So I think perspective is important when we talk about investments being down. Bond investments are still just down a little bit so far this year.
Okay, good stuff, Colin Martin. Always appreciate it. Thanks so much for joining us today. That is the head of fixed income research and strategy, Schwab's head of financial research there.
Alrighty, folks. Have a good day. Thank you. Bye. Why, Tyler? Aren't you in the alert room? You saw it. Alright, bye guys. Yeah.